Coming to you from the CNBC-TV18 News studios, I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning, folks. I guess that's a critical question, right, Prashant? That after that 5% massive cut, I think it was the biggest slide in some 2 years. I mean, the weekly slide. Whether now we are due for a bounce back, but just the ferocity of the selling, I mean, from the FI fraternity, that's something I guess. Maybe that was the element of, complacency was a word a lot of our guests were using last week as well, and maybe that was it. That we didn't realize that when FI selling happens in this measure, it's going to hurt.
Well, that's right? The market surprised us on the upside, the way we moved up. And then, in fact, the reverse happened of late. I guess from a longer-term perspective, you need to participate, and these opportunities will prove to be buying opportunities. So let's hope for a better week in comparison to what we saw last week.
Absolutely. As they say, you can't get the good without going through the bad.
Yeah.
Once in a while. And it's actually literally been once in a while. Actually, more than anything else, I mean, take a look at what the market has done from the highs, right? It's down 5%. The problem is, it's not 5%. The problem that no one is used to a 5% pullback, not even a 5% pullback from the highs. And that's essentially been a feature of this bull market, very different from all the prior ones that we've had. But I'll get to some of the broader points in a bit. Let's get specific. So the Nifty on Friday fell another 200 plus points. So it was a fifth straight loss, fifth straight day of losses for the index, benchmark index. I mean, it didn't look good. And Friday especially was a very volatile day because at one point the market was up 150 and within 5 or 6 minutes it was down in the dumps, again down about 50 points, and then selling accelerated into close by 3:30. But things changed. Things turned a little bit in the US market session. Now, US equities rallied on what was essentially a blowout September jobs print. Never a dull day, right, with regards to this monthly jobs data. If you remember exactly a month ago, I mean, this is essentially the number which triggered all the volatility for global markets for a few days because the number was so weak and the market panicked that maybe the Fed is behind the curve. Well, guess what? Fed does 50 basis points in terms of rate cut. The next number is a blowout number, is super strong. So what does the market do? It adjusts Fed pricing accordingly. But, the S&P was up about 0.9. The NASDAQ was up about 1.25. The next FOMC meeting is on the 7th of November, and the market is essentially crushed what Fed will do in terms of rate cuts to 25 basis points now. Actually, the cumulative cuts for this year, for the full year from here on, have been pushed down to 50 basis points. The only question is if we get another surprise on the downside this time in terms of jobs data, will this need to be moved around again or will this stay at 50? Remember, after the last 50 basis points cut, I mean, the median expectation out there was at least 100, if not 125 basis points worth of cuts through the course of the year. That's now 50. So it's pretty dramatic. Now, a big move in US yields as well, naturally. So data is strong. Economy is, of course, seemingly strong. Yields went up 13 basis points. We are back at almost 4%. Dollar index, well, it's been a global outperformer for the last 5-6 days now. So 102.52 on the dollar index coming through. Oil prices, they're above, around 78 rather. And of course, I mean, markets are still awaiting, a direct kind of confrontation, escalation between Israel and Iran. We haven't got that yet. There is, of course, a fair bit of fighting which is going on in Lebanon, but nothing directly after those strikes by Iran. Now, China is the other big factor, right? And that essentially is the market which really pulled all of last week. The mainland markets were shut all of last week. They are back into the picture tomorrow. They reopen tomorrow, and we'll talk more about this. Now, the setup for the Nifty, at least in the near term, is looking good for a bounce. Just to sort of circle back and tie in the levels. For the Nifty, I mean, you basically, when you're looking for a bounce, you need to get past some of these big support and resistance areas. The resistance essentially is the 40-hourly exponential moving average first, which is 25,572. There you go. That's the number. The support is a zone, 24,800 to about 25,000. So that's essentially a 200-point range where the market should actually find some support. We are practically there in that particular zone. For the Nifty Bank, it closed slightly below the rising trend line level, which we highlighted last week as well. Support levels for the Bank Nifty comes in at 50,700 and then 50,242. So these are, I mean, the 5242 level is the lower Bollinger Band. On the way up, the gap area, when the market fell like that, I think it was on Thursday, that essentially becomes important. The gap area is between 52,582 and 52,817, and you got to get past that for further buoyancy and for the market to feel a little more confident. GIFT Nifty will come up on your screen, gives you an indication of how the start is likely to be. So about a 71 point upstart, higher start is what is indicative right now. Surbhi.
Yeah, absolutely. And, markets across Asia are actually building on some of those gains. And the moves for the Japanese market are worth noting because of the kind of strong non-farm payrolls data and a couple of other data points in the US, the yen, which was surging, has suddenly reversed course and it's dollar on top once again in that market. In fact, the dollar-yen move has taken that number back to 149. So pretty dramatic moves once again in the currency markets playing out. All of this is doing, the non-farm payrolls data and the fact that there is continued buoyancy around China. Look at the Hang Seng this morning. Again, it's building on gains after a big last week. We've got another 1% sort of a move coming in. That takes the total tally for the Hong Kong market. The rally in the last 1 month is 31%. And we're still seeing some green on top of that. So that continues to be one of the big watch points. By the way, there are lots of central bank meetings across Asia this week. There is the Bank of Korea. There is the Reserve Bank of New Zealand. Both these banks are expected to cut rates. And then there is our very own Reserve Bank of India. We are not going in with a rate cut expectation, but a lot of economists are watching out for a potential change in stance. So more on that coming up as we go along through the day and the week as well. Let's talk about some of the key numbers. And the fund flow picture obviously is the one that we've been watching like hawks over here. And look at the selling once again that came in on Friday. Big selling numbers again, almost towards that 10,000 crore mark. Now, if I talk about the cumulative selling over the last 4 trading sessions, then the numbers are really piling up. I mean, it was around 9,800, dipped a little bit. Then we had that gigantic 15,000 sell number. And if you thought Friday would be any relief, well, it wasn't. So we need to see when these red bars start sort of cooling down and when the pace of this selling and the magnitude of this selling starts pulling back a little bit. Now, on crude, by the way, there's a bit of an ease off this morning. Prices are taking a bit of a breather. And that's in part because of this one statement. Remember on Friday, we were discussing another statement from the US president. Well, he talked down the market on Friday by saying that if I were in their shoes, that's Israel's shoes, I'd be thinking about other alternatives and striking oil fields. So that helped cool down some of the alarm in the market. But then the strikes are continuing. We know that Israel has conducted fresh strikes as early as this morning in southern Beirut. So one needs to wait and watch and see what happens over here. So that's a watch point. Lots of business updates, by the way, and we'll be talking a lot more about them as we go along. On the BFSI side, just 1 or 2 names to highlight. It's all about that fight for deposits, and some sort of players are coming out right on top. So, for instance, if you look at the updates, in IndusInd Bank and RBL Bank, these are 2 that really caught my attention because of deposit mobilization. The momentum there has been really good. Deposits up 15% for IndusInd. For RBL Bank, deposit growth year on year is 20%. So banks are trying to pull out all stops. Federal hasn't been that successful. So let's see. And good growth numbers from, let's say, an L&T Finance as well. By the way, Titan, speaking of business updates, beyond BFSI, Titan should be, making the street happy because the number on the jewelry business is looking very, very good. So we'll talk about a lot of this. But before we get to the individual stock action, Nigel, I guess the bulls will hope that finally they have a breather and they can come back and sort of reappear on the street today.
I think a bounce is very much due. Though the bulls, they have their hands full and they have a couple of headwinds that they're facing. One is that crude oil prices, as you briefly mentioned, they're up by nearly around 6 to around 7%. That's a macro tailwind that it's turned into a headwind now. And also you have the dollar index that's up a couple of percentage points in the past week. The FI outflows, yes, that's a worry. And also I was looking at a Motilal Oswal note today in terms of earnings growth. Well, it's going to be quite a muted one for Q2. So no big positive surprises is what the street is waiting for. But I think we're bracing for a near-term bounce on the Nifty itself. And a couple of technical factors are suggesting that. The clients, they were net short, now they're net long for the first time all the way since August 23rd. So that's one point. The second factor is the PCR. That's moved down to around 0.68. We have seen it move to even 0.63 odd before we get a bounce. But that's normally a level where, in fact, we do see a bit of a bounce. And the FI long positioning, it was getting extensive on the long side. It was getting a little bit too good for comfort. And from around 3.5 lakh contracts, that's come down now to around 83,000 contracts. All of this in a matter of a week itself. So it's down by nearly around 75%. And the clients, they have been timing this market correct, right? They were net short. Now they have moved to net long positions, close to 30,000 contracts on the long side. And they're the ones that normally get it correct. So that's about client as well as the FI positioning. Now in the Nifty options data, 2 strikes are fairly active, the 25,200 call and the 24,800 put. Both these two very, very active, and they're giving you a broad sense where the Nifty gets its support at. So since the 24,800 put was fairly active, and you have premium at around 100 rupees, the 24,700 mark is a very, very important mark. If that breaks, then you're bracing for a sharper correction. So these are the levels. We're currently around this 50 DMA. Support comes in, crucial support at around the 24,700. And the 20 DMA comes in at around 25,500. You get more confident only once we close that. Similarly for the Nifty Bank, we ended at around that 50 DMA. The 20 DMA is the mark on the upside. On the downside, the 100 DMA or thereabouts. The sense you're getting is today you need to participate on the upside if you get that intraday dip. And then, you'll have to play it for a couple of 100 points odd. Very, very nimble-footed, but I think the bias is on the long side just for today's session. The stock I'm looking at is Infosys. Everyone's been talking about the large-cap names cracking. Well, that one's very, very close to a fresh 52-week high. And the IT index, even in Friday's trading session, was up 0.3%. So the tech space seems to be holding one end up. You'll need some support from the Nifty Bank, and hopefully the Nifty can see a bit of a relief rally.
Oh, absolutely. And I think nimble is the word that you want to keep in mind as you get set for trade today, because that's the kind of market we're in. Let's get started then. Our equity call of the morning coming in from Victor Shevitz of Macquarie. Now, he's saying that investors are giving the benefit of doubt that China will do what it takes, but it will not be easy, with the problem being demand for and not supply of money. And more radical policies are likely to run against political and social covenants. Yet he adds it feels too early to fade this rally, and as Japan of 1990s showed, these can be powerful. He says as China rallies, pressures on India will rise, especially given its slowing economy and high valuations, and liquidity will be sucked out from other EMs. Long term, Victor says they are still more comfortable with India's secular outlook than with China's battle against high saving rates. By the way, speaking of China, let's remember that today we're expecting a press conference where more of the fiscal stimulus measures, they are likely to be detailed. And Prashant, that's what we've been discussing, right? It's about whether you can really fiscally stimulate demand rather than just cutting rates, perhaps.
Absolutely. Today or tomorrow? Or
I'm going to check up on that. I thought it's one of these days.
Because the market's back to the economy. So they come back tomorrow.
Ahead of the market, prep everybody in, and then try and meet expectations. Give it a 32% rally.
All right, well, that's I think going to be closely watched. Richard Harris is executive director at Port Shelter Investment Management. He's with us now to take some questions. Richard, good to have you with us here. Thank you for your time. For a lot of our viewers here in India, Richard, the question becomes: will there be more selling here, foreign selling here? I was looking at the latest data, and that indicated that, and it's been why it's not as if it's not known. EM funds are underweight. Global funds are underweight India. I mean, relative to India's weight in the MSCI benchmark. But there have been outflows, significant outflows in a very short time span. What's your sense, Richard?
Well, I don't think it's necessarily anything to do with India. We've of course, have had some significant moves in China, and I think there's probably been a reaction there. I mean, foreign investors in Europe and the US are very US or European centric and tend to think very much of their own area. So they still have a feeling that EM is one general block. So I think what they've basically done is maybe look to lighten India a little bit, look to put some more money in China. I don't see this being lasting. I think the move in China may be lasting, but I don't think people are going to necessarily do that kind of swap in the longer term. I think people will look at India for its own merits and focus on that.
Richard, hi, good morning. And yes, Prashant, you were right, actually. Just for the benefit of our viewers, this briefing around fiscal measures from the government in China that's happening tomorrow. Today, it's all closed for the Dragon Week festival that's been underway, the Golden Week festival that's been underway. Richard, the question really is that even though you're saying you're not expecting this swapping India for China kind of a trade to last too long, the question is, what about incremental money? We've been kind of waiting to see FII interest return to the market, but we haven't seen the sign of that. And now you have China. So what should we expect from the FII fraternity? Everybody says the long-term narrative is good. The money hasn't been coming in.
Well, the long-term narrative is good, but don't forget that emerging markets tend to be right on the very edge of what investors are thinking of in the West. And it only takes a small amount of money to come from these very large pools of capital in Europe and the US to make a difference in emerging markets. So when you're sitting here, from our point of view, it does seem to be rather lumpy. It does seem to be rather broken in terms of its flow. But I think generally fundamentals will out. The Indian economy has been strong. You're still seeing, should we say, emerging market growth levels, economic growth levels in India, whereas China, of course, has been disappointing over the last couple of years. So I think investors are likely to see through that and to keep investing in these markets. But in the shorter term, we shouldn't be too concerned because remember, we are really at the end of the asset allocation making decision. And that's why you tend to see big inflows and big outflows of these markets, which are, if you like, emotional as much as anything else. But the big thing to remember is that if there is a turn, then there will be quite a lot of money coming in on the margin into emerging markets coming out of Europe, which make relatively little difference to European allocations.
Hi, Richard. Good morning. Good to see you, Win. What are you making of the data points we're getting from the United States? That economy seems to be in good shape, so to call it. You know, the data points are suggesting that. And what about your expectations from the Fed? 50 basis points should be a done deal?
Who would have thought it? It looks as if the Fed may have got it wrong this time. You know, why did we have a 50 basis point cut? Maybe a 25 basis points to save face. So clearly they weren't looking at these figures. I mean, I think maybe what a lot of people have missed, and it's a very, very easy miss, is that this summer was quite quiet. It was certainly quiet in Europe where I was. It was quiet in a number of areas, quiet in terms of the fact that people weren't really working. It was a little bit of COVID revenge. You know, people didn't want to take last summer off. They did take this summer off, both in the US and in Europe. And I think that those figures really came through. So we saw slightly weak numbers in July, slightly weak numbers in August. Now, all of a sudden in September, they've picked up again. And I think what you have to say is we're looking at unemployment in the US, for instance, really being quite low. Not the lowest it has been, but, you know, it's really quite low at 4.1%. We've seen job creation increase. We've seen the consumer still growing. There's still money around. And this is still very positive when you look at a backdrop of enormous interest rate rises in the US. And we're in a position now, I think, where certainly all those people who are saying, oh, interest rates are going to be cut 3 times, 4 times, 5 times by the end of the year in the US will be confounded. That's just not going to happen. We don't really have enough data. We can't see that happening before the US election. So I think, you know, we're in a situation that the economy still seems quite strong. People have gone from saying, look, are we going to have a hard landing to, oh, we're not going to have any landing whatsoever in the space of about a week. So I think the picture looks quite good still economically in Europe through to the end of the year. Clearly, there are issues and risks out there. But the economic picture is still ticking along quite positively.
Well, maybe as you know, we spoke with Christopher Wood sometime back at Jefferies, and he said, and this is right after the cut, 50 basis, actually the day after the 50 basis point cut, he said, of course, it was just his thought. He said, well, the cut is political. I mean, it's intended to help, you know, sort of one candidate over the other, the incumbent. But we'll see. And it'll be interesting to get his thoughts again on the matter. Richard, good to speak with you. Thank you very much for your time.
Thank you, Prakash.
Here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back, but let's quickly run you through some of the interactions, corporate interactions that are lined up here. So at 8:35, we'll get our exclusive conversation with BK Goenka of Wellspun World. That's coming up on the company's growth trajectory and a lot more. At 9 o'clock, Nitin Agarwal of Motilal Financial Services comes on to discuss some of the banking sector updates, pre-quarterly updates we've got. At 9:20, Gautam Shah of Goldilocks Premium Research will be a market master of the day. We talk about, of course, the sell-off and where we go from here. At 9:40, we connect with Suvankir Sen of Senco and Saurabh Gadgil of PN Gadgil. So it's a jewelry sector discussion. And a little later after that at 9:50, we have another interesting chat with Krishnamurthy, former CEO of India Electronics and Semiconductor Association, and Raghu Panikar of Kane Semicon. So that's the focus on what's happening in that ecosystem. And towards the end of the show, and it's the economy, my colleague Lata gets chatting with Nikhil Gupta of Motilal Financial Services and Mahesh Vyas of CMI as they talk about the capex cycle here in the country. Stay tuned.
All right, well, we'll slip into a short break. You come back, we'll tell you all the stocks that you should be tracking for today's session. Don't go anywhere.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup.
Welcome back. Well, the setup, at least from the Asian market perspective, is looking positive, and we're hoping that the bulls will get a chance to bounce back today. That's what the implied open is suggesting. So now let's talk about individual stocks, and plenty of news flow over the weekend. Our team is standing by with the CNBC-TV18 list of top stocks to watch this Monday morning. Hi guys, good to have all of you all here. Let's start with some bright and sparkling news that came in from Titan in the form of that Q2 update. Mangalam, tell us more.
Well, it's a good update that has come in. You know, if you just look at the absolute performance as well, jewelry revenue growth of 26% after a soft first quarter performance is pretty good. The company said that the like-to-like sales in their domestic operation also came in mid-teens. The only thing we need to watch out for is how much of that is one-off and how much of that is preponement because of the customs duty cut. Because that's what the company and all other jewelry players are saying as well. The reduction in customs duty aided their demand this time around. So let's see whether, you know, festive season demand also stays as much, or was there some preponement? Did people borrow, from the next couple of quarters for the second quarter itself? They added 24 new Tanishq stores during the quarter. The other thing we'll have to watch out for is the non-solitaire studded segment, which recorded, growth in high double digit, but solitaire segment saw a decline amidst price uncertainty. So overall studded sales this time around were lower. So to that extent, whether the company will hold their margins at that 11% mark that they'd guided for or not. For starters, see the stock open in the green. Thereafter, we'll see where it goes.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at Tata Steel. They've come out with their operational numbers, provisional numbers for the past quarter. The India business, good growth, around 5.8% in terms of, deliveries is what they have given. The Netherlands business, well, remember they had a realignment of one of their blast furnaces. So on a quarter-to-quarter basis, it's a flattish number, but on a year-on-year basis, it looks quite good. The UK business, they're transitioning into green steel. So because of that, you have that decline out there because some of those furnaces have been shut. And Thailand is more or less flattish. So just to recap all the, top highlights of the past quarter, for Netherlands, realignment is done. So you have good growth. Europe is going through the transition phase. So for the next few quarters, it will be a more or less flattish or a degrowth is what we are likely to see out there. And India, well, we have commissioned that big facility at Kalinganagar, state-of-the-art out there. So that's what's going to help volume growth for the second half of the year. Expect the stock to open up in the green on the back of this update.
All right. Nigel, thanks for that. Tata Motors and JLR have got updates. Vinny's here to update us. Vinny, good morning.
Good morning. So yes, we're keeping an eye on Tata Motors because we have seen those JLR UK sales number that have come in. Good numbers when you're looking at it for the month of, between July to September. 33% uptick there, 10,807 units is what they've managed to sell during this period. So yes, a good uptick versus last year, the same period. Specifically, when you're looking at it in terms of brands, Jaguar, they managed to sell around 1,814 units. That's a bit of a subduedness versus last year. But Land Rover and all those brands in terms of the Land Rover brand, that has managed to see an increase of 47% versus last year, coming in at around 8,933 units. Overall, for JLR UK sales, we're seeing it's a multi-month high level in terms of the number of sales of units. And that is why we're expecting a bit of a green coming in even for Tata Motors today.
Okay, all right. We'll watch out for Tata Motors, Vinny. Thank you for that. Let's go to Abhishek. Lots of updates have come in over the weekend. I think he's picking up IndusInd Bank, Federal Bank, and L&T Finance to begin with. Abhishek, good morning.
Good morning. So the fight is on deposits and that's coming in at a huge cost for many of the lenders. Let's begin with IndusInd Bank. CASA ratio is at 33 quarter low, and in terms of loan growth on a YY basis is the lowest that you are seeing in last 10 quarters. Now deposits are up 14.7% YOY and about 3.5% sequentially. CASA ratio is at 33 quarter low, coming in at 35.9% versus 36.7%. So most of the deposit growth has come in from the term deposits. Advances growth is at 13.2% YOY and about 2.6% sequentially. Credit deposit ratio has declined for them both YOY and quarter-on-quarter. In terms of Federal Bank, the deposit growth now that's declined sharply and it might be at a multi-quarter low. So let's take a look. Deposit growth is at 15.6% YOY, which is the lowest growth that you are seeing in last 7 quarters, and sequentially the deposit growth is just 1.1%, which is the weakest in last 9 quarters. So CASA ratio, that declining trend they have arrested. CASA ratio is at 30.07% versus 29.3%. Now certificates of deposit, now which is a high cost deposit, that's increased by 11.5% on a sequential basis. So net interest margin can come under pressure. Advances growth is at 19.3% YOY and about 4.3% sequentially. CD ratio has improved for them both YOY and quarter-on-quarter. L&T Finance, the disbursements are on the weaker side given the fact that rural economy is not performing well. So in terms of retail disbursements, they are up 11.5% YOY and about 1.5% sequentially. In this, the rural business finance disbursements are down both YOY and quarter-on-quarter. Farmer finance disbursements, they are down 6.5% on a sequential basis. So retail loans overall remain strong, growing at 28% YOY and about 5.3% sequentially. Back to you.
All right, thanks for that, Abhishek. Well, let's hop across to Sonal. She's here to tell us about the real estate updates that we've got in Godrej Properties and Macrotech. Morning, Sonal.
Good morning, Nigel. Let me start with Godrej Properties. Well, the headline numbers, if we look at YOY numbers, they look good, but that's only for bookings. So bookings are up 3% on a YOY basis, but they have declined around 40% on a sequential basis. Sales volumes, they are down both on a YOY and on a sequential basis, which is not there in the press release, but their collections did well. 69% uptick on a YOY basis, basis, 33% on a sequential basis. The company says they have achieved 51% of the annual guidance for booking value. There's strong demand in some of their newer projects as well. So most of this number on a YOY basis has come in from newer projects. The operating cash flows have surged 120% on a YOY basis. Maybe that's the reason. That is because of the higher collections. But going with red because of that sharp downtick on a quarter-on-quarter basis. For Macrotech, it was a decent set. Pre-sales up 21% YOY, 6% sequentially. Collections up 11% YOY, 14% sequentially. And the company says they are on track to meet that 20% growth guidance. They also acquired 45 acres land for their digital infrastructure. They have entered into agreement to increase their rental income. However, the debt has increased on a sequential basis to 4,920 crore rupees. There's a 600 crore increase on a sequential basis for the company.
All right, Sonal, thank you very much for that. So keep an eye out on those real estate names. Banking and more on banking. Bandhan Bank, AU Small Finance Bank, all reporting business updates. Abhishek, tell us more.
Well, Prashant, to begin with Bandhan Bank, now they are growing the balance sheets with bulk deposits or high-cost deposits, and that will put pressure on the net interest margin. Take a look at deposits. They are up 27% YOY and about 7% sequentially. The CASA ratio, that continues its downward trajectory. It's now at 33.2% versus 38.5% YOY and about 33.4% on a sequential basis. Now, bulk deposits, they are up almost 58% YOY and 11.7% sequentially. So the net interest margin can come under pressure as we are in a high interest rate scenario. Advances growth is at 21.5% YOY and about 4% sequentially. The credit deposit ratio, that's declined sharply to 91.7% versus 96% in the same quarter last year and about 94-95% in the previous quarter. AU Small Finance Bank, we cannot do a YOY comparison due to the merger of Fincare Small Finance Bank. So on a sequential basis, their deposit growth is perhaps the highest in the banking sector. Overall deposit growth is at 12.75% on a sequential basis. CASA ratio has dipped marginally to 32.4% versus 33% sequentially, and healthy loan growth. Their overall loan growth is at 5.25% on a sequential basis. Back to you.
Okay, all right. Thank you very much for that. We'll watch for all of those updates. By the way, that's important news flashing. So we can easily probably add IEX to begin with to our list of stocks to watch, because these are directions coming in from CERC, and I think they're saying that intraday contracts will maybe stopped or modified, and then there is a new stipulation in terms of some of the contracts and what exchanges are allowed to do on the power side and the kind of clearances and approvals that they're seeking from the Commission. We'll get Vivek in on this and get some more details going, but yeah, IEX should also be in focus on the back of the news on our screens. Well, with that, let's quickly recap the rest of the stocks to watch today. The ones that have positive news flow are Titan, Tata Steel, Tata Motors, Macrotech Developers, AU Small Finance Bank, while stocks with negative news flow include IndusInd Bank, Federal Bank, L&T Finance, Bandhan Bank and Godrej Properties. Okay, let's figure out what's happening in the world of commodities. We have Manisha joining in with a roundup of all the action. Manisha, so much news flow, right? From the jobs report to the Middle East and everything that's going on over there. Give us a roundup.
Oh, well, absolutely, sir. It will be never a dull day, really. But I'll start with the crude oil prices, where we have seen 10% of gains in the previous week. It is the best weekly gain since October 2022. And with those kind of gains, we are trading at a 5-week highs. Well, potentials of a supply disruption on Middle East is still a top headline, and that is continuing to support markets. Obviously, we haven't crossed 80 yet because there isn't an actual supply disruption, and then the global supplies are enough. But this is an everyday event, and markets will keep a keen eye. In the space of metals, it really is going to be about China suggesting that they are going to discuss policies to boost economic stimulus tomorrow as well. So in the next 24 hours, there could be a lot of choppiness. But the week has started on a stronger note. Silver prices are trading at a 12-year high. There is, of course, support from gold, and the industrial demand also is supportive. The recent China stimulus and measures have been supportive as well. So you are looking at copper and aluminum still holding near their 4-month highs. Steel is trading at a 3-month highs. Zinc price is at an 8-month high as well. So most of the commodities within the metal sector also continue to hold firm.
Okay, all right. Thanks a lot for that, Manisha. Well, India's most coveted leadership awards, the IBLA Awards presented by CNBC-TV18, will be back for its 10th edition later this year. The awards, which aim to honor the visionaries behind outstanding businesses, will feature a star-studded jury which features Bharat Forge Baba Kalyani as the jury chair, Other jury members include Ashok Vaswani of Kotak Mahindra Bank, C.S. Shetty of SBI and Standard Chartered Bank's Zareen Daruwala, Asian Paints Amit, we have Apollo Hospitals, Sunita Reddy and L&T's R. Shankar Rama. They'll also be part of the jury. Along with Titan Capital's Kunal Bal and Cognizant's Ravi Kumar. You can meet this most influential and credible jury at 5:30 p.m. today, only on CNBC-TV18. Well, time to slip into a short break. Up next, we'll come back and we'll have Prakash Diwan who will be joining in to help us out with some fundamental analysis.
Young Turks at 21. Only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m.
Welcome back. As promised, we have Prakash Diwan who's joining in to help us out with some fundamental analysis. Prakash, good morning. Well, from the Nifty pack, you have Titan that will be reacting to the update that they have put out. Your view on the stock?
Good morning, Nigel. So I think this is very encouraging given the fact that it's pre-festive season. So you can imagine if the festive season were to have some sort of a continuity of this salience, things could look very promising. Again, I think in markets or times like these when you have a lot of issues or skepticism around valuation and the quality of earnings and all of that, Titan stands out as a very, very formidable play. The only challenge is that if you don't hold it for the long term, and it sees a little bit of a correction from here on given market conditions, you will probably have to keep averaging out even at lower levels. So you have to be ready for that. But I think the earnings profile, the contribution, the mix that they are getting, apart from jewelry, the other verticals that have started contributing, and it's very positive. So quite positive on this. In fact, I would recommend people look at it and seriously add it to the portfolio, as I said, in a staggered.
Prakash, hi, morning. Good to have you on. So let's get some thoughts in on Tata Motors. After quite some time, we are hearing of a good update coming in from JLR, right? Those numbers are looking good. And you have China, which maybe is firing up, and other central banks are cutting rates. So I don't know, there seems to be enough and more money going around the world. Markets are still higher. But I don't know, I mean, the stock has done not too much this year, calendar year, compared to the rest of the market. What's your view now?
Good morning, Sarvi. So I think you said it, you know, the stock has gone into a phase of consolidation between this 900 and 1160 kind of a zone. And that was required because the surge that you saw last calendar year, it was phenomenal. And you know, a stock like this, a big, you know, name like this, when it kind of moves up so ferociously, you need that consolidation so that, you know, it sets a base for the next round. Look at the numbers. This is the same company where 2 months back, somebody came up with a report and said JLR is past its prime. Globally, it's not going to be able to clock any good numbers. Of course, I'm not even factoring in the China revival, because the Chinese revival might not translate into JLR sales as much because the focus is so much on EVs there. Every second car that's being bought is an EV. So, you know, it's going to be difficult for them to grow at the same rate as they did in China. But the rest of the markets, there's absolutely no dearth of what acceptance they have. And at some point in time, they'll also kind of, you know, move into the EV bandwagon or the higher end with the I-Pace range of cars, the Jaguar portfolio. So my sense is it's a stock that will actually do very well from here on. But you need to kind of give it that time to have this earnings catch up. And of course, the balance sheet deleveraging will also start playing out very well at some point in time. My targets here are actually upwards of 1500 in the next 12 to 18 months. So it's a significant move. But yeah, you need to have that conviction that this is a company that can do. Big trigger there. The rationalization of the CV portfolio here. As and when that happens, you'll probably start seeing the market talk about it very positive.
Prakash, hi, morning. Out of all the banking updates Abhishek was telling us about, anything stood out to you?
So, you know, good morning, Prashant. What's interesting is that some of the SFBs have mentioned, have shared very high growth rates in terms of their deposit base and AUMs and all. You know, I do remember AU and Equitas particularly. Of course, AU has a little bit of a corporate action, as Abhishek rightly pointed out, attached to it. But look at Equitas. This is not a company that's been very aggressive on rates, but it also has clocked some decent growth rates. Of course, YOY again. What it tells you is that if you're willing to do the right things in terms of pricing yourself, there is enough money available to convert into deposits. So a lot of these large banks which are, you know, finding it difficult or claiming to find it difficult in terms of deposit growth, that might, you know, that logic will have to be relooked at. So we'll have to, of course, understand from the commentary of these banks, what is it that's helped them do this? But my sense is the smaller banks will start participating in a slightly better way. There's turnaround element involved in a lot of the SFBs and a lot of the small non-SFB regular commercial banks like DCB, CSB. So I would start looking at them. We're not looking at buying any of those yet. But yeah, banking within banking, you'll start having some opportunities emerge from these smaller banks.
All right, Prakash, you know, on Friday, I had moved to Anjar to visit Welspun's facility. And Mr. B.K. Goenka has spoken to us, and we'll be playing out, you know, parts of that interview all through the day. Any view on any of these group companies? Welspun Corp, you know, they currently do 1,600 crores of EBITDA, but they have the US business that's firing. The Middle East is doing quite well. And in the India business, they're touching the right spots. Ductile iron pipes, you know, Syntex will start doing well as well. Any view on any of the names? Welspun Corp, Welspun Living?
Nigel, I look forward to listening to this because it's not every day that somebody gets to visit Kutch and especially Anjar and do this on the ground kind of a work. But what I can tell you is that some of the businesses that they have, particularly, you know, their focus that has moved into water management. I'm not talking about just the pipes business, but I'm just saying the way they have expanded their portfolio, where the revenue starts coming in from multiple revenue streams. And then they have a lot of these triggers in a couple of the companies, which are optionalities at this point in time. The JV with Adani, the oil well business. So I think somewhere, of course, and let me also touch upon Welspun Living, which is seeing a significant revival. And, the festive season in India will also be followed by the festive season. And the flag off is the Black Friday sale in the US. And of course, goes all the way to Boxing Day and beyond New Year. So if that were to kind of trigger some sort of a restocking, this month, you'll probably see Welspun Living also do very well. It's a very sound business, great portfolio. The metrics have been a bit tepid, but things look like it. So I think most of the group companies are doing fine. There's no reason to be worried about that. What do you buy out of that depends on your allocation from a sector perspective. But Welspun Corp is probably, it stands out as one of the best. We've spoken about this at levels which are closer to 200. So you can imagine in a year's time how things have changed. And the best part about this is that these sectors or these subsectors are robust enough and have visibility. So for companies like this, which have just scaled up, and I can also correlate this to Jindal Saw. I mean, they've also kind of talked about how things are looking up. The performance has been reflecting all the salience. So we are quite positive on that space, and we'll look forward to listening to you quiz Mr. Goenka on this.
Prashant, as well as Surabhi, the facility was something that really caught my attention, right? Over the years, we've seen hundreds of facilities, but, this was the one that got hit by the earthquake many years ago. It had floods as well, and they've totally transformed the business out there. So it's, a facility besides we track markets, etc. Yeah. But the work that's been done out there, Welspun World, as they call it, I was, it was something to visit. I was at the plant even at 10:30 in the night, and I was surprised to see Mr. Goenka. He was at the blast furnace. Because I like to get in depth in terms of how the billets are made, etc. And I saw Mr. Goenka at 10:30 in the night at one of the facilities.
That is where, Nigel, I'm extremely envious of you, because I might track mutual funds and markets, which is not touch and feel, right? But to see a real manufacturing facility or a mining facility, I mean, I guess it's another rush, right?
That said, it was scorching hot. It was really hot. But we'll play bites of that interview later on in the show as well.
Absolutely. And, 9:30, that's coming up. So you don't want to miss it. Two companies, lots of interest. Stocks have done well. Welspun Living and the other one, of course, Welspun Corp. Well, the big question we are asking, of course, we've been asking, and it's been answered in some ways, is the selling which is happening in markets like India, and most emerging markets saw selling last week. Is it all headed to China, and it's sort of financing the bounce there? So some expert voices that we got over the last 3-4 days. Listen in.
I think, look, there's a lot to like in India, as you guys are extremely aware. So the combination of demographic plus productivity gains, digital inclusion, infrastructure, and so forth. I think the big picture in India continues to look very favorable. I do think if China is going to follow through on its stimulus promises, which we may see as soon as next week, it's quite likely that some of the money that global investors have put to work outside of China, be that in other emerging markets or other parts of Asia, probably gets pulled back into China.
Even though flows to India funds have definitely waned, they haven't gone negative, and I think India remains in quite a healthy position. It looks to me, at least from this week, that investors were pulling money out of liquidity funds in Europe to fuel this rotation.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo, as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side. And you need a sizable fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.
All right, time to slip into a quick break. Up next, we'll have Avni Bhatt as well as Sudeep Shah, who's waiting for us to give us their technical ideas. Stay with us.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount.
Okay, welcome back. There's 9 minutes to go for the pre-open session, and let's get some technical trades out on the table. Avni Bhatt and Sudeep Shah are with us with what they want you to do. The GIFT Nifty is indicating a 90-point higher start. Avni and Sudeep, good to have both of you here. Avni, you go first. How should one approach things? And if you are starting 70, 80 higher, would you give it an hour, 2 hours before you go in, or what's the trade?
Good morning, everyone. So yes, Nifty is opening with a gap up, but it's not the opening, but the close that matters, and it still remains to be a sell on rise market. Right now, all the technical and derivative parameters have turned highly oversold, and OIPCR has come down below 0.5%. So a dead cat bounce is on the cards. And on the upside for this particular bounce back, the immediate resistance is at around 25,200 to 250 area, from where we could see another round of sell-off coming in. So on a gap up opening, I would suggest wait for about at least half an hour to take up any trade. Upside is up to 25,200 to 250 area. In case if Nifty comes to that level, it will be a sell on at that level for a target of around 24,900 on the downside, and one can keep a stop loss of 25,350.
Okay, all right, Avni, got it. Thank you very much for that. We also have, of course, Sudeep with us. Sudeep, morning. Let's get your thoughts in considering the big sell down last week. Would you look at buying or would you wait for more stability? What are the critical levels for the Nifty and the Bank Nifty that you're tracking?
Good morning, Surdeep. So we see post this fall of 1,200 points in the last week from higher levels, and of course it's because of the global cues, and the cues have not yet settled. So I guess it's going to be a topsy-turvy market, and every incoming information is going to have a lot of volatility on the market. So I feel it's better to be a nimble-footed trader here at this time. And on the downside, 24,800, 24,850 zone will act as an important support zone considering the option writing data and as well as critical Fibonacci retracements at that zone. So I feel 24,800 as of now looks to be a decent support. On the upside, 25,200, 25,230 positionally needs to be cleared for at least some kind of a rebound formation, or for us to have some comfort that yes, from the current levels, now we could start adding up stocks in a say in a step-by-step manner, so in a phased manner. So yes, from a Nifty standpoint, 25,200, 25,250 will act as an important resistance. From the Bank Nifty perspective, 51,800 now remains an important resistance. Now, this level has to be crossed on a closing basis and not just on an intraday basis, because last couple of days we have seen 51,800, 51,900 kind of not being able to be breached, and we have seen selling pressure from higher levels. So 51,800, 51,900 now needs to be crossed on a closing basis. And on the downside, 51,000, 51,100 now remains an important support.
Got it. All right. Sudeep, you go first. Tell us, what about individual stocks? What are you tracking?
Morning, Nigel. Nigel, I feel pharma, healthcare, IT, as well as metals, all these spaces on dips looks to be a good buy. So one stock from the pharma pack, which is Divi's Lab. Now here the stock has been in a considerable uptrend on the weekly charts. On the daily charts, if we see last 12 to 15 sessions, the stock has been in a range between 5250 and 5500. And even when the markets have broken down from higher levels, this stock has held to its positive trajectory, and it's kind of witnessing support at all dips. So I feel this could be bought with a 5350 stop loss on the downside and a target of 5550, 5600 on the upside. The second stock which looks quite promising is Nalco. So in the last several sessions, we have seen a good up move in Nalco, and specifically in the last 3 sessions, the stock has held to its support zone of 215 despite some kind of spikes on the downside. So this could be bought with a stop loss of 215 on the downside for a target of 228 and 232 on the upside.
And Nalco will try to get in the management in a couple of days here on CNBC-TV18 to get us an update about how they're doing fundamentally. So thanks for that, Sudeep. Avni, coming across to you. Do you have some stocks for us, some interesting picks?
Yes, good morning, Nigel. So after last week's mayhem, I think it is wise to stick to resilient stocks that have performed well in spite of all the volatility that we've seen last week. And so the pharma and healthcare space is going to remain in focus going ahead until and unless this volatility settles down. So the first stock from the pharma pack is Sun Pharma. In spite of all the volatility and minor profit bookings, the stock has not even looked back at its 20-day exponential moving average on the daily charts. And minor long unwinding has been seen of less than 1% during the week, but major longs have been still intact. So we go for Sun Pharma for a target of 1965, and most probably in this particular month in October series, we may see Sun Pharma test around 2000 levels also. And one can keep a stop loss of 1870 on the stock. The second stock is from the healthcare space, that is Lalpath Lab. It's a breakout trade on the weekly charts, and so it's a preemptive trade. Lalpath Lab, we can buy, it closed at around 3495. We can target around 3680 on the upside, keeping a stop loss of 3395. And lastly is a little aggressive bet, which is Bank of Baroda. So Bank of Baroda is in fact on the verge of a breakout above the 2252 to 255 congestion zone. And so again, this is a preemptive trade. It closed at around 250. One can initiate a long position in this, keeping a stop loss of 243 for a target of 263 and 275 on the upside.
Okay. All right. Avni, thank you very much for joining in. You have a good day, and we look forward to connecting again soon. Let's take a break on that note. We'll come back on the other side. Then we'll have the pre-opening rates. Also, we'll get chatting with Nitin Agarwal, head of BFSI research at Motilal Oswal Financial Services. So many of these Q2 updates have poured in. What do we make of it? Which are the outliers? We discuss all of this and more in just a bit.
Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
This week was a record as far as the FI selling is concerned. Let me just go to the wall and explain why I'm saying this. If you look at this week, as I said, it's a kind of a record. It's been the highest single-day selling by FIs in the India market. Yesterday, we saw a figure of 15,300 crores. That's the highest single-day selling in the last 4 years as far as the India market is concerned. This is the number that I'm talking about. 15,243 crores to be precise on a single day that the FIs have sold in the India market. But if you break down that, that selling was largely into 4 or 5 large cap names. The split will come up. Reliance saw delivery-based selling of close to 4,450 crores. HDFC Bank close to 3,700 crores. ICICI Bank close to 1,700 crores. Axis Bank nearly 1,700 crores. And Tata Motors almost 1,500 crores. This is a single-day delivery-based selling in the 5 large names. What we saw in yesterday's trade from an FI perspective. But if you look at the overall FI selling, it's, as I said, yesterday was the highest in terms of numbers. These are the top 5 in terms of large selling. June 4th, the election doubt.
Welcome back. So the first of the rates will start kicking in any moment. Remember, the implied open was suggesting that we'll have a bit of a bounce, a 70, 80 points bounce. And now that we're getting in the rates, there you go. The Nifty looks like it wants to start with a pullback of at least 100 points. But the question is, will it be durable? Will this sustain or not? We'll get more rates as and when they settle. But for the time being, let's also look at some F&O trades. We have Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, to give us a heads up on it. Chandan, good to have you on. So let's get the trades in. Are you playing for a bounce?
Good morning, Surbhi, Prasant and Nigel. Thanks for having me. So talking about the Nifty, it witnessed profit booking decline in last 5 trading sessions and has been making lower top, lower bottom as bulls took some breather with hurdle at 26,277 and corrected by more than 1,300 points. So structure is slightly weak and we believe that till index doesn't negate the formation of low rise, lower lows, it would be tough for the index to hold at higher levels. So as of now, I'll closely watch 25,200 zone. If market manages to hold above the same, then only we may find some stability. Otherwise, bounce could be sold for the downside target to us, 24,850 to 24,444, which is 38.2% retracement of the entire up move last 5,000 points. Talking about Bank Nifty index, it already corrected by more than 3,000 points, and key support goes at 51,250. So that may provide some cushion, but till it remains below 51,750, bounce could be sold again. So expecting some intraday bounce, but concern and question will be whether the bounce is being held or is going to be sold. That we need to keep in mind. Now looking at the stock specific, first that is buy on Lalpath Lip. Major trend of the counter is positive. The stock is holding well above its 50-day mark. So one can buy with support of 3,400 for an upside target towards 3,600 zone, being a defensive and the safe play in this market. Second trading area, that is buy on Infosys. The stock is holding well and Nifty IT is finding the stability even in this market volatile swings. Infosys has seen sustained put writing, and I believe a small follow-up could trigger a short covering move led by fresh buying interest. So one can buy with support of 1865 for an upside target towards 2,000 marks. Last trading idea, that is sell on Aarti Industry. Structure of the counter is weak. It has been making lower top, lower bottom. Every small bounce is being sold with built up of short position. So expecting further weakness in the counter, one can sell this stock with hurdle of 566 and it can drip down towards 535 zone.
Okay, all right. And then thanks so much for joining in. Wishing you all the best with regard to today's trading session. Well, let's get Prakash Diwan back with us. Prakash, thanks for waiting by. I wanted to review in the IT space. Everyone's been talking about metals, but that's not for the faint-hearted, if you're looking to play China. But the IT index has been holding strong. And Infosys out there has been, it's close to its 52-week high yet again. What do you like from the IT pack?
So I think, Nigel, while yes, IT has been an outlier, if you really ask me, I thought once banks come center stage in terms of a revival of interest, IT would take a backseat, but it hasn't happened, which means that there could be some positions that are still building up in anticipation of things looking very positive in the US market post the November election outcome. And we're just about 2.5, 3 months away in that sense from new contracts getting shaped up for the calendar 25. So if that were to take center stage and things come back in terms of business volumes for most of the larger players, you'll probably see that follow through. But I would still refrain from adding anything in IT at this point because, the valuations, even after whatever has happened, are fairly high. I mean, you had a Tech Mahindra available at 1,200, which was fine. 1,600 doesn't really excite me. Wipro, the same thing. The move's been fairly strong. So give it some time. You could buy IT as a fair, fair weather kind of a allocation, but you would have to buy it on dips. You won't make money if you buy at these levels. There's nothing which is happening dramatically different for them to revive. Let's wait for the numbers, just a few days, and you'll start seeing numbers. So Infosys does seem like having come up with something which is getting the street excited. And I think it's in anticipation of an improvement in the numbers, particularly margin improvement, which most of the analysts talk about.
Okay, all right, got it. Thanks for joining in, Prakash. Good to have you on, and we look forward to connecting again later this week. But let's address all of these Q2 updates that have been coming in from the BFSI space. We'll get to the expert in just a bit. Before that, let's look at the numbers. We have Abhishek joining in with the kind of Q2 previews we've seen so far, the key takeaways, and what's the big picture that these Q2 updates are throwing up. Abhishek.
The big picture that Q2 updates are throwing up: pressure on net interest margin and fight for deposits. Now the fight for deposit is very, very high given the fact that overall deposit growth is on the lower side, but the bulk deposit is creeping up, and that's actually a worrisome factor in a high interest rate scenario, given that pressure on net interest margin will come in due to this. So overall weak updates have come in from many of the lenders. The fight is on for deposits, as I mentioned earlier. They are coming in at a huge cost. Many of them are seeing their overall bulk deposit grow higher than the deposit growth itself. So that will come in at a cost, and that will put the pressure on net interest margin, because the best of interest rate with respect to net interest margin is behind, and you cannot grow your unsecured or high yielding retail portfolio as well because of RBI cautiousness that is there over there. So loan growth has remained tepid for many of them, as the focus has clearly shifted to credit deposit ratio. Now we broke the story in December 2023 Q3 that credit deposit ratio would be lowered as guided by RBI to many lenders, and we are seeing that happening. So majority of them who have more than 85-90% kind of credit deposit ratio are facing the heat with respect to credit deposit ratio declining from them. CASA ratio continued its downward trajectory as expected, as people are shifting away to high interest rate term deposits. So super numbers or strong numbers have come in from AU Small Finance Bank. The overall deposit growth is more than 12% on a sequential basis. Weakest loan growth is seen for J&K Bank, a mere 2.5% YOY growth and just 0.7% sequential growth. Even Ujjivan Small Finance Bank, the overall loan growth is a bit weakish over there, less than 1% on a quarter-on-quarter basis and about 14% on a YOY basis. Now, asset quality deterioration continues, especially for unsecured and the MFI players. They are seeing deterioration in their asset quality. Back to you.
Okay, all right, Abhishek, thanks very much. That's helpful to put it together. Gives us a heads up on what the different issues are at play. Let's take this forward with Nitin Agarwal, head of BFSI research at Motilal Oswal Financial Services. Nitin, good morning. Good to have you on. So, Abhishek, nicely highlighted a lot of the immediate concern and this fight for deposits that we've been discussing for a while, right? Let's get a little more granular, and I want to pick up RBL Bank's example just for our viewers. It also, we need to understand how to cut and dissect the numbers, because if you look at the headline number, the deposit mobilization year on year seems very strong. It's 20% up, even quarter on quarter. There's almost a 6.5% growth in deposits. But then you have to see at what cost are these deposits coming, because the loan growth, again, quarter on quarter has tapered down to just 1.5%. So how should we read some of these updates that are coming through? Because even if the deposit number is rising, what impact is it having on growth? What impact is it having on margins?
Yeah, sure. Thanks, Abhi. Thanks for having me. So starting with RBL, so clearly deposit growth is much stronger for the bank, but we also need to see as to how the loan book is positioned, because the stress that we are looking at right now is so much more on unsecured than in any other retail segments or corporates, and which is where banks are taking a likely cautious view in growing their books. And specifically for RBL, almost 30% of the book is in unsecured loan segments, and they have a significant exposure to MFI and credit card, and these are the segments wherein the delinquencies are running relatively elevated. So to that extent, I think that explains why the loan growth is relatively more muted versus how the deposit growth has been. And of course, we'll get to know the segmental color when the bank report numbers, but this is my reading from looking at that dispersion between the loan and deposit growth.
That's specific to RBL, but let me ask you a slightly wider question to get, the distilled wisdom. Let's say all the updates that we've seen the last 2-3 days, if I were to ask you which are the lenders that are managing to win the war on deposits, the fight for deposits, without hurting loan growth and margins too much, which ones do you think perhaps stand out? Any names?
See, system business growth is moderating. So you can expect a moderation in business growth for most banks. Though within our coverage, if I look at amongst the larger banks, ICICI Bank is relatively well positioned. We have seen bank delivering 18-19% loan growth, and we expect now loan growth to sustain anywhere around 16-16.5% for this year, which is still relatively healthier when you compare it to how the trend has been for other private banks and as well as the system. And alongside, within mid-sized banks, if you look at, Federal Bank is doing a pretty good job so far, one of the better loan growth and the deposit growth we have seen on most of the quarters. And even AU Bank. Last quarter for AU Bank was relatively more muted, and as they deployed liquidity, but this quarter they have bounced back. And there has been a pretty good traction on the deposits that we have seen this quarter. But on the margins, the second point that you mentioned, I think while at the system level we are looking at continued moderation in NIMs at a more calibrated pace, we are already seeing that the pace of NIM calibration is coming off every quarter. But that trajectory, that directionally, it will continue. And probably as you come close to the turning point, RBI cuts the repo rate, then sometime in FY26, you will at least start seeing NIM expansion for some of the banks which are having a fixed rate book. So to that extent, we think banks like AU Bank, IndusInd, and Equitas, they will likely benefit on margin front in FY26.
Okay. So later this week on Thursday, RBI also meets, right? And we have the RBI decision. So no change in no cut is expected, but maybe a change in stance. Most of the developed central banks are sounding more dovish as compared to where they were a month and a half odd back. So we'll see. Nitin, we also had this phenomenon last week of FII selling, right? And on Friday we put up this data for Thursday. Thursday was that 15,000 crore net FII sell number. That bulk of the selling happened in 3 banks, Reliance and an L&T. So ICICI, HDFC, Axis, these are all down between 6 and 9% from their recent respective highs. In your coverage universe, which ones are a buy?
I think, yes, there has been a good selling. Markets are going through a phase of uncertainty. Geopolitical risks are running pretty high. But we continue to remain quite constructive on banks, especially the private banks. In fact, as we speak, today in our strategy note, we have upgraded our stance on private banks, where we believe that these banks are well poised to deliver you mid-teens earnings growth, and the valuation still seems very reasonable. While the stocks have corrected as a risk-off is playing on, but we remain positive on ICICI Bank and HDFC Bank amongst the large caps.
Okay, all right, Nitin, it's always good to hear your thoughts. Thanks a lot for stopping by and filling us in with your insights. But let's get in Nimesh. He's here with a standout brokerage report that he's picked up. Nimesh, take it away.
Hi, Nigel. So today's standout is on IT names. A couple of stocks where JP Morgan has upgraded the stocks to overweight. L&T Mindtree to an overweight, and they've raised the target price on L&T Mindtree to 6,900. And on Emphasis, they've upgraded the stock to overweight, and there they've raised the target price to 3,400. Now, JP Morgan believes that both these names are a good proxy play to the banking and financial services, and that is a vertical which has done well over the last 3 months in the US as well as in other geographies as well, and that could mean incremental positive revenues for these 2 companies. Now, Fed rate cut could also mean a recovery for the mortgage in the US, and that's been also under pressure for the last many months. And if that has to improve, there could be significant tech spends over the next 12 to 18 months. And that is where both L&T Mindtree and Emphasis could be the biggest beneficiaries, because L&T Mindtree has got a 35% exposure and Emphasis has got a 59% exposure to the BFSI segment. And within that, they have the highest in the US banking and financial services space. So on back of all this, an upgrade on both these names to overweight. And L&T Mindtree, as I said, they've raised the target price to 6,900, and an Emphasis target price is to 3,400. On both these names, they've raised the EPS as well as the target multiples, and hence they expect an upside on both these names on the back of the recovery in the BFSI space.
All right, Nimesh, thank you very much for that. So keep an eye. IT services stocks have gone up and gone down multiple times over the last couple of days as we come into this earnings season, but lately it's been more up. Last week, for example, IT and metals were the 2 areas which were higher. First rates, 0.4% up on the Nifty index, 25,118. So, that's a decent start. 0.4 on the Bank Nifty as well. We're at about 51,680, 670 or so. Sensex up 0.5%. Mid-cap index is starting about 0.5% in the green as well. Market breadth, 1,100, 1,150 higher and about 700 lower. So that's the picture at this point. So it's 100 odd points on the Nifty to begin the day with, above 25,100, 25,120 basically. And look at the heat map on the Nifty. Just about 4 or 5 names are in the red, and everything else, at least to begin the day, is starting in the green. Sylvie.
Absolutely. So we do have that move of about 0.5% on the index continuing. Talk about individual stocks. I think ITC is straight away the mover to watch today. Some traction coming in over there with a gain of about 1.5%. Tata Motors, we were just discussing the JLR trends with Prakash a while back. Those numbers look good, working well for Tata Motors. Bajaj Finance, SBI Life, Kotak Mahindra Bank, SBI. These are some of the BFSI names that are starting off on the positive side as well, about 1% up. ICICI Bank as well, 0.5% up. So HDFC Life. Generally speaking, it looks like the entire BFSI complex to begin with is on the upside. Some traction on names like Infi, on Hindalco, again, some of the green over there. By the way, not too many stocks right now negative on the Nifty. The bounce back is continuing. Look for Cipla. Relatively speaking, the so-called safe haven, which is FMCG and some pharma. Sun Pharma, Cipla, very muted right now. Lever is actually not showcasing the kind of bounce we're seeing on ITC. these are more muted. But otherwise, I mean, for now, it's a positive start.
Well, that's right. The stock that's doing well is Heidelberg Cement, because there are reports that indicate yet again, we've heard this multiple times in the last 18 months, but there's a news article, unconfirmed though, that says that maybe it's on the block and there could be buyers. So we'll have to wait by for that. The stock actually has been a relative underperformer. For the time being, it's up close to around 10%. The other couple of names that are doing quite well today, you have DB Corp that's up close to 5%. So good move is what we're seeing out there. Volumes yet to pick up on that stock as well. So keep an eye out on that name. A few other notable movers. NBCC, well, it's up close to around 3% to start off. Macrotech Developers up 3.5%. So good start is what we're seeing on that one. And Neogen as well, up close to around 3.5%. So a few names that are doing pretty well from the broader markets. On the flip side, a few of them are getting clonked actually. So we'll pull them up for you on the screen. Let's get in a few. Rossel India, that's down close to around 6%. Don't know what's going on there. Volume's not very, very high. PC Jewelers is down close to 3.5%. It had that big run and now it's coming for some profit taking. Volume's picking up on that one as well. And Jubilant Pharmova as well. The stock is down 2.5%. But green to kickstart trade, we'll have to see how long we can sustain these levels. For the time being, both the Nifty and the Nifty Bank are trading above their 50-day MA.
No, absolutely. And, there is a lot to track in terms of individual names, etc. as well. So CDSL, by the way, if you can have the name up, is the top volume-led gainer right now. The stock's at about 1420 and has got large volumes in it for this point in the day. Emphasis is at number 2, spot 3% higher, 2940 on Emphasis. So out of the gate looking strong. Heidelberg, Nigel mentioned, that's a big pop coming through, 12% now. So 245 or so. There's Lodha Macrotech, which is up 4. JK Paper is coming up with about a 3% pop. Aventel is up 9%. The stock's just under 200 rupees and has got volumes right now as well. There's Natco Pharma, which is up 3%. And what else? You've got AU Bank up 2-3%. Senco, and you'll hear from the management in a bit from now. Senco is up 7%. So that's a big pop coming through, almost 1,500 on Senco. And actually, we should just look at PN Gadgil as well and how that is opening up and see if that's the other management that you will hear from in a bit from now. I can go down the list, but then volumes start to taper off. This is, bulk of where the volumes are right now. On the downside, apart from what we mentioned, D-Mart is down a little bit more. D-Mart saw very large volumes on Friday, the highest in at least 3 years on Friday, and it's down another 2% or so, 45,000 shares, not small for a name that size at the word go. And KRN Heat Exchangers down 3%, that's a recent listing. Titan, of course, is down about 2%. Titan, outsized volumes in it. Varun Beverages is down about 3%. Stocks at about 562. And so on and so forth. So that's the overall picture right now.
So Aventel, that's a smaller cap company that's now become 4,500 crores of market cap. They came out with their number, so that I guess is one of the reasons why in fact the stock is up and the margins as well fairly good. I recall we covering this company 5-6 years ago when they used to do close to 50-60 crores of revenue in a year. In the past quarter, they did 75 crores. One of those defense companies that they were putting in money and doing a lot of research and the numbers are not showing up. Now I think those numbers have started showing up, so explains why that one is moving up and volumes high. So we're just addressing that name.
Absolutely, and we should we'll try and have them up on the back of the numbers a little later on the channel as well. Gautam Shah is with us, founder and chief strategist, Goldilocks Premium Research. Gautam, good to have you with us here. Thanks for your time. So we've seen a 1,200 point sell-off in 4 days flat, Gautam. And I was saying earlier that these are part of the game, but we're not used to these now. So it seems the shock seems a little bit larger. What's your sense? Price structure, price action? Where are we near term?
Good morning, Prashant. I think that's the problem, that we have now been wired to believe that every time the market corrects, it will find support levels quickly, turn around and go on and make new lifetime highs. But if you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. Most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Now, you could allude it to many factors, the return of China, geopolitics, FII selling, a lot of factors can be looked at. But honestly, looking at the charts, it does seem as if this is not a garden variety correction. Because I think last month you had a scenario wherein the large caps and the headline indices did extremely well, and the small caps and mid caps did absolutely nothing. And the manner in which the indices have come off, the fact that some key levels have been broken quite easily, I do get some sense that the recent high could be a short-term top. So while there is scope for some pullback, which is happening today, and it could extend to maybe at best 25,500, 25,600, I do believe that the markets have got into a multi-week, maybe even a multi-month consolidation. Not to say that we will collapse. I think the domestic liquidity angle will keep the market protected, but I'm pretty sure that we are not going to make new highs in a hurry. And I don't see leadership, because banks are back in a difficult space. Reliance has lost its way almost completely. It's just the IT index which is hanging out, and the metals index which continues to be positive. But on an overall basis, the market has got internally weak, and therefore the next few weeks will be challenging.
Okay, so next few weeks will be challenging. Maybe this is not over. I'm very curious to understand what's a garden variety sort of correction in China. Gautam, morning, Surabhi here. We've heard of spinning tops and this, head and shoulders and all of that in technicals. What is garden variety correction?
No, from a Chinese perspective, I think we've been in a downtrend for 3.5 years, and from a valuation perspective and the allocation that China got over the recent years and what India got, I think it had come to a point wherein the snap out had to happen, and that snap out has happened. When I say garden variety, I mean that we are used to seeing a 3, 5, 7% sweet correction. The market scares all of us, comes back to support levels, turns around, and therefore, all is well very quickly. This time, all might not be well quickly. And that's probably the reason I'm saying that it is slightly different to what has happened in the last 12 to 15 months. So prepare yourself for slightly more difficult times and don't jump at the first sign of weakness or strength to buy the market.
Oh, that's really important, Gautam, and I'm glad that you put that on the table very clearly. Now we understand it's not a walk in the park correction. It's not a garden variety correction here in India, probably. So in which case, immediate levels, and then how do you expect this to play out? Because you're right, the market's forgotten what a real correction looks like. 5% down, and there's this gloomy feeling out there. What are you expecting next in terms of levels? Just how will this play out?
See, I think the market breadth has been weak for the last 4 weeks. I think the number of stocks which are actually supporting this market, the number of stocks making new 52-week highs, that had reduced considerably. And given the geopolitical situation and given the way crude is placed, I think crude and dollar index are two global factors which I think will play a very important role to what global equity markets and India does over the next 2 months. I feel there is a high probability of crude actually flaring up $10, $15 from here. So that's one risk which I think the market is trying to discount. But coming back to the levels, I think the 24,800 number is quite important from a near-term perspective. If that were to break, you might have to be prepared for levels of 24,000. But in the last 3.5 years, since the time we started rallying from the COVID lows, we've seen multiple times that the Nifty has done nothing for many weeks to many months. So it's not really a surprise. And I would be very happy if over the next 2 to 3 months, we just stay in this 24,000, 26,000 band, oscillate between greed and fear. What has to correct, which is extremely richly valued, will correct, and top quality will continue to sustain and continue to attract good money.
All right. Hi, Gautam. Good morning and good to see you, Ben. Let's talk about the largest constituent on the Nifty. That's the banking names. The Nifty Bank gave some promise. It gave us the feel it wants to go past the 55,000 mark, but then it's seen a sharper correction. What's the view out there? What are the markers you're looking at in the levels on this index?
Well, that's been the problem, Nigel, because every time the Bank Nifty does well, we start feeling that we are getting into a multi-week, multi-month kind of a uptrend, but it falters. And the problem is when these 2 or 3 heavyweight stocks don't sustain at high levels because of FII selling or whatever reasons, people attribute to, I think that's the problem, because when the banks don't do well, it's difficult for the Nifty to run. And given the way it's corrected in the last 5 to 6 weeks, I think the structure has spoiled once again. And I would say it's a high probability of the Bank Nifty coming down to levels of 49,500. And if that were to break, you could see another 3, 4, 5% correction on that index. So banks is something which I feel
it's not going anywhere. It's not going up much and it's not going down much. But I think the two major pockets that we like in today's market, where I think one can look at longs, are metals and IT. I think these are the two places to hide while this difficult corrective phase continues for a while.
Metals and IT are hiding spots. Okay, let's talk about individual names, Gautam, if you will. From a positional point of view, what looks good?
Well, I think the entire metals basket saw a lovely breakout 10 days back. I remember, last month we were discussing that the fundamentals were not great on the ground. So how can the metals index do well? And then you had the China news flow coming in, and that pretty much triggered the breakout, not just for metal stocks here, but worldwide and including the China comeback. And I do believe that the metals index has the potential to deliver 25% upside from current levels over the next 1 year. So if you look at all the top stocks, led by Hindalco, JSPL, JSW Steel, SAIL, Nalco, Tata Steel, the entire set looks very good and I think is likely to stand out. So if you're booking profits in some other pockets of the market, I think metals and IT is the place to be in. And in the IT, I want to stick to top quality. I don't want to go to grade 2, but I think Infosys, TCS, HCL Tech, Tech Mahindra, I think are good pockets to be in.
You mentioned crude, Gautam, crude and dollar, two key things that you're watching. Tell us the other indicators. I mean, on China itself, I don't know what you've seen on the charts. I mean, the Hang Seng, for instance, has pulled back 32% in the last 1 month. It's a ferocious comeback, right? Do you see that kind of strength continuing in the Chinese market? And what else? I mean, what else could be very critical global indicators to track from our perspective?
See, I think this China comeback is durable. With whatever little I have an understanding on China and Hong Kong and from the charts, I do believe that this underperformance had to get corrected and it's now happening. And no wonder the FIs are excited because they have a market which is, very, very cheap even at these levels. They have their own issues, no doubt about that, but it's still cheap in the global context. And looking at the charts, I do believe that the Chinese market can appreciate 20-25% quite easily, even from current levels. There could be some near-term correction, but the overall trajectory is clearly up for China and Hong Kong. And I think if you look at the crude, I think 65 has been a sort of a base level for crude for the last 1 year. And we've rebounded from that multiple times. And given the geopolitical situation, which can easily get out of hand because nobody really knows how that's going to pan out. But the crude chart is telling me that you could easily go back to levels of 90-95. And if that were to happen, I think it's a key risk for India. And if you look at dollar index, it's had a beautiful inverse correlation with the S&P 500. And with the comeback of the dollar index from levels of 100 last week, it looks like, even this index is going to move towards 106, 107, maybe even 110. If that happens, I think the US markets will also correct because US markets have shown a lot of resilience in the last 1 week and handled the geopolitics really well. It might not be the case over the next 2 to 4 weeks. Okay, all right. Well, Gautam, you're sounding fairly cautious on the Indian markets early this morning. Crude spiking, dollar index moving up. Well, it'll be good if we can hold on to the 24,000 mark, I would say, give and take everything if this has to come through. Let's talk about the biggest party in town. It's been in the mid-cap space, right? What's the view on those indices? Because if the headline index is going to be under pressure or going for a bit of consolidation, then we could see a bit of a pullback out there. And that's been the index that's really run up. So your view? I'm quite concerned about the mid caps and the small caps, to be honest. We put out our big picture report yesterday, wherein we put out so many pointers as to why we feel that mid caps and small caps could potentially be topping out for the near term. And I think they need a multi-month correction or a consolidation at least before things can get back on track. We've all discussed it in the last 1 month that based on narratives, stocks were doing well. Based on Excel sheets of the next 10 years, stocks were doing well. I think there is a reality check which is now coming up. And I think anything that is substandard in the mid caps and small caps will come under serious selling pressure. But the top quality, the top 50 names in mid caps and small caps, I think will stand out. But the chances of a 7 to 10% correction in the mid cap and small cap space looks quite likely given all that has happened in the last few months.
Okay, so once again, since we need to pad up for the slightly longer haul, metals and IT, anything else? And now I'm asking about someone who's looking for that dip, right? There are so many people complaining the market's not correcting. So this is happening for anyone looking at medium-term portfolio creation, say the next 2 years. Apart from metals and IT, what else would you advise, Gautam?
Nothing at all, Surabhi, because, we do a sectoral analysis, and I think a lot of earlier outperformers like auto could have topped out, real estate could have topped out, PSC could have topped out. This entire basket of mid caps and small caps are looking a little weak. Pharma, we like it from a 2-year perspective, but near term, it's looking very stretched. FMCG has seen some negative signs. So actually, I don't see too many places to hide. And, the funny part is people wait for that correction, and when it comes, people back off. I mean, that's what psychology and sentiment does to all of us. But let's keep our numbers in mind. The good thing is this is not a major trend reversal. This is still a larger correction within the bigger bull market. So I think if we do nothing over the next 2 to 3 months, and if the results season, earnings season go off well over the next 2 to 3 weeks, then we are on our way, because the Nifty is still at a 24 PE. And over the last 30 years, we've never seen a major top at a 24 PE.
Got it. All right. Thanks a lot, Gautam, for joining in and giving us your insights into the Indian market. We look forward to chatting up with you rather soon. But let's get straight to that exclusive conversation I had with Mr. B.K. Goenka, the chairman of Welspun World. He says that he expects the group's revenue to triple in the next 3 to 5 years. In an exclusive conversation, he also spoke about the group's focus areas, the capex plans, and what kind of leveraging plans they're comfortable with. Let's hear out a few excerpts from that conversation. What the market wants to understand is, what is your vision ahead? Because you seem to be hitting the right spots. But what kind of delivery are you looking at in terms of revenue for the group, in terms of market capitalization? Where do you see the group headed, give and take all the investments that you've made across textiles to piping to infrastructure as well?
So 3 years back, Nigel, we had a visioning exercise at a group level, which we do every 5 years, what we have to do next 5 years. And we saw that we have been so much concentrating on export market, global market, and when the whole world is looking at towards India, and we came out with a new coin that Har Ghar Se Har Dil Tak Welspun. And when we're in so many products, so many different activities, and India is a right market.
Yes.
And we said that we want to be in every heart in India with every Indian, And can we touch 101.4 billion people heart somewhere or the other when we are making Welspun products across our different range, different companies, what we are doing. So we are very clear that we came out with a clear vision of 3G. The growth with governance, and with the green. When I say green, is sustainability. So we are very clear that how we can become 3x from here, and that growth is only possible when you have right governance and right kind of sustainable effort across around you, whatever you're doing.
I mean, I'll press you a little bit on the governance as well as on the green aspect, later on. But tell us about growth. When you talk about going 3x, what should the group revenues look like? Currently, you're around 35,000-40,000 crores odd in terms of revenues, while the group market capitalization is roughly around 45,000 crores. So where does that number go in the next 2 years from here?
So market capitalization is the outcome of whatever we are doing. Let me talk about the the growth plans. We have a very clear roadmap for next 3 to 5 years that how we can become from here to 3x.
Okay.
How we can become a 1 lakh crore group at the top level revenues.
Yes.
And we have a plan for our Welspun Corp, where we have a DI pipe, we have a large diameter pipe, we have a expansion in Saudi, we have expansion in USA, we are doing expansion in India.
Right.
And plus, we have recently acquired last year was Syntex, which is a huge growth plan. And we all know that how the overall building material is. And Syntex is a well-known name in the country. I mean, when you talk of a storage tank or water tank, you say Syntex leke aayi.
Indeed.
So Syntex is a very well, it's a synonymous with water tank.
Lovely. So we've got that in terms of a revenue. But I'll have to push you about the market capitalization. I'll tell you why. Because the promoter is normally the best analyst of his own companies. So given that currently you're at around 45,000 crores, if you can get to that goal of tripling your revenues from year on in the next few years, where do you see the group market capitalization headed? Say in 3 years from now, can you see it also hit the 1 lakh crore in terms of market capitalization?
See, as far as market cap is, as I said, it's all outcome of what we are doing. We are going to do whatever is the right thing for the shareholder, unlocking the shareholder value.
Right.
Be it through the governance, be it through the right kind of expansion, be it merging or demerging or selling or buying, whatever is to be done, which can create the values for the stakeholders and shareholders across the group. And when we are talking of 3x of top line, I think automatically it has to reflect somewhere in the market cap.
Got that. Governance, that's another point that you made. And that's something that your shareholders and investors, they're looking forward to. Because there is this perception, about various companies. And in a bull run, everyone does well. However, when the markets get a little bit tepid, various groups are left behind. So could you tell us what have you done with regard to governance or to put that perception out that you all mean business, you're going to be rewarding your shareholders and you're here to do India proud?
So governance is a journey. It's not a one-day story, and it's we have some kind of a 3 decades history behind us. And what we want to do going forward is that each company is independent. Each company is run by independent directors, which are responsible for the growth as well as the right kind of in creating the trust. And moreover, I think it's important that each company is headed by a professional people, so that it's a clear-cut path that how the growth will coming in the future with the right kind of people around you, because ultimately it is people who matters.
Got it. And to get to this revenue growth targets that you're talking about, you'll have to put down money, right? And people get a little bit skeptical when a promoter comes in there, puts in big capex. So what's the big capex plan you've lined up for the next few years?
So as you know, overall, if you see the capex plan, what we have already announced in various companies at a group level, we are doing around 10 to 12,000 crores in our home textile, in our pipe businesses, in our Welspun Corp. And as far as Welspun Enterprise with infra companies, it's a different thing, which is like a projects. So expansion plan is primarily in these 2 companies, which is going to taking the shape in next 2 to 3 years. And from here, how can we, Welspun Corp can have a 3x revenue? How can be, the EBITDA can be become double from here? So that's what our plan is for next 2 to 3 years.
And when you have 10 to 12,000 crores of capex that's lined up, what is the current net debt number or the net debt to EBITDA number, and where do you see that number headed? You must be having a threshold, right?
Yeah, we have a very clear policy within the group about the debt equity, about the ratios, about EBITDA to debt. And when you see today at a group level, we have a EBITDA of around 4,000 crore plus, and our debt is less than 2,000 crores. So it's a 0.5 to the EBITDA. And I think maximum in the next 1 or 2 years, it can go to 1:1, which is, I think we are very comfortable in times to come.
Well, do catch the full conversation with Mr. B.K. Goenka at 4:30 p.m. here on CNBC TV18. Well, time to slip into a short break. On the other side, we'll be joined by Mr. Sen of Senco Gold, as well as Mr. Saurav Gadgil of PN Gadgil Jewelers. Stay with us. We'll put the focus on the festive season.
$10,500 crores of selling in a single day from FIs, 10,500 crores on Jan 17th. Again, August 5, 24, we saw nearly 10,000 crores of selling in a single day. So is on Jan 18, nearly 10,000 crores. And September 30, we saw close to 10,000 crores. So these are the 5 large selling days as far as the FI selling in a single day is concerned. But again, as I said, this is kind of a record for us as well. But if you look at this week, in the last 3 trading sessions itself, the FIs have sold nearly 26,879 crores. That's the kind of number you've seen only in the last 3 days, and that's also because China has been done phenomenally well in the last 1 week. To this week, it's shut, and that's the reason why. However, this year, the FIs are still net buyers, but that's largely because of the block deals. That is close to 70,000 crores. So that's the FI number for the whole year. But as I said,
Welcome back. Well, it's Corporate Radar and it's time to talk jewelry, considering we are getting into the thick of festive season. And of course, there are lots of company-specific updates that have also been pouring through. So the focus continues to be on the sector. We have with us Mr. Suvankar Sen, MD and CEO of Senco Gold and Diamonds. And also we have with us Saurabh Gadgil, MD and CEO at PN Gadgil Jewellers. Gentlemen, thanks very much for joining in. Suvankar, if I could just actually, before we start talking about the sector as a whole and demand trends, etc., since we have you, and I just want to, get this out of the way, because you've done some fundraise. You're raising, I think, close to 500 crores via equity capital, QIP. So just tell us that about that first. What's the requirement? What's the need? Why do you, what is your growth plan? And then, of course, that will give us a nice segue into the overall conversation on growth expectations.
We would need it for working capital. And, every year we have plans of growing 18 to 20 stores, as we have been planning for the last 2-3 years. 8 to 10 stores will be company-owned, company-operated, and 8 to 10 stores will be franchisees. So, how do you open the stores? You get the funds either from the banks or, you get it through equity. So that is what we basically would like to use for. And, in the month of August, when we saw the duty cut happening, there was a decent increase in demand, and we could see that the consumer demand for jewelry was in a very good state. So we thought that these funds will only help in our growth and expansion and for the supply chain for working capital. So that's how we would like to look at it.
Okay, so it's largely for working capital use. And also, what is the store rollout plan as of now? I know your second quarter update hasn't come in, but in general, I mean, what's the kind of broad growth expectation you're working with for this year? And the store rollout plan. Then also you had, plans to expand on the lifestyle side beyond just the pure jewelry segment. So will some of this money be used for that as well?
Yes, surely, because we've opened about 4 to 5 stores on our new brand that we've launched called Sensex, which is going to focus on lab-grown diamond jewelry, leather accessories, and perfumes is something that we're launching as well. So those will be certain stores that we will open either exclusive or within the store also. We'll keep a few products. So that is there. Plus, we've in the Q1, we had opened 4 stores. In Q2, we are opening we've opened about 4-5 stores. And that's the whole thought that, throughout the year, we should be able to open about 18 odd stores. So there are many on the pipeline. The festive season is around the corner. So that's how, and in terms of growth expectations, there have been a lot of, I would say every month was kind of some event or the other happening, whether it be a duty cut, whether it be a gold moving on to all-time high. So our growth expectation would be, as we began the year with the 18 to 20% growth, but 15 to 18% growth, around 18% is what we are hoping for, because the gold price itself in value terms has gone up. So that is what is going to keep us going. So that's what, we've been looking at.
Gentlemen, good morning. Prashant here, and good to have both of you here. I mean, the segment, the jewelry retail segment is one space which markets are bullish in a pretty secular way. And Senco, of course, has been the poster boy in that sense from the smaller players list. And Mr. Gadgil, I think, you also sort of entered the space from a listed perspective. So very interesting. Just a quick word, if I can start, just to complete that point earlier, Suvankar, what is the expansion that you talked about, right? You've got 165 stores, about 100 which are company-owned. This expansion will be largely in the eastern part of the country again?
Yes. See, we've been, focusing in a manner, we need to understand where our strengths lies. And, the low-hanging fruits where the probability and possibility of a higher return on capital would be there is through East. So around 50 to 60% of our expansion will be in East, and about 25 to 30% of it will be in North India. So that's where our geographically we are focusing upon. And the remaining 10-15% will be in the Western and the Southern markets. So this is where, and how we would like to grow.
Okay. All right, let's get to some of the festive-related demand and what we are seeing out there on the ground. Saurabh, if I can come to you to tell us, what have you seen? I mean, this is officially we've kicked off a festive season with Navratras last week. What's demand been like, and what can we expect?
The Q1 results which is announced today, and Q1 has been very positive. We have shown a great growth both in volumes, value, and impact. And I think post that, the market looks to be good. Like Suhankar just mentioned, every month has been a month of highlight, and August duty cut had been seen record sales pan-India. We had seen a huge jump in sales also in the month of August. September again was the month of Ganpati, a festive month, and that was the month when we got listed. So it's been a good run till now, and the next 2 months, being the month of Dussehra and Diwali, should really be the months of extremely good sale across all the stores. The price hike which has been recently seen has not been a dampener as far as demand has been concerned. I think that the old gold exchange factor could go a little up as people would prefer to use old gold as a currency to buy new jewelry, but the demand would remain strong. Festivities like Diwali have always been a highlight for the jewelry industry. Consumers not only buy it from the point of view of festivities, but it's an emotion, it's a feeling, and I think the same would be seen this year. The start for the season has been good. It's just been a 3 days of Navratri, but it's been on a positive start, and I think that the season looks good ahead.
All right. Hi, Saurav. Good morning and good to see you, Ben. Could you tell us what's the gain on the unhedged gold and what proportion of your gold is unhedged as of now, and how do you see that number changing?
Unhedged gold, is reduced drastically now because we have implemented the hedging policy. We have moved to gold metal loans. So I'll talk on detail on the Q2 update. But to summarize it, we have been moving, as mentioned in the IPO plan, to gold metal loans and MCX. So we would be around 80-85% hedged as we speak.
Got it. All right. Give us a couple of more details then. What's the revenue share from the studded segment, and where do you see that number headed?
So revenue share has been 10-11% studded out of the total revenue, and that we've seen is growing at a decent rate. The aim for that is to reach, upward of 13% for this financial year. It's on track. The sales have been good. We have been adding a lot of categories also to the studded category, to the studded segment. Diamonds, precious stones have been there. We're also getting a foothold into the Kundan side, Polki side. So all this should be adding to the aim of reaching 13% plus this year in studded category.
And I think, Suhankar, you also guided earlier that you want to take up the studded share by 1 percentage point every year, right? I think that's been the guidance which you've put out. Just a quick word on the festive season and expectations thereof, Suhankar, for you at Senco. I think you'll have to unmute yourself, Suhankar. I think we can't still hear you.
Yeah, is it audible now? Sorry.
Yeah. Yes.
So the festive season looks positive. August was a great month, but when we came to September, the first half of the September was a very good kind of a demand, but towards the second half, when the gold prices started moving up a lot, we could see that consumers had gone into a wait and watch mode. But what we are trying to do, through various schemes and offers, is taking money in advance, saying that, when the festive season, the Navratris have started and the Diwali Dhanteras time will come. So then the consumers can pay the money in advance, and then later on, whether the price becomes lower or the price at which they had booked, whichever is lower, the consumers would get the benefit of that. So we are trying to come up with various payment schemes and making it much easier for the consumers to buy. And also one more thing we need to keep in mind is that the price is moving up. The need of the consumer is to provide and get the jewelry which is within their budget. So the bridal wedding season will start in November. So we are planning to make jewelry which is lightweight within the budget of the consumers. Then the everyday wear jewelry in diamond and gold, that is something that we are focusing upon as well, because many people look forward to the season to buy their annual jewelry purchase, whether it be for working women or their purchase for the home, traditional design or modern. So we are trying to provide all kinds of necessary variety to the consumer. And more interestingly, the men's jewelry, that is 15% of the market that we are all focusing upon. And Aham is the brand. So we will be launching new designs. Suddenly you realize during the festive season that men's of all ages, not only young, but even middle-aged, people they start buying their chains and bracelets for the festive season. So we are very conscious of what all will be needed for the season, and we are providing accordingly. So that's how it is.
Got it. You know, Suvankar, I think you'd mentioned that the lab-grown diamond is getting a lot of continuing coverage, right, in the media, especially with regards to what's happening in the diamond sector, lots of job losses and stress in that part. I think you also mentioned late September that it is taking a toll, but for the segment of diamonds that you're operating in, it's not really made much of a difference. Is that correct?
Lab-grown diamond makes a lot of sense when the size of the diamond is bigger. So any diamond sizes which is 50 cent or 1 carat and above, that's where you can see a big price difference between the natural diamond and the lab-grown diamond. But the segmented diamond jewelry that we are mostly working upon, almost 75 to 80% of our diamonds are, it's like those small diamonds that you see that is used in the jewelry, which we call it -11 or -8 sizes. So 1 cent, 2 cent, 3 cent, 4 cent. So those small sizes. So that is something which has not got affected by the lab-grown diamond jewelry. But at the same time, these lab-grown diamond jewelry is becoming like another niche segment for, say, either a destination wedding or, your fashion. Someone might have a solitaire of a, round diamond. They want various shapes, princess and pear and this and that, heart shape. So then they can try out their fashion aspiration through lab-grown diamond. So this is how that segment is kind of playing out for the consumer.
Okay. All right, gentlemen, good to have you in to discuss the trends and, of course, the growth projections, which look all very, very promising for some of the listed jewelry plays here in India. Thanks for joining in. But from jewelry, we are moving on to something equally exciting, if not more. I mean, the cutting edge of new technology, semiconductors, and, of course, what the country is hoping to achieve, the kind of work that's already underway. Now, India's semiconductor manufacturing push continues. The government is aiming for end-to-end electronics manufacturing ecosystem in India. To talk about where we are and how long would the journey be, what are the critical ingredients that would be required, we have with us Krishna Murthy, former CEO of India Electronics and Semiconductor Association, as well as Raghu Panikar of Keynes Semicon. Of course, Keynes is already in the fray. They are looking at setting up their own facility in Gujarat. I think it's in Sanand. It's an OSAT facility. So, Mr. Panikar, if I could actually start with you, because I think now we're trying to attack all spectrums. It's not just about packaging, but for instance, with the Tatas and the tie-up that they've done, we're looking at the first fab facility, CG Power, which is also setting up a facility like yours. I mean, they did a small technology acquisition because I think they want to look at even designing. I mean, so the ambitions are really, really growing. How would you sum up the hectic pace of activity that we've seen in the last couple of months, and really how quickly we can, get along the whole manufacturing curve? And is end-to-end really possible for India?
Absolutely. So if you look at, Keynes Technology, the mother company has been around for the last 38 years with a $250 million revenue and a $3.5 billion as a valuation. We had the chances to do a lot of EMS post-IPO, but we decided that there are two items within an EMS which attract a lot of, import duties and stuff like that, right? So those are semiconductor components. Second is the bareboard PCB. Now, to overcome those challenges, to make India self-reliant and all the made in India and stuff like that, Keynes Technology, under a subsidiary called Keynes Semicon, is setting up the outsourced semiconductor assembly, test, and packaging. And there's a very bold step. A couple of others have taken. The government has approved a project for close to 3,400 crores. And we are on a path to build that facility. And I believe that, and I always say this, in my lifetime, if I'm able to do this, nothing best like this.
Got it. Just to complete that point, and of course, it'll be great for the country as well as you and others pick up on this. Is this the first step in terms of getting into the full ecosystem, Mr. Panikar? I mean,
absolutely.
The OSAT bit?
Yeah. If you look at India, we have been a powerhouse in design. For the last 30 years, we've been ruling the semiconductor, the VLSI design. It's high time we look at, the front end of the back end and the back end of the back end, which is nothing but fabrication and OSAT. So, with that in mind, if you look at, Tata is putting, Adani is putting a with a wafer fabrication, and like us in Kane Semicon, we are looking at the OSAT. It completes the end-to-end chain, and thereafter is the EMS and all that stuff.
Got it. Could you break up the, I mean, as you say, end-to-end? I mean, could you break up the value of the end product in terms of the various phases that it will go through?
Yeah.
Give us a broad sense.
Okay, so the design part is pretty much the design part of it, right? And that brings in a whole value chain as far as the semiconductor is concerned. And post the design, the database goes into fabrication, and that's where even though we had a government entity called Semiconductor Complex Limited, which was doing fabrication for ISRO and DRDO. This is the first time we are bringing this more on a commercial standpoint. So that's where the fabrication would come in, which is being done by the Tata with a partner in Taiwan and Adani with a partner in Israel. Post that, once the wafer is fabricated, it comes to the OSAT for the cutting, dicing, assembly, packaging, and testing. These are the 3-4 processes that would happen in an OSAT. And we being in the services domain, this augurs well with what we want to do with semiconductor. Post the OSAT, once the semiconductor product comes out, it then goes into the market. It goes to the distribution channel. And from the distribution channel, it comes to the electronic manufacturing services or the contract manufacturers like us. It comes to us. We do the assembly of those bare boards, putting the semiconductor, you get an assembled board, and from there, the subsystem and to a system. So that's the entire chain, the way the system design or the VLSI design happens.
Now, Mr. Panikkar, so that's obviously, the way the chain works. Now, from the government support side, I think right now the support is to the extent of 50% of the capital that's being deployed, right? Whether it's an OSAT facility or, several other stages of this manufacturing cycle that you described. That does sound like a pretty handsome push. Is there anything else that you would need from the government? And while a lot of players have shown interest in setting up the OSAT facility or the testing and packaging facilities, what would be needed to really drive the momentum on the fab side, on the designing side, more tech transfers? I mean, there's, of course, at a country level, at a security level, we've seen the collaboration with the US, for instance, during Prime Minister Modi's latest visit to the US. So what else would be required to address the higher end of the cycle?
Yeah. So, so far so good, honestly. And as you rightly mentioned, 50% subsidy is a decent push for any of the industry to come here who has a prior experience in electronics. Now, 50% subsidy by the federal government, the central government, and somewhere around 20 to 25% with various states government, in this case, Gujarat, Sanand, this 20%. With a 70% subsidy, I think we get a good push with the 30% of the money that we have raised. It's a good push for us to put an OSAT plant. Now, you asked a very pertinent question, is this good enough? I'm sure at this point in time, yes. But then, there is a whole lot of ecosystem that you have to develop. It's just not the manufacturing. You need the raw materials. You need the gases. You need the chemicals. All these needs to be localized. And some of the foreign companies needs to be attracted. There's a substrate manufacturing that we need to do. I think the government is doing all that. In the last Semicon event, and I was fairly surprised when 50 CEOs came and sat in one room talking to, the senior minister and talking about what India is doing and stuff like that. That's where the OSAT is concerned. Now let's come to the fab part of it, which you had a question. That's a higher capex intensive. That's a big value of machinery that is required and technology that is required. There, yes, we need to be collaborative with US and Europe, unlike OSAT, which is more of Southeast Asia dependent and stuff like that. So, I think the last visit of the Prime Minister, meeting the US President and doing a MOU with the technology which will help our the defense and stuff like that is a first step in the right direction. We ourselves are looking at advanced technology like co-package optics, and we have invested in a company called Mixtech, and that's a company which has a wide pedigree of doing co-package optics in Intel and Broadcom. With that know-how, we're going to bring those process and technology in OSAT to India.
For OSAT, the subsidy is about 75% now, right, Mr. Panikar?
Yeah, hovers between 70 and 75, depends upon which state you're talking.
Okay, and between Fab and OSAT, what are typically margins like?
So I would primarily focus on OSAT part of it. We have studied the EBITDA and the gross margin world over with the top tier OSAT companies and stuff like that. There again, there are less complex technology. In the higher complex technology, the less complex attracts a single digit kind of a margin, whereas the advanced technology attracts a larger percentage up north of 15 plus. So, when we wrote the business plan, looked at three technologies, the less complex, the medium, and the advanced. So that, very soon, we don't want the government or India to think we are just focusing on the less complex. And hence, we want to look at the mid-size complexity, which is called the BGA, flip chip BGA, and the advanced technology, which could be co-package optics.
Mr. Panikar, so the Fab, of course, is the higher value add and more complex, more capital investment, more technology, etc. Would the OSAT downstream businesses, what you were trying to do, is that dependent on some of the local Fab units coming up, or this will start generating revenues for these individual companies? I mean, how would that work?
Yeah, so good question from a downstream standpoint, right? At the end of the day, you manufacture something. If you cannot effect a change on the pricing of the end equipment or the end OEM, it wouldn't make sense because you're not doing manufacturing just for the sake of it, right? So let's take an example here quickly in the next 10 seconds. Let's say to take an example that, Keynes Semiconductor plans to do a package which goes into a power module. Now, the power module for the EMS of that is done by us. We bring down the prices of the power module using our packages because, we can bring down the price of the power packages. With the module going down, it goes into an automotive OEM and thereby affecting the prices down of the two-wheeler EV and stuff like that. And these kind of stuff that we have to start looking at. A similar example can be given into, the fan market, which is driven by the BLDC controller. We are looking at microcontrollers to be packaged in India and stuff like that. So net, if the downstream effect has to be created, wherever we do the...
Actually, what I meant was, you were upstream for the end user industries, but I meant is you were downstream from a Fab point of view, right?
Yeah.
So without the Fab ecosystem here, are we talking about importing wafers and then, how is that going to work? What is your raw material in that sense, in the OSAT?
Yeah, so the input to OSAT is basically the wafer. You have to look at...
So for that, do we need some of these units which Tata's, Adani's are working with to come up?
Yes, we would need them. At the end of the day, I'm sure it will take 2 to 3 years because bigger fab to be set up, production to start will take time. But from an OSAT standpoint, the gestation period is quite small compared to that. So in that sense, we'll have to start looking at wafers from the multinationals like the TI, like the NXP, like the Infineon. Get those wafers, start manufacturing in India and export it. Some of the wafers we should take and look at the local market and stuff. But yes, wafer would be an important part as far as the OSAT is concerned.
All right, Mr. Panikar, thank you for joining in. This is good perspective, helpful, because this obviously is one of the most important emerging sectors for India. And of course, we wish all the players the very best, considering how critical semiconductors are for overall digital and electronic security. Let's take a break on that note. And as we take the break, India's most coveted leadership awards, IBLA Awards, presented by CNBC-TV18, will be back for the 20th edition later this year. The awards, which aim to honor the visionaries behind outstanding business, will feature a star-studded jury, which features Bharat Forge's Baba Kalyani as the jury chair. The other jury members include Ashok Aswani of Kotak Mahindra Bank, C.S. Shetty of SBI, and Standard Chartered Bank's Zareen Daruwala, Asian Paints Amit Singhal, Apollo Hospital Sunita Reddy, and L&T's R. Shankar Raman are also part of the jury, along with Titan Capital's Kunal Bell and Cognizant's Ravi Kumar. You can meet the most influential and credible jury at 5:30 p.m. today only on CNBC TV18.
We need to take into account. Now, CLSA put out a note just 1 week back, and this is what their view was. They believe, the selling can intensify largely because 90% of the money in the emerging in India comes to the non-India dedicated funds, which is the EM funds, and that's where the large supply is going to be. So there is a risk of selling India to fund Chinese market, at least in the short term. That's the CLSA view. And on back of that, they've identified few stocks. In fact, they say that they've seen a similar correlation when India got sold into, when the Chinese market rallied in November 2022. They've identified few large cap names which are vulnerable to sell off if this money moves from India to China. Within the PSU basket, Oil India, IOCL, these are the few names to track. Even BHL is what they are identified, which can see selling pressure. Godrej Properties, Bajaj Auto, Ambuja Cements, Macrotech Developers, and Voltas. These are the few names which are vulnerable to FI sell-off, largely because there is a FI holding and the stocks have done well. But clearly, this was a week when 20,000 crores in a single, in just 3 trading sessions. So that's the kind of sell-off we've seen from FIs in just 1 week.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo, as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side. And you need a sizable fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.
Actually, I don't think it's a bad thing if China market does well for us, as in mostly for India. It is not bad for India per se. I don't think that beyond some shorter term thing, investors have to sell India to buy China, because India, I don't think
Okay, welcome back. We've got the market up 25 points, which means that we've dropped quite a bit, almost 100 points, I think, from the day's highest level. The day's high was 25,140, and we're at about 25,40. So yeah, but I mean, clean 100 points off the day's highest point. Nagaraj Shetty, Senior Technical Analyst at HDFC Securities. Nagaraj, good to have you with us here. Thank you for your time. What would you want to do? I mean, 1,200 points in 4 days, the Nifty gave up, and we got a bit of a bounce, has been sold into. Would you buy this one here?
Yeah, a little bit confusing at the lower levels. Though market has declined sharply, there is a cluster support around 25,000 to 24,900 levels. And previously also on the weekly chart, though market has declined sharply from the higher levels, Nifty has not crossed below the weekly 10-period EMA over the last 9 months, more than 1 week. So this week, last week, we have already closed below that. This week is going to be interesting. I'm expecting an upside bounce from here onwards. That upside bounce needs to be a reversal from the lower levels. Still, the reversal is not coming. Market is selling at the higher levels. The long lower shadows over the last 3 sessions is indicating that intraday rises are being sold off. So we need to be cautious at the lower levels. Once the Nifty, as far as longs are concerned, once the Nifty sustains at the lows around 25,000 to 24,900 levels, I'm expecting around 300 to 400 points upside bounce in the near term. So one need to be cautious at this point of time whether Nifty holds is going to hold around 25K or 24,900 levels.
Okay, Nagaraj, what about individual stock trades? What are the ideas?
I have two stocks from a mixed side. First one is the Home First. Home First was outperforming the benchmark Nifty over the last couple of sessions. It has bounced back very well. The long-term charts are also looking positive. Higher tops and bottoms are indicating the inherent strength in the market. Currently trading around 1290. I'm expecting this stock to move up. The next overhead resistance to be watched is around 1380 levels in the near term. Second one is on the sell side, short side. On the downside, LIC Housing Finance is looking weak. Recently, it has moved into a distribution kind of a pattern. It was holding around 200 EMA, has broken below that 200 EMA, currently looking weak. Now trading around 620. I'm expecting a further decline for the stocks. 580 is going to be the next supports to be watched for the stocks in the near term.
Okay. All right. Nagaraj, thank you very much for giving us some of those cues and some trades at 10 a.m. Let's head to Nimesh now to once again take stock of the standout brokerage report of the morning. Nimesh had pointed out some interesting names from the IT side. So how's it looking, Nimesh?
Well, Sylvia, both the names are buzzing in trade. The biggest F&O gainers, that is L&T, Mindtree and Emphasis. And both the names, JP Morgan today has upgraded the stocks to overweight. On L&T Mindtree, they've raised their target price to 1,600. On Emphasis, they've raised their target price to 3,400. Now, JP Morgan believes that both these names are best proxy placed for the banking and financial services recovery in the US. Now, BFS has been a standout vertical over the last 3-4 months. The commentary has been quite strong, and that's going to be very significant in terms of earnings are concerned for both these names. Now, a Fed rate cut could drive recovery in the mortgages for US. Even that been under pressure for the last couple of months, and that could be significant in terms of re-rating or earning spends to go up, especially the discretionary spends in the tech space over the next 12 to 18 months. And that could be significant in terms of earnings for both these names, because for L&T Mindtree, the BFSI exposure is close to 35%, and for Emphasis, it's as high as 59% in the BFSI space, and that's going to be a biggest driver for both these names. And hence, they've raised the EPS estimates for both these names and also the target multiples, and hence upgrade to an overweight and target price raised to 6,900 for L&T Mindtree and almost 3,400 for Emphasis.
All right, Nimesh, thank you very much for that. So that's the call coming in on two names. Stocks are outperforming in an otherwise sort of off the highs kind of market. We take a break. We are back with our special segment. It's the economy. Lata in conversation with Nikhil Gupta of Motilal Financial Services, Mahesh Vyas of CMI, and they talk about India's capex cycle. Stay tuned. That's coming up.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency.
Investing.
Hello and welcome to a very important conversation about our economy, and that's the capex cycle. The second quarter lead indicators did show some softness. If you remember, core sector data, IIP data, PMI, all showed a bit of a slowdown compared to previous months. But how about investment? Well, data from the CMI shows a fall in new projects to just 7.3 trillion rupees. That is for the first half, April to September. That's versus a high of 12 trillion rupees of new projects announced in the first half last year. But we must remember that this follows 2 years of very strong growth in capex, 6.9% growth in gross fixed capital formation in FY23 and 8.9% in FY24. So are we only seeing a minor slowdown, a temporary one because of elections and heat? Has the private capex picked on, taken the baton from the government, or is this still government driven? I have two experts, undoubted experts on the capex cycle, CMI's Mahesh Vyas and Nikhil Gupta, the economist from Motilal Oswal. Gentlemen, thank you very much indeed for your time. Mahesh, your new projects, of course, it's a unique database which only CMI is able to put together. It does show that even if you look back 10 years, there has been a systematic and a sustained pickup in new projects in the last 2-3 years, right?
Right, that's right. We are seeing a pickup from 22-23. And in the preceding years, there was a lot of sluggish growth in new investments. There is a perceptible improvement in that from 22-23.
You have given us the H1 numbers as well, the April-September numbers for 24-25. That, as I just read out, is only 7 trillion compared to 12 trillion year ago, same time. Should we worry, or do these things happen in investment announcements?
So, no, we shouldn't worry too much about it. We can be a little patient with that. That 7 trillion includes the first quarter, which was the quarter when the Lok Sabha elections were being held. Yes. And at that time, neither do private sector nor does the government make any new announcements. And usually the investment also slows down a bit. So I think we should wait. It also includes the next quarter, which has got the rains effect involved in it. So the construction process goes a little slower. So I think if you combine these two, it is quite okay to give us a little benefit of doubt to this number and wait for the December quarter to see a comeback.
Okay. Well, it does look at this juncture that we may not get to the 35 to 40 trillion that we saw in 22-23 and 23-24. But I'll come back to you on that. Nikhil, what's your sense? You look at gross fixed capital formation as a percentage of GDP or even YOY growth. That has been fairly good, isn't it, over the last 8 quarters, 2 years?
Right, Lata. Hi, thank you very much. Okay, so Lata, as you mentioned at the beginning, investments growth was very strong in FY22 and FY23 as we came out of COVID-19. We saw growth of an average of 20-25% in those 2 years, which eased to about 10% in FY24. Now we have first quarter data for FY25 when we know investment growth was close to 9%, and we believe it to remain closer to 9% in the second quarter as well. So from 20-25% in the 2 years following the pandemic, we have seen almost 6 quarters of 9.5 to 10% growth, and we don't expect it to increase significantly in the next 2 quarters as well. So FY24, FY25, we are seeing an average of 9.5 to 10% growth in GSCF for broadly fixed investments plus change in inventories. As percent of GDP, yes, we must understand that investment ratio as percent of GDP has increased to almost a decade high. It increased in FY22 and in FY23 as well. Now we are close to 33% of GDP in nominal terms, which is the highest in almost a decade. FY24 was also the similar level, and we expect it to remain at the same level in FY25 as well.
Okay. I thought you said that there was a slowdown in the first half. How does how does investment compare over the last 3 years to the first half?
Okay, first half number I would not remember for the last 3 years. But for FY25 first half, first quarter nominal growth was 9%. When I'm talking about investments, I'm including GFCF and change in inventories. So it's official data, 9% growth we saw in the first quarter, and we do not see a significant pickup in the second quarter as well. So that's why I'm saying this first half FY25, we expect a growth of somewhere around 9.5% to 10%. But if you want the numbers, I have the numbers with me. So in the first half of FY24, again, this total investment growth was 10.5%.
Okay.
In the first half of FY23, this number was 25%. And in the first half of FY22, since there was the base of first half of FY21, which was the pandemic period, the growth was 52%. So first half of FY21, which was pandemic, there was a massive decline. Then we had a massive growth in first half of 21. First half of 23, we had a growth of 25%. First half of 24, we had a growth of 10.5%.
Okay.
And first half of FY25, we expect it to be 9.5% to 10%.
Okay, so there is a bit of a slowdown according to you because the base became very high in the post-COVID year. But Mahesh, are you getting a sense that we are anywhere near what we were doing in 2004? You know, there are some comparisons because both banks and corporates cleaned up their balance sheets even last time. Up until 2003, you had all those Indian banks, UCO Bank, all of them getting cleaned up. Even a lot of steel company loans got restructured. Likewise, delevering by companies. Do you sense that a similar cycle is afoot?
Unfortunately, no, Lata, not as yet. We are not seeing the 2004 phenomena come back. A lot of the new investments that we are seeing in the recent past are driven by the government, are essentially an infrastructure. The action from the manufacturing sector, from the private sector, is still muted. Some of it is driven by the PLI, which is, again, I will call it as government-driven. But the mad animal spirits that we saw in the past, that is yet to come. So it is largely infrastructure-driven, largely government-driven, and the private sector is still hesitant.
What is your sense, Nikhil? I mean, yeah, you point out that overall, when you take gross fixed capital plus inventories, there is a slight peaking off from the 21-22. But has private capex picked up the baton?
I don't think so, Lata. Especially, I mean, private capex, there are two parts. There is household and there is corporate capex. I tend to agree with what Manish said. The government, the central government capex has picked up significantly, but we have repeated it. We have mentioned it repeatedly that what the central government has spent, if you look at all the data up to FY23, a large part of that was actually a reallocation away from CPSEs. So before pandemic, what CPSEs used to spend after COVID-19, the central government has taken most of those investments on their own books, which gives a huge bump up to central government's capex. But if you look at centers plus CPSEs, the combined capex has not gone anywhere, at least till FY23. FY24, we do not have CPSEs data, but we do see some pickup, not again an extraordinary pickup, and that is the first year when we saw some pickup in government capex as well.
Your data does point out, 1 minute, your data pointed out that government capex is 5.2% of GDP, which is a high you have never seen before. It is an all-time high.
That is centers capex. It does not include CPSEs. If you look at CPSEs capex, it used to be around 2.2 to 2.3% of GDP as recent as FY18 or FY19. As of FY23, for which we have actual data, the investment by CPSEs was only 1.1%. And for FY24 revised estimates, it was only 1% of GDP. So whatever bump up you have seen in centers capex, it is actually a reallocation away from CPSE.
Oh.
And that's why I'm saying if you combine CPS is actually the part of corporate sector.
Okay. I have to wind up. But Mahesh, would you say the net effect of capital, investment is good because your own data shows that projects stalled or shelved has gone down drastically?
That is true, but I wouldn't read too much into that. Nowadays, unlike 10 years ago, promoters do not say that their projects are stalled, number one. Number two, there isn't much private sector action over here. Most of it is government, and government doesn't say that our projects are stalled. So the drop in stalled projects is not an indicator, as it used to be in 2012 or 2013 and so on and so forth. So that's not much of an indicator. I would still hold my horses. I would still wait to say that there is an increase in capex action. Yes, there has been a pickup, largely driven by infrastructure and government. But that's not enough to see a real investment cycle.
Yeah, I agree with you. We do hear a semiconductor here and a data center there and renewables, but it is not adding up to the kind of high we felt between 2004 and 2008. But I would hold my horses. I think maybe it is around the corner. We'll continue this conversation after the 2Q numbers are out and after the 2Q GDP is out. I guess both of you will have much more data to speak with us. Thank you very much, Mahesh and Nikhil, for enlightening us about the nuances of our capex cycle. Wrap up on Bazaar. Chartbusters coming.
Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
LTI Mindtree and Emphasis surge as JP Morgan upgrades both the stocks to an overweight rating. The brokerage sets a target price of 6,900 rupees for LTI Mindtree, while that for Emphasis is set at 3,400 rupees per share.
AU Small Finance Bank rallies as deposits grow nearly 13% sequentially. Assets under management also grow 5% on a quarter-to-quarter basis.
Macrotech Developers surges as pre-sales grow 21% year-on-year, even as the company says it remains on track to meet its full-year guidance of 20%. Godrej Properties shares rise even as bookings and sales volumes slump sequentially.
Natco Pharma surges as Mylan and Novo Nordisk reach a settlement over Ozempic generic in the United States. Remember, Mylan and Natco have partnered on the development of the generic Ozempic products.
NBCC surges as the stock goes ex-bonus in a 1:2 ratio effective today.
Hello and welcome to Chartbusters. I'm Nigel, with me is Mangalam, and the markets are a little bit skittish this morning, a little bit nervous as you can see. The Nifty as well started off with a gain of close to around 80-90 points. Now it's moved into the red. Will this dip get bought into at some point of time? Well, time will tell. The problem today has been actually the broader markets because the mid-cap index is now down 1.3%. But Mangalam, I think on the Nifty, this 24,700, 24,800 mark is extremely crucial that it's held out.
Let's see where it goes, because it's more than the opening. Increasingly over the last couple of days is the way the market closes. That's becoming a lot more important. On Friday as well, we saw a near 500-point decline from the highs on the Nifty. The Nifty Bank fell about 800 points as well. 25,000, very close to the 50-day moving average is where we are on both the frontline indices. Let's see where we go from here. But the problem, like you pointed out, has been the broader markets. Nearly 2,000 stocks in the red for just about 371 in the green itself. So with a lot of stocks actually declining, let's get to the brass tacks. Let's talk about fundamentals, let's talk about demand, and let's talk about business itself. Bikaji Foods, that stock's been buzzing over the last 1 month or so, and that's largely ahead of the upcoming festive season. A lot of things happening in the industry itself. So let's talk about the demand picture and the outlook for the business going ahead. We have Manoj Verma, who's the Chief Operating Officer at Bikaji Foods, joining in. Manoj, the last 1 month, there has been a lot which has happened. From the last time we spoke to now, one of the biggest players in the market, Pratap Snacks, had a large chunk of their investors go out. We had Madhusudan Kela and another fund go ahead and invest in that company as well. So, two-part question. One, what does demand look like for people like you ahead of the festive season? And secondly, how does this deal in Pratap Snacks change the dynamics of the industry?
Yeah, good morning. First, I'll take your the second question, which is on the demand. I think demand is really good. There's a lot of excitement around in the market amongst our business partner, which is the channel partners, the moderate accounts, and the general trade. So that looks very good. We are now just 3 weeks away from the D-Day, which is Diwali, and everyone is on top of it. I mean, there's a lot of loading. As I visit the market, I go to the stores and see. So not only Bikaji, I see a lot of competitive stuff also in the marketplace.
That's about demand. And what about the industry dynamics? How does that change?
Sorry, on that Pratap Snacks, it actually doesn't matter to us. I mean, they were our competitors. I mean, they are there in the industry and will continue to be. It's only about the management which would perhaps change. To be very honest, it doesn't impact us at all. One, that the categories they are playing in, which is primarily Western snacks, has never been our very large share of business. It's a very small SOB for us. And secondly, the business was there before as well and would continue to be there. It's just the management change.
Okay, all right. Hi, Mr. Verma. Good morning and good to see you, Ben. What kind of growth are you working with for the year? I think earlier you were indicating low double digit is what you're working with. So should that be the volume estimate, 12, 13, 14% odd? And what about pricing growth? What are you working with for this year, FY25?
See, we are in a silent period. I may not be able to speak about growth specifically, but yes, when we talk about growth, we would continue to deliver, what we have said. We are bang on what we have planned. The festive season is more on the gifting and on the sweets part. So that has done extremely well, and they definitely would be the growth drivers.
All right. So then how much is gifting as a proportion of your sales and how much is sweets as a proportion of your sales? What do they do to your margins? Because the festive season is all about sweets and the gifting.
So at an annual level, if I talk about the sweets contribute to about 12.5%. However, during these festive days, they go up as high as about 25% also. So therefore, it's a huge chunk, or huge share of business during these months.
And gifting?
So we look at gifting and sweets together, but yes, gifting is a smaller one. In that case, so gifting, if we put together between these 2 months is about 5% they contribute.
Okay, all right. Mr. Verma, you have plans with regard to improving your EBITDA margins as well. But edible oil companies have begun to see mild price increases. How has it impacted your business, and what kind of EBITDA margin improvement are you looking at from here on?
Talking about oil price increase, that has impacted across players, and so us. Beyond the point, company would not erode margins, and therefore we'll have to pass it to the consumer. What we see that these price increases should impact, say, around 2 to 3% price increase.
So what does that mean for your margins? Because 2 to 3% is the price increase that you're looking at. The first quarter you did margins of close to 16%. That was a near 140 basis points improvement over the same time last quarter. With prices having increased, how much has your raw material basket increased by over the last couple of months? And how long before you increase the prices? I mean, what is the margin band that one should roughly look at?
So margin band, so if we look at without PLI, it was about 13.5. And we would stay around the same because the price increase, as I said, will be passed to the consumer. We have already started taking some price increase and it has started going below. We had certain buying a certain product, these stocks with us, which we had booked earlier. So therefore the impact does not happen with no immediate effect. It takes some time, and we are we hold stocks till then, and thereafter the prices we have increased already.
Okay, export market, that's a very small proportion of your mix, but it gives you good potential to go ahead and even feed the world. So what is it currently? Where do you see this number headed? And also give us a brief idea about reach, because you all were talking about expanding your reach. So numbers on both these two.
Yeah, so as of last quarter end, we were directly covering 2.7 lakh outlets. And the target for this year, by end of the year, is we should be covering 3 lakh outlets. We are well on track. That's in terms of our direct reach. However, the indirect reach, what we spoke about, was 1.1 million outlet, and that we assume that about 50,000 outlets should go in our indirect reach as well. Here the game is two-pronged. One is reach, so the inorganic growth, the stores which were not selling BKG will sell, and the other is also throughput increase. So the stores where we were, how's that we increase throughput per store? So that's the growth drivers, the two levers we are working on.
All right. And, on the channels itself, a lot of these FMCG companies have been saying that they've seen big traction in e-commerce, most notably quick commerce. So how much does that account for your overall sales, and how are you ramping that up for you?
Yeah, Q-com has done very well over last 1 year, and it's growing even faster. Though it's a very small business. To our business, it's about 2.5%. That's the share of business to us. But during these festive times, these will also be going up to say about 50 basis point will increase further.
And what rate is it growing at, Q-com, for you?
So if I talk about over last year, we've grown at about 250%. So it's an obnoxious growth because of very small base. And these growths are coming, again, from two sides. One is that this Q-com span of area or span of service, these people have increased and increasing month on month. And other is that, the penetration, the more category loading and the throughput from this Q-com, that's also increasing. So these are the factors which is really spiking the growth in this Q-com channel.
Well, the reason why we're talking about this is because very recently Dabur had to rationalize its GT inventory because of fast growth in quick commerce. Obviously, it accounts for just about 2.5% of your overall sales. But I wanted to understand what kind of products sell on your Q-commerce platform. If their contribution increases, then will that have a positive impact on your margins? Because the sense that one gets is that Q-com has, not a lot of these low-value products. They still have some of the premium products.
Yeah, so Q-com normally doesn't sell small value packs. So 510 will never be a Q-com game. It'll be the large packs. That's one. Second is Q-com is more of an impulse buying. Suddenly I thought of buying something, I'll place order on that stuff. So how we look at Q-com as a channel is also is helping category grow, because many a times you would choose not to have it, because you do not have pantry, or there in your house, and you don't want to step out. But Q-com gives you that space that within 5 minutes or 10 minutes, you can get that stuff home. So that's the opportunity wherein category also grows. But at the same time, it does impact general trade. And there is a noise wherein, the general trade or these small retailers, they definitely, are getting impacted because of this channel.
All right, we're getting feelers every week on a new list of buyers emanating for Haldiram's. Have you heard anything? Because the last news report was that Temasek is looking to invest in that. Anything that you've heard on that space?
Those are the news you often, every month you see some new name coming up. I mean, till such time it happens, I think we all will have to wait and watch.
But it's on the anvil, right? Something is likely to happen soon.
I can't say on that stuff, not that I'm aware of.
All right. Thank you so much, Manoj, for joining in. Wish you and your team a very happy festive season and hope the demand actually pans out as you are anticipating. And even better than that, it'll be good for consumption, good for your company, but more importantly, good for the country as well. We'll take a short break on that note. In fact, before we do that, let's talk about some ideas of profit coming in from our colleagues at Money Control Pro. Bharat joins in with a stock that he's tracking closely. Bharat.
Today's side is Lemon Tree Hotels Limited. While the company witnessed margin pressure in H1 owing to higher renovation and employee costs, as well as increased investment in technology, we expect significant improvement in the second half. The growth is expected to pick up significantly in the second half, as it is a seasonally strong quarter. Also, the renovated room inventory in H1 can be utilized for generating higher pricing in second half, which would support the performance. The industry upcycle is expected to sustain over the next few years. Demand is expected to grow at a much higher pace of 11% CAGR, while the supply is expected to trade growing at 8% CAGR over the next few years. The company has highlighted healthy room addition plans and aims to add about 4,000 rooms, which is about 40% of the current inventory. The entire room addition is planned via asset-light management contract group. With minimal capex requirements and healthy cash flow generation, the focus will now shift on debt reduction. The company also plans to list the asset-heavy fuel subsidiary in the future, the proceeds of which would be utilized for further debt reduction. The stock has significantly underperformed, correcting by about 22% in the past 3 months. At the current market price, the stock is trading at an EV by EBITDA of 16 times FY26 projections. The valuations are attractive at the current levels. Investors can add the stock.
All right, brother. Thanks a lot for that. We'll take a short break. On the other side, we'll get you snippets from our special interview with BK Goenka, Chairman of Welspun World. Don't miss it.
In an exclusive chat with CNBC-TV18, Mr. BK Goenka, the chairman of Welspun Group, says that he expects the group revenue to triple in the next 3 to around 5 years. He also spoke about the listing of the US business, the capex plans for Sensex, and how he sees Welspun Corp ramp up from here on. Let's listen in to a few excerpts from that conversation. Well, Mr. Goenka, you briefly mentioned about Welspun Corp, and that's something that the street is quite bullish on. Now, you just won an order in the United States, and that was a whopping 2,400 crores. But what the market believes is this is just the start, and there is more to come. There could be $1 billion of order inflow in this calendar year itself. Do you concur?
See, I want to tell you one thing, that we are one of the very formidable force in when the US market comes, when the Welspun comes. We are one of the major player in the oil and gas, transportation of oil and gas pipes when it comes. So looking to today's market, US market is quite bullish in the overall pipe market when we talk of particularly from the gas from Permian Basin. And apart from that, there are many new projects coming up in the new energy. Over and above, there's a huge potential from the angle of carbon capturing.
Right.
So we feel very comfortable. I think we have bidded for many projects. I mean, I can't say anything like today at this juncture, but in a overall market size of more than $3 billion, I mean, you go on bidding and something you win, something you don't win. So it's very difficult to say what is going to happen, but we are in a good position in US.
Well, but it wouldn't surprise you if you won a big order before the end of this fiscal, amounting to close to around $1 billion odd. That's what the market believes.
I mean, we have bidded for, as I said, more than $1 billion projects. I mean, what comes, what not comes, is very difficult to say that, but we are looking good in many of them.
All right, since you'll have such a good position in the United States, do you think that maybe at some point of time you could be looking at listing this entity in the US? Could that be something on your mind?
Not really. I mean, at this juncture, there's no plans.
Well, Welspun Corp has close to 31% stake in the Middle East business. What's the plan out there? Do you plan on divesting that 31%, or do you believe that it depends on the size of the check? Then maybe you'll sell that out.
No, not. That's really, I mean, as you know, we are one of the global players in the oil and gas market, and Saudi or Middle East is a very important and strategic market for us. I mean, there is no plan as such like that, but definitely it's a very important from the angle of our overall strategy in the global market. So it's doing very well. I mean, it's almost booked for next 3 years, and we are one of the, not only the formidable player, but we are one of the first choice for the customer.
All right, very important. Let's talk about Sensex then, because Sensex is something that could be the big value driver from here on. You're putting more than 2,000 crores in that business, and that has a brand recall value. The market size is immensely huge as well. What's your outlook with regard to Sensex? And this is something that the markets are waiting for. What is the outlook? What is the asset turnover? And what could be the EBITDA profile of this business? Because you're putting big money in here.
So, well, Sensex is as you know, is a synonymous with when you talk of storage tank, water storage tank, you say Sensex layout. It's a synonymous with water tank. And it's the oldest and the first, I mean, who created the water tank. It's a 50-year history behind Sensex. And it's a very well-known brand. And as Welspun, when we acquired a year back, I think we have a huge plan behind it. When we see the Indian market today, the building material market, whether it is PVC, OPVC, CPVC, all kind of water-related pipes and businesses, we see a huge potential. And market is growing almost like 15 to 20% every year, and we see a potential in that. And accordingly, we have already announced a capex plan of more than 2,500 crores in next 3 years. And where we will be coming out a complete bouquet of the whole related items, which is building related items like all kind of pipes, fittings, adhesives, storage, water storage tanks. So it is a. I think we are in our overall portfolio of group. One of the things was missing was B2C brand. I think Sensex has given us that, and in next 3 years' time, we feel that we will be growing that business more than 20%. In next 3 years' time.
So asset turnover of around 2 times, could it be a 5,000 crore revenue potential with margins of mid-teens? Would that be a target that you have?
I mean, that's the fair target for our team. We are going to have it, and it may happen in 3 to 5 years' time.
Do you think at some point of time the value of Sensex itself, since it's in building products and it gets a higher multiple,
do you think you can unlock value, maybe list it separately once it starts ramping up in terms of revenue, and maybe that asset could be far more valuable?
I mean, whatever's going to be right from the angle of shareholder. As we all know, B2C multiples are different. There's a different kind of product, and this is a 100% subsidiary of Welspun Corp. And at the right time, whatever is good for the overall shareholder, unlocking the shareholder value, we will take whatever necessary or whatever the decisions. Board will take that time, and we'll do the right thing, which will create value for everyone.
Well, Welspun Corp, between FY24 and FY25, there's not going to be much growth because you're waiting for those orders to come in from the United States as well. But now you have a ductile pipes business that will fire. Syntex as well will gradually start contributing, and the US business will start ramping up. Put everything together for FY26, can we expect the EBITDA number for Welspun Corp be closer to around the 3,000 crore mark? Would that be gettable?
I think whatever the projects, whatever the expansion plan we have announced, we are very good to go around 15 to 20% growth all around, whether it is top line or EBITDA. And we are quite confident when we see the Indian market for the DI pipes, when we see our US businesses, when we see our Saudi businesses, and moreover, the Syntex is also coming up well. So I think all put together, we are in a good position.
And what about you have another smaller listed entity, Welspun Specialty, the stainless part of the business. That is a niche one, you have turned it around. Could you be looking at folding that business into Welspun Corp?
I don't think so. I mean, it's a business which is very, very special. And in recent past only, we could turn it around. And it has been making losses for many years. And today, we are proudly, I can say that this is a company which is looking for the new business, which is under the Atmanirbhar government policy, Make in India, whether it is for nuclear, whether it is for defense, whether it is for power. I think we are in a good position in times to come in that business, particularly in stainless steel and related items.
So you believe it has a niche? You'd rather not merge it into the Welspun
I mean,
Corp?
definitely it's a niche market, and it's already a separate listed company, and which is already reflecting the value.
Well, you can catch the full conversation with Mr. BK Goenka at 4:30 p.m. today, only on CNBC-TV18. Well, all right. Well, let's focus on the markets. The markets actually have seen a bit of a nosedive in the last few minutes. We're down below the 24,900 odds. So the initial pop that we got was used to be sold into. Adani Ports has moved to the low point of the day. So pull up the intraday chart out there. ONGC, these are stocks that have taken a sharp knock in the last few minutes. So we'll just get the intraday chart. Coal India as well has, done a U-turn of sorts. And when we started the show, one of the few indices that was in the green was the Nifty Bank. That's moved from around 100 points higher to around 170 points lower. And when the Nifty Bank does a U-turn, that's what put pressure on the Nifty. Just take a look at that. Sharp downtick on the Nifty Bank. That's the one that's dragging the index right now.
Absolutely, Nigel. From the highs, almost 500, 550 points lower from the highs of date for the Nifty Bank. For the Nifty itself, down almost to 220 points from the highs. What's interesting is that when we started the show, we had about 1,800 stocks in the broader markets which were declining. That number is now swelled to close to around 2,200 itself. And the number of stocks which were gaining from 600 has now come down to around just 230. So that's a fair amount of distribution that we're seeing even in the mid-cap end of things. It wasn't doing too well to begin with, and now the mid-cap index has now expanded its cut to about 1,350 points from the highs. Mid-cap index itself is down about 1,800 points. You have just about 4 or 5 stocks in the F&O space, in the F&O basket, which are in the green, and that too with a small amount of gain. The highest gainer in the F&O right now is AU Small Finance with a gain of almost just 1%, but a lot of stocks, so over 200 stocks, are under pressure in the F&O basket as well. Take a short break, come back, we continue our focus on the markets itself. A sharp sell-off is what we're seeing.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under...
Welcome back. You're watching us here on Chartbusters. As we run out of time on the show, remember the market's also running off steam. In fact, a big cut is what we're seeing on all the frontline indices. The biggest one is atop my head, which is the mid-cap index. A lot of distribution is what we're seeing out there, down 2.5% for the Nifty as well as the Nifty Bank, down by 500 to 800 points from the highs. For the Nifty Bank, the Nifty down about 200 to 250 odd points as well. We wrap up on this edition of Chartbusters. Thank you for watching. The team of Trading Hour will take all the market action ahead.
Like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
This week was a record as far as the FI selling is concerned. Let me just go to the wall and explain why I'm saying this. If you look at this week, as I said, it's a kind of a record. It's been the highest single-day selling by FIs in the India market. Yesterday, we saw a figure of 15,300 crores. That's the highest single-day selling in the last 4 years as far as the India market is concerned. This is the number that I'm talking about. 15,243 crores to be precise on a single day that the FIs have sold in the India market. But if you break down that, that selling was largely into 4 or 5 large cap names. The split will come up. Reliance saw delivery-based selling of close to 4,450 crores. HDFC Bank close to 3,700 crores. ICICI Bank close to 1,700 crores. Axis Bank nearly 1,700 crores, and Tata Motors almost 1,500 crores. This is a single day delivery-based selling in the 5 large names, what we saw in yesterday's trade from an FII perspective. But if you look at the overall FII selling, it's, as I said, yesterday was the highest in terms of numbers. These are the top 5 in terms of large selling. June 4th, the election day outcome, when we saw 12,500 crores of selling in a single day from FIIs, 10,500 crores on Jan 17th. Again, August 5, 24, we saw nearly 10,000 crores of selling in a single day. So is on Jan 18, nearly 10,000 crores, and September 30, we saw close to 10,000.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me, Sonal Bhutra, and the bear attack on Dalal Street continues. Benchmark indices have taken a sharp turn for the downside, with the Nifty and Sensex down close to about 0.5%. The mid-cap index is down 2.5%. And just look at the way the advance decline ratio has collapsed. When we started trade, you had more stocks advancing compared to declining stocks, and now the gap between the two stands at 1:11. If you want to put a ratio to that, and that is telling you the story of the kind of sell-off that we've seen in the broader market. And I think that there is still an element of China versus India. China is shut, and it reopens tomorrow, but Hang Seng is up 1.5%, while the Indian markets are under pressure now for the 6th day in a row. And I was just reading that there is this there's one article which says that expect fireworks on onshore Chinese stock markets when they reopen. Since 30th of September, when the onshore market is closed, there is an ETF which tracks the Chinese markets. That's up 15%, which suggests that the Chinese index will open up with a 15% gain on Tuesday when it reopens.
The ETFs which track the Hang Seng or the Chinese markets, they have been higher in last couple of trading
So
sessions.
they're saying 15% in the last 1 week since China has been shut.
Yes, that's been the case, and now investors are looking at in every way possible how to take exposure to Chinese markets as well, sitting in India. But for our own markets, of course, we've seen a fall of around 300 points from the highs on the Nifty, 600 points off the highs on the Bank Nifty. It is at the day's low right now. And when we started the trading session, there was an indication maybe there could be a pullback, considering the handover that we got from the US markets and from Asian markets as well. But that's not the case. Big fall across sectors. None of the sectors are in the green right now. There was Nifty ID for a bit, but that has slipped into the red as well. So a lot that is happening, and Nifty has given up all the gains since we have seen since September 11th. And Hormaz also tells me that since September 27 top, only 2 Nifty stocks are in the green now. And looks like the way things are going, that could also turn into red. But of course, these are things that we'll be tracking very closely. For now, it's a good time to discuss market fundamentals. Chirag Mehta, CIO of Quantum AMC, is joining us now to discuss more on that. Chirag, good morning. Thank you so much for joining in. Well, it's been a sudden fall that we've seen from the highs, and this has come in after that 2 days of continuous selling that we saw on Thursday and Friday. What are markets pricing in? Do you think most of those elevated valuations are something that would start coming down, and there is more to go from these levels?
Yeah, thank you, Sonal, for having me. Yes, valuations were clearly on a higher side. There were very few opportunities that were looking attractive from a valuation standpoint. Given that valuations were significantly higher in the mid and small cap space, and also if you look at even in the large cap space, we're incrementally getting expensive, barring a few pockets of opportunity. So overall, I think this is a good, healthy correction that we are seeing in the markets. As valuations become more reasonable, probably that will be a good time to get back into the market. So if you look at our positioning as well, we were sitting on some cash in the portfolio, given that there were less opportunities available, and hence probably this decline bodes well for us from a opportunity standpoint. And we will be looking at valuations wherever pockets. In whatever pockets there is opportunity that arises, we will be buyers into those pockets.
But have you already started buying, Chirag? What is the cash on your books? Have you deployed part of it? If yes, and also weigh in on this entire India versus China rotation out of India into China and China-related names.
Yes, Reema. So in the value fund that we have, we were about 14% odd cash, and in the small cap fund, we were around 16% odd cash. And cash is not a call that we take; it's a residual of our process. So given that nothing was hitting our buy zones, the resultant of the stocks that were hitting our sell was the cash that we had in the portfolio. From a a global investor standpoint, clearly Chinese market were really attractive from a valuation standpoint, but if you look at the differential between the Chinese valuation versus Indian valuations, it was a tale of two markets. Significantly higher Indian valuations versus significantly cheaper by all counts from a Chinese valuation standpoint. So given that, opportunistically, given the stimulus that we saw in China and the valuation that it was available, there was a tactical play at hand, which led to many allocate to China in a rush. And hence, we have seen that Chinese market zoom up significantly in a short span of time. Given that, I don't think it's a more structural story. Given that there is uncertainty or elements why investors were pulling out of China haven't changed, and this looks more like a tactical play as opposed to more a structural play. So I think India, from a structural standpoint, remains a much better market to be in, provided valuations correct, and we are seeing some correction take place. So if that continues, that would be a good opportunity even for foreign investors to start looking at Indian market more seriously.
So when you're saying the long-term story remains structural and the valuation part is the concern, are there any pockets where you think if there is some more correction, you would look at eyeing those and buying into them? Is there something that is of your liking?
So from a structural standpoint, see plays like power, industrials, etc. still have a lot of runway left. We think, but from a valuation standpoint, there was a need for correction. Everyone's trading very, very expensive. And hence this correction, if it is meaningful, will give us opportunity to be in those pockets. So currently there were some pockets of relatively cheaper or relatively reasonable valuations, but most of the pockets in terms of consumer discretionary to power to industrials, etc., was all trading very, very expensive. But now with this correction, if it lasts for some more time, probably may give us the opportunity to look at those areas as well.
Chirag, what is a meaningful correction, right, in the market? This is a market which is impossible to predict. So even retail investors don't know whether this is it in terms of a correction. Should one be buying today or should one wait out for even lower levels? So when you say that in power industrials, a correction was due, it's a healthy correction, and you're going to look to buy when, perhaps there is a meaningful correction, how would you define it? Would you look at 5-10% lower levels from here on? What's the real advice in terms of go out and buy today?
So we are a bottom-up stock pickers, and we look at each opportunity on a bottom-up basis. And hence, it will be difficult to pinpoint a number on the index because index is very different as opposed to sectors and companies. And from that standpoint, even at the index level, probably, 10-15% correction will be meaningful enough to start getting opportunities in various sectors and companies. Because if index corrects probably by, say, 15%, probably stocks which were expensive and, come under some sort of selling pressure, probably may correct more than that and hence give you those opportunities that you're looking for.
By the way, a mild recovery on the Nifty is just 60 points from the lows after that fall that we've seen. But something like an HUL, the Tata Steel, Titan, M&M, some of these consumption names are leading to that mild recovery that we're seeing on the Nifty. But of course, it's coming after that major fall that we've seen from the highs. Chirag, anything from the banking space? How are you looking at that particular index? Because there's a lot that's happening. We got the Q2 updates that have come by as well. What's your take?
So it's one space that we have liked because valuations are still reasonable in that space. And it's time when, you're seeing some pressure on NIMs, on credit costs, etc. Not really in the banking space, but in the space of MFI, etc. You're seeing some credit costs come in, which may get, spilled over into segments going forward. But having said that, all those banks which have been prudent in their lending have that franchisee to attract deposits Credit growth has been slowing a bit. But barring those concerns, valuations, given the growth that is probably expected in that sector, still look reasonable. So we have a high allocation in our portfolios to BFSI as a space and private banks in particular. So we like that space from a valuation standpoint, and also adjusting to the growth or pressure on NIMs that you would expect going forward. Still, that looks a reasonable place to be in.
Okay, thank you very much for that. Get into a break. On the other side, we'll take the discussion forward and talk about the capex cycle. Is it on the cusp of a revival? Neelkant Mishra of Axis Capital will join in for some of these questions.
Five large selling days as far as the FI selling in a single day is concerned. But again, as I said, this is kind of a record for us as well. But if you look at this week, in the last 3 trading sessions itself, the FIs have sold nearly 26,879 crores. That's the kind of number you've seen only in the last 3 days, and that's also because China has been done phenomenally well in the last 1 week. To this week, it's shut, and that's the reason why. However, this year, the FIs are still net buyers, but that's largely because of the block deals. That is close to 70,000 crores. So that's the FI number for the whole year. But as I said, this week is what we need to take into account. Now, CLSA put out a note just 1 week back, and this is what their view was. They believe the selling can intensify largely because 90% of the money in the emerging in India comes to the non-India dedicated funds, which is the EM funds, and that's where the large supply is going to be. So there is a risk of selling India to fund Chinese market, at least in the short term. That's the CLSA view. And on back of that, they've identified few stocks. In fact, they say that they've seen a similar correlation when India got sold into, when the Chinese market rallied in November 2022. They've identified few large cap names which are vulnerable to sell off if this money moves from India to China. Within the PSU basket, Oil India, IOCL, these are the few names to track. Even BHL is what they are identified, which can see selling pressure. Godrej Properties, Bajaj Auto, Ambuja Cements, Macrotech Developers, and Voltas. These are the few names which are vulnerable to FI sell-off, largely because there is a FI holding and the stocks have done well. But clearly, this was a week when 20,000 crores in a single, in just 3 trading sessions. So that's the kind of sell-off we've seen from FIs in just 1 week.
What we've seen so far is a commendable delivery on the monetary policy side. We've seen some direct stimulus at getting the equity market animal spirits back alive, and certainly the retail investor has followed through on that. What will differentiate this one is if in the next weeks and months we get some clarity from the Chinese government, from the key policymakers in the Politburo as to the magnitude and the scale and the deployment of a large fiscal package. Because let's remember, I mean, China's single biggest problem that it faces at the moment is immense oversupply on the real estate side.
Welcome back. You're still tuned into Trading Hour. It's time to put spotlight on India's capex cycle. According to Axis Capital's latest report, with the revival in housing construction, power generation, and the emergence of new sectors like green hydrogen, defense, robotics, they believe that India's capex engine has restarted and will run for several years. To discuss more on that, we are now joined by Neelkant Mishra, who is the Chief Economist, Axis Bank, and Head of Global Research, Axis Capital. Neelkant, good morning. Thank you so much for joining in today. It's a pleasure to be speaking with you. A lot has been happening in India, and we've been talking about it being India's decade as well. When you say India's capex engine has restarted, what is your expectation of capital formation over years? Which sectors do you think will contribute to this? And how will it contribute to the GDP growth? What are some of the estimates that you've made going ahead?
See, before we project what's going to happen in the next 5 to 7 years, it's important to think about what has happened in the past. And we dug deep into the reasons for the slowdown in capital formation, which we measure as the investment to GDP ratio or the gross fixed capital formation or GFCF to GDP ratio. Of the 7% point decline in that ratio between 2012 and 22, from 34% to 27%, we found that 5% points came from the drop in investments of households in real estate. Another 3.5% came from the drop in investment in machinery by the government and the public sector. And then there were some increases like household investment in machinery or government investment in dwellings and structures. Now, the main point is that the driver of the slowdown in machinery investments was primarily investments in energy and in manufacturing, which was primarily linked to real estate. So the drop in investment was in metals, in cement, in other construction materials, in machinery. Now, as we think about the future, it's very important to see that the real estate cycle is turning. I think inventories are now reasonably low. A lot needs to be built. The market has been quite hot in the last 2-3 years, but I think the construction activity is just about starting to accelerate. The power plant addition, again, announcements have happened, but I think now the construction needs to pick up. And it is when this activity picks up that it will start showing up in GDP. If you take a step back, this is not abnormal. When you think about long-term investments or long-term deployment of savings or capital, it is mostly when people invest in houses, when governments build infrastructure, or companies invest in power plants or long-duration investments that investment to GDP ratio picks up. And therefore, I think the real estate cycle is a very, very important part of the puzzle. And we think that's turning, and that's very positive for India's capex cycle.
Okay. Nilkant, hi, morning. So that's one way to look at, right? The investment type, whether it's in machinery, household, what led to the decline and what will drive the recovery. Another way to look at, and that's another axis of spending, is corporate, household and government. So can you give us data on, these three axes of spending, how the investment has declined in the past decade and what the recovery will look like? Because we keep talking about how government capex has picked up.
Yeah, so government capex has picked up. So if you see state plus central government investments, they have been quite strong in the last couple of years. Some of it, from an accounting perspective, is just the off-balance sheet spending of the central government coming onto the balance sheet. But a large part, there has been a significant improvement in our ability to spend on railways and roads and all of that. But we think in the next 4-5 years, this percentage, this expend as a percentage of GDP is not likely to expand. The central government has stated this explicitly. The state governments are spending a bit more than they did, but I don't think there is a lot of scope for them to expand here. The growth, in our view, will come primarily. So as we think about 31% of GDP going to 34%, in our view, nearly half and half, so about 1.6 and 1.4 will come from the increase in household spend on dwellings as people's houses get built, and the rest will come from corporate spending on machinery and somewhat on dwellings as well. The corporate spending on dwellings, on machinery, will come primarily from the power sector. So we expect that the spend on power generation capacity will rise quite meaningfully from where we are. So we've been through a 7-8 year downturn. From 2017 onwards, the spend has been quite low, but now quite a bit is needed. I think it is planned. A lot of the funding has been arranged, and now I think the investments will pick up. So in addition, we are seeing that cement companies, in anticipation of the growth in dwelling construction, have started to expand capex. There is also some competition coming in because 2-3 large groups are competing. Most metal companies are thinking of doubling their capacities in the next 5 to 7 years. And so all of this is in anticipation. And this is very consistent with what we have seen in the past, that whenever the real estate cycle is on an upswing, the demand growth for metals and cement tends to be 4 to 5% points a year higher than it is when the real estate market is in a downswing. So the growth tends to be 8-9% a year when the real estate market is doing well, and it is 4 to 5% or lower when the real estate market is not doing well. And so as this turns, it is very encouraging. And you must have seen that India's imports of steel had picked up last year as the domestic demand has been quite strong.
So a lot of ancillary industries will do well because the real estate cycle, of course, is picking up, be it cement, be it steel. Nilkant, a lot has changed on the state level. Of course, it was a lot BJP earlier, but now we've seen the election results for Haryana, be it Jammu and Kashmir. We're talking other parties coming in and taking charge as well. Do you think that is something which could be a big risk for central government or state capex going forward? The ultimate goal would not match in a lot of cases, and that could be something that could impact the outcome?
So it is less party specific, and it is actually change happening at the state level, which I think is responding to some of the ground level changes. So let me spend a minute on this. India is going through a phase of growth where the increase in inequality is almost inevitable. That you will see that capital is in shortage and labor is in surplus. And when something like this happens, inequality goes up because the bargaining power of capital is far better than the bargaining power of labor. Now, we are the only large country which is going through this phase, as we are a fully functional democracy. You will see political pressures, which are very natural, about addressing some of these inequalities. So what we have seen over the last 4 years, and this has happened across party lines, is that there has been a rise in income transfer schemes. So starting with Andhra Pradesh in 2020, and then Assam, and West Bengal, and then Telangana, then Madhya Pradesh, Maharashtra recently. And if you see both parties, both sides in Jammu, Kashmir and Haryana, in fact, even in Jharkhand, while JMM is offering 1,000 rupees per month to women, BJP's offer is 2,100 rupees per month. So it's across party lines, and I think it reflects the ground realities of how politics needs to be done and what the demands of the people are. The bigger question is, does this crowd out capex? And I think it's a very important question. What we have seen in the state budget compendium this year, and remember that while Jammu, Kashmir, Haryana, to some extent Maharashtra, and also maybe Jharkhand was not part of this, but there were 9 states which had already done this. And despite that, capex as a percentage of full year expenditure was 15.8%. So in the budgets for this year, the states in aggregate are planning to spend 15.8% of their total expenditure on capex. This is the second highest since 2009. Some of this is also aided by the center's offer of interest-free loans for capex. But yeah, this is an area where we need to keep a close watch. As the state's compulsion on a competitive basis, as well as perhaps the needs of the people, requires them to do more of income transfers, and their deficits are capped, so they cannot spend more than 3% of GSDP. Will they be really taking out of capex? At least so far in the budgets this year, which includes a lot of the transfers. Remember that Telangana, MP, Andhra Pradesh, they've all already have it in their budgets. Despite that, the capex numbers as a percentage of full year spend weren't really that bad.
Nilkant, we request you to just stay on. We want to come back and talk about markets and what this revival in capex means for individual sectors like industrial, cement, real estate, power, the ones which will drive the recovery. But by the way, for the markets, there has been a recovery. The low today was below 24,800. And now we're back in the green when it comes to the Sensex, and the Nifty is just about breaking into the green. There's been a very sharp pullback in the markets from the day's low, nearly 200 points. The Nifty is now getting closer to 25,000. The Nifty Bank too is now back in the green, up close to about 60 odd points. And spaces where you are seeing that intraday pullback, well, you've got a Bajaj Finance, you've got an IndusInd Bank, some of the Adani Group stocks, Enterprises, Ports, LTI, Mindtree. These are some stocks. where there has been that sharp intraday pullback. We'll continue talking about the markets and our conversation with Neelkant. Get into a short break. We'll come back with more.
Fiscal package aimed squarely at local governments to be able to digest that. In other words, buy it off developers and turn it into social housing projects.
Actually, I don't think it's a bad thing if China market does well for us, as in mostly for India. It is not bad for India per se. I don't think that beyond some shorter term thing, investors have to sell India to buy China. Because India, I don't think in aggregate, people are overweight. They might be 1% plus minus overweight. So if you were underweight China, that would have come from the rest of the world. India and China, even an emerging market fund combined would be, say, 20 and 25, 26 now. So half the investment of people who are able to move this around is in non-India, non-China.
Welcome back. We've been in conversation with Neelkant Mishra, and we're talking about his report that India's capex engine has restarted, led by real estate, house construction, power, and new investment areas. And this will run for a few more years. And therefore, the investment to GDP ratio, which fell sharply from 34% in 2012 down to 27% in 2021, will recover. So Neelkant, the recent low in the last decade was 27%. What does that number rise to, in your opinion? And secondly, the narrative that we spoke about, the expectation, what does it mean in terms of individual sectors like power, real estate, industrials? Because many of them are trading at very high valuations. You also spoke about how cement and metals are likely to see higher growth because of the revival in the real estate cycle. So break it down for us sector by sector.
Thanks. So the on the base case, if nothing else changes, so there are no other policy interventions, we expect that this ratio will jump back to 34% by 2029 or so. The upside can come from government signing free trade agreements, and we know that there are several such agreements in the offing. There are several other changes, like say, for example, on semiconductors, where I think the investment sizes can be quite major. So as perhaps a new scheme comes up, maybe we could see another round of big investments. And then in which case there could be upside to these numbers. We could also see, if we finally see some significant changes in how urban infrastructure is funded. So for example, if the Finance Commission was to allocate more funds directly to city governments or some such changes, then we could see upside to these numbers. But on a base case, if we just allow market forces to work with no other policy interventions, we should reach about 34%. Now, the bigger question is, how do we play this in the stock markets? And from that perspective, our call is that the industrial sector, which is likely to be at the front end of the upside in order books, should be the best beneficiary, the biggest beneficiary. What we have seen as the economy has slowed down in the last 4 or 5 months, that the markets have moved towards the defensives. So we've seen the IT sector, staples, pharmaceuticals. So as the flows have kept coming into the markets and the indicators have progressively slowed. So in the last 4 or 5 months, we have seen cement volume growth slow down, power demand slow down, auto sales have been very weak. In our view, this is temporary. This is occurring because of an unintended tightening of fiscal as well as monetary conditions. We are already seeing with the RBI keeping liquidity in surplus, overnight liquidity in surplus for the last 2 or 3 months, that they are signaling that perhaps that on the quantity of money side, things have tightened too much and perhaps they want to ease now. We are also likely to see, as the year progresses, that government spending will pick up. In the first 5 months of the year, central government capex was down 19% year on year, but the government is keeping its borrowing targets intact. So this is temporary. In our view, this lull or the stagnation that we've seen in some of the industrial stocks is because of some apprehensions that the economy is slowing down for good, which we don't think is going to be the case. And so that would be the biggest beneficiary. We also think that cement as a sector, which currently now has seen the volume slow down, the EBITDA per ton is at like a decade low. In our view, as the volume growth picks up, this could be, from a PE multiple perspective, also quite attractive. In our view, the financials, in fact, banks in particular, are also among the cheapest sectors. The raw material that they work with, which is money, was in short supply. M3 growth had actually temporarily dipped below 10%. It is now slightly above 10%. But clearly, with the liquidity conditions easing, with the Fed's easing, allowing the RBI some more room to be more relaxed with its liquidity stance, there should be more of raw material that the banks can work with, and that should be beneficial for the banks as well. For some of the other, and utilities as well, right? So that's a sector where I think if power demand, currently it is weak, and therefore I think that sector has stagnated a bit. But we expect that as the GDP grows, I think power demand will grow as well. We are less on the PE multiple side because some of the growth that you see, for example, in real estate is kind of priced in. While housing and real estate in general will do well, so a large part of that growth may be actually already priced into. And so maybe there is a period of time correction. Some of these stocks are trading at very high multiples, but the earnings growth, even for industrials, the premium to the market is at an all-time high. But the growth in EPS is 25 to 30%. So if you just hold on for that for another year, the PE multiples start to correct. We also think that some earnings upgrades are possible. So that's how broadly we would like to manifest this in the stock market.
Very comprehensive view of what different sectors and the growth there would look like. Nilkant, we would have loved to chat a lot more, but completely out of time on this discussion today. But thank you so much for joining in today with your take on the capex cycle and the growth drivers going forward as well. Okay, with that, we'll do one thing. We'll slip into a short break, but here's some good news for our viewers. India's business news leader is now click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store. It's right here.
A 12-month-long internship, training on the shop floor, and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing.
Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, just wanted to focus on the chemical space because we have been talking about a lot of dumping taking place from China, a lot of dumping generally happening because global chemical prices have fallen down. Now, interestingly, what is happening is a lot of these listed companies and unlisted chemical companies as well, they're going ahead and filing an ADD or anti-dumping duty investigation request with the government. Recently, there have been 2 of them. First one has been on investigation concerning imports of soda ash, and this is not from China, but from Turkey, Russia, USA and Iran. And this is filed by a group which is Alkali Manufacturers Association of India, which is on behalf of DCW India, Nirma, we have GHCL, Tata Chemicals as well. All of them together have filed this application. Now, remember, even Chinese soda ash prices have been languishing due to demand headwinds. There has been capacity additions in China as well. So one is for soda ash. The other one is for para-nitrotoluene imports, which are exported from the European Union. And this has been done by Deepak Nitrite, which has filed the application bill before the designated authority. And stocks in focus on the back of this is Deepak Nitrite and Aarti Industries. Now, an alert for both of them. Of course, the anti-dumping duty investigation takes around 6 months to 1 year before it finally becomes an order. But the important part here is it's not only Chinese dumping that is happening now, it's happening from other parts of the country, of the globe as well. And that is something which is hurting the domestic chemicals industry because of lower prices. And that's the reason we are seeing an increase in these applications, and actually the authority also taking note of it, and they are starting investigation. So if it does actually go about and gets finalized, it would be a positive news for the industry overall. No immediate impact on the stocks, but sentimentally a positive here.
Okay, thank you very much for that. We will slip into a very short break. We'll come back and talk about credit card spending. Now, the latest report from RBI seems to suggest that credit card spending slowed down 13% in the month of August. Now, Nomura believes that this is as lenders are placing greater emphasis on maintaining asset quality. But we are entering into the festive season. So is there going to be a revival in spending? What are the early trends? We'll get chatting about that. Stay tuned.
Mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive .
Welcome back. You're still tuned into Trading Hour. Well, we are just entering the festive season and a lot of us like to shop as well. And this is via credit cards as well. Shifting focus to the credit card industry then, data for the month of August showed that monthly spending growth was moderating and it came at 13% on a YY basis, which compares with around a 19% number in July. This is driven by falling card additions and moderating growth in spend per card. August is the 5th consecutive month when net card addition has been below 10 lakh. To discuss this and more, we are now joined by Ravindra Rai, the MD and CEO of Bob Card Limited. Mr. Rai, good morning. Thank you so much for joining in. Just want to understand the trends that we've seen in September. Of course, we did see the short season, but we are entering the festive season as well. What are the spends looking like right now? Have we seen a better addition in the industry overall as well of cards?
Well, if you ask me, the spends have seen a little bit of a muted, growth over last year, basically because of how the season has been. Although there was a good rainfall across India and things have been looking good, but as you rightly said initially, the cards spends on cards have been going a little down, basically because and we also don't see an irrational kind of exuberance when it comes to the spending pattern during this festive season. Although sequentially Q-on-Q spending has been good, it's been around 10-15%. And also the year-on-year basis might also look good, but we don't see spends going to go through the roof this time. But having said that, if you look at the market, if you see the other card issuers, what they're doing is a lot of offers are coming in. Even we as Bob Card have bought in a lot of offers, hundreds and hundreds of offers that's been bought in to lure the customers. But the customers also have been very clear with the trend that has been going around. What we've also done is pushing the EMI based festive offers. I think we have just pushed it from 36 months to around 48 months. So this also is going to be a lever towards which we can see some spends going up. But as you rightly said, we are not seeing a big spike in spends, but spends will also definitely be there because that's what OND gives for us during the festive season.
So anecdotal evidence suggests that at least September credit card spending should be an uptick of 10 to 15% on a sequential basis, but it's not going to be exuberant. Mr. Rai, can you also talk about why the number of new card issuances has been under pressure? I believe for the last 5 months till August, it's been below that 1 million mark. What explains that?
Well, the data is perfectly right, but you should also see it in light with the regulators, the kind of focus which has been given towards the unsecured lending. So unsecured lending is in focus right now, and rightly so. And I really believe that India is a country where the regulators have been and on top of their game, and with due regards to that. And that is where I think most of the lenders have been very clear. So with the unsecured lending taking focus, the regulators, my pardon there, we all are taking a little bit of a cautious approach. But having said that, the growth has gone down basically because the kind of even if you see this time the weightage, they have increased it from 125% to 150%. So all that put together, we are treading it very carefully. Also, the delinquency rates have gone up. If you ask me, we have been treading very carefully, although we have sustained our delinquency rate below 3%. And it's a cautious aggression with which we are going across. So I think this will continue for the coming 2-3 months.
Quickly, if you can tell us, we are a little out of time, Mr. Rai. I wanted to understand if we are seeing higher delinquencies. That has been one of the concerns. Are they improving or the trend continues?
Well, if you ask me, Bob Card per se, we have sustained or below 3%. Luckily, if you say with the trend that is continuing, we are not catching up with the trend when it comes to delinquencies. But yes, we are cautiously treading this road because these are tough times for cards. But also, I look at it as an opportunity. Say, as the adage goes, get in when the market is low and get out when the market is high. The same way I feel if we trade very cautiously with a controlled aggression, I think we are up there. It's not as bad as it sounds, but of course we should be very cautious.
controlled aggression, right? That's the mantra, at least, that you're following, and perhaps many others in the industry. Thank you very much for joining in. Get into a break. We'll come back with more on the market. Stay tuned.
Actionable intelligence and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum ₹5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships.
Welcome back. It's time to get your CNBC TV18 exclusive. Shireen Bhan caught up with Mukhtar Diop, the Managing Director of IFC, to discuss more on their India investment strategy. Listen in.
By talking to you about India, because this is day 5 of your India visit. Take me through the snapshot of the trip so far.
It was an excellent trip so far, and I met with the Minister for Finance to discuss a little bit what IFC is doing. And it was very impressive to see how the priorities set by the federal government were aligned with what we want to do in India. And as a result of it, actually in the last 2 years, we have tripled our commitments in India, and India is the largest portfolio of IFC worldwide. So that just to show for us the importance of India. But what is interesting in our portfolio in India is not only that we are lending with the debt, but we are doing a lot of equity. And equity means that you trust the country, you trust the company, and you trust a long-term engagement with companies in India.
You've, of course, been long-term investors in India, going all the way back to 1958. You talked about tripling your investments in India. What's the outlook over the next few years? In fact, I'm given to understand that the IFC could invest more than the World Bank itself over the next few years.
Actually, we are already investing more than our sister organization, IBRD, the World Bank. It's because the need of the private sector are important. And we are talking about a country who wants to be the third largest economy in the world. And that will be driven by private sector investment. We have a country who wants to be a $5 trillion economy. We have states who want, I just came from UP, and in my meetings with the chief minister, it was clear, we want to become a $1 billion trillion economy very quickly. So the private sector will be the driver for this effort and exercise.
But it's a challenging environment. The global environment is going through a significant amount of volatility. Of course, geopolitical tensions and geopolitical pressures adding to the concerns and the challenges. Does that make it harder for the IFC to try and mobilize private capital, private investments? I mean, you had a record year in FY24, $56 billion, up 28% year on year, on track to the $62 billion target?
Yeah, on track, and I think maybe more. And I have a wonderful team, and the team my team in India is doing a great job, and I'm very proud of what they're doing. And I think that we'll be able to reach that target. And in fact, in the last 3 years I've been here, we've been able to double the annual commitment of IFC in 3 years. So we are in a right trajectory, and we will be keeping it and accelerating it.
Speaking of new opportunities, what's interesting is that you're not just looking at climate and infrastructure, you're also looking at creative arts as well. And you've had some meetings with people here in Bollywood. The IFC is potentially looking at investing in that space?
Exactly. When you must be saying IFC and Bollywood. What's
going on there?
What's going on there? There's something. I mean,
what is the script that you're working on?
No, it means that the world is changing, and there are some things which were not part of the world. We're not talking to each other, and I think that it's important that they talk to each other because of job creation, because of social impact, and so forth. And I'm a passionate of art, so I can see the value personally of it. If you think about Bollywood, for instance, if you want to change the social norms in a country and have the development rules that you want to have in terms of gender equality and so forth, movies are extremely popular, powerful. You can write the best report you want, you can say everything you want, but until the father and the mother go with a little girl to the movies and see someone they identify with, and we touch really their feelings, you will not have the change that you want in the behaviors that you expect people to have and the leadership that you expect women to have. So for me, it's not only about financial investment and return. I'll come back to that. But it's also the impact and really now the economics of it. It creates a lot of jobs. We all know that. It's very important for the image of India as well. I grew up, I'm a West African, I'm Senegalese, and you'll be surprised that when I was growing up in Senegal...
You watched Indian movies.
I mean, everybody watches Indian movies. And you will be surprised to see that in my own countries, people who don't speak a word of Hindi, who have never been outside Senegal, were wearing sari and learning the dance of Bollywood dances they were watching on movies. So, and when I was young, there was someone very famous, Albella, an actor.
Okay, Amitabh Bachchan.
No, but before that, even.
Before that, okay.
Yeah, and there were some actors that in popular neighborhood people knew. So what is happening today? You have great producers and great actors and great directors in India, but they are paid to produce something and to have a product, but the intellectual property doesn't remain with them because they're financed by a corporation to produce a movie or a series. So in fact, they don't capture the whole value linked to the creativity. So what we would like to do, and the corporation we would like to have with them, is to invest so that they can produce on their own without having financing, sell to these large streaming corporation, and keep the IP. That would be the game changer.
Okay, with that, it's a wrap on this edition of Trading Hour. But stay tuned. Halftime report comes up next with all the market action.
$25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme.
Midcaps see a notable recovery from the lows after a big slide, but declining stocks continue to outnumber advancing counters by a wide margin. Utilities, industrials and energy are the big drags, even as IT and FMCG remain relatively resilient.
The raft of business updates from prominent lenders, including the likes of IndusInd Bank, Federal Bank and Bandhan Bank, point to a rush for deposits, leading to a swelling of bulk deposits, even as loan growth is tempered.
Titan Kalyan Jewellers report strong jewellery sales in the second quarter following the import duty cut on gold. Despite the inauspicious Shraddh period, most jewellers line up store expansions to ride the trend and anticipated festive growth.
State Bank of India has categorized its MTNL exposure as non-performing asset. The move comes amid reports of the government working on reviving its telecom arm. The bank warns of legal action in case of default. Hello and welcome to Halftime Report on CNBC-TV18. I'm Ekta Batra and with me is Mangalam Malu. Well, it's turning out to be another rough and tough day for us at this point in time, especially for the mid-cap. So the mid-cap index is down around 2%. Advanced decline ratio is extremely dismal at around 1:5. So around 680 odd stocks advancing to around over 3,400 stocks declining. So that's the picture which is showing up on the Bombay Stock Exchange. We have a lot of cues to watch out for over the rest of the week, such as the RBI policy, and we will be kicking off earnings as well. So Mangalam, a lot to watch out for, but nonetheless, today is definitely a weekday. The Nifty below 25,000.
The Nifty below 25,000. So many factors playing out in the market, right? And remember, on Friday, we got good cues coming in from the Wall Street. The Dow was at a record high owing to a strong September jobs report. But all of that hasn't kept up the momentum for our markets. At high levels, we are seeing some selling, perhaps on account of a couple of factors. One, the Iran-Israel tensions continue. Secondly, the street is also factoring in the impact of the exit polls of the J&K and Haryana elections. And the third most important thing, ahead of the RBI policy, we'll also keep an eye out on what takes place with the Chinese markets opening tomorrow. A big outperformance is what we've seen in China, but over the last 4 trading sessions, on an average, on a daily basis, we've seen the FIS sell about 10,000 crores in cash in particular. Hang Seng up about 1.1% of the previous trading. Just keep an eye out on how it opens tomorrow after a week-long holiday. Though a couple of stocks doing better than the other parts of the market, AU Small Finance Bank stands out on account of their second quarter performance update. LTI, Mindtree and Emphasis are doing a lot better than the other parts of the market, again on account of the brokerage upgrade that has come in from JP Morgan. And finally, we have Natco Pharma. That too is in focus, holding mildly in the green on the back of a settlement order that has come in the US patent case over generic Ozempic, the semaglutide drug that we're talking about. Ekta, how does this impact Natco and what explains this outperformance that we're seeing?
Well, yes, relative outperformance at this point in time, but nonetheless, that's because it has the magic word Ozempic or semaglutide, which is attached to it. So, like you mentioned, the news with regards to Mylan and Natco is that they have a partnership for semaglutide. Now, Mylan and Novo Nordisk, which is the innovator of the drug, which is the innovator of Ozempic, have reached a settlement in the US on the generic version of this particular drug. But the terms of the settlement are confidential. All we know is that Natco and Mylan have signed up for it. Now, according to Natco, in terms of the investor presentation, they have said that they are key sole first to files, which means under the para 4 for Ozempic in terms of the 8 mg and the 2 mg version. And they are key sole first to files for Wegovy in all strengths. So what does that mean is that they can have exclusivity, 6-month exclusivity, which is basically standard when you say first to file. Now, we don't know the details of the settlement, but that's what first to file means. Now, Ozempic, remember, is used for diabetes. It did sales of around $14 billion in 2023. It was up 66%, and it is estimated to close this year with $17 to $18 billion. Wegovy, which is used for weight loss, that's also semaglutide, which is the molecule. The global sales are $4.5 billion. Now, Natco has said that on Ozempic, they are sole FTF on some strengths and they have shared FTF on some strengths. But 50 to 60% of the market value for the diabetes indication, they say that they are sole FTF. So for Wegovy, 100% of it, they are sole FTF. Wow. For Ozempic, 50 to 60%, they are expected to be sole FTF. So Natco right now is awaiting approval for Ozempic generic. Mylan is also doing the strategy for the ex-US businesses. So based on the tie-up that they've had, they have said that major regulated market businesses will be handled by Mylan, and rest of the world businesses, Natco will have some rights when it comes to Ozempic and I'm assuming Wegovy. Natco and semaglutide in India, that will be interesting, Mangalam, because March 2026 is likely when the patent expiry is going to take place in India, and Natco hopes to be in the first wave of launches. The company is hoping regulatory approval should come by then. But nonetheless, that should probably really disrupt the domestic market and probably even push up sales for a lot of these companies.
All right, let's see how that comes about. But like you said, the magic word, semaglutide, or rather Ozempic, has the street excited about that. But, a couple of brokerages are excited about the prospects for LTI, Mindtree and Emphasis as well. Even as, the IT stocks are looked at as a place to hide in this sort of volatility that we have. There has been an upgrade coming in from JP Morgan on both these stocks. Nimesh joins in with more. Nimesh, is your standout brokerage of the morning. These stocks are outperforming in an otherwise wobbly market.
Absolutely. Both are buzzing in trade and on good volumes as well. The top gainers as far as F1 is concerned. Now, in both the names, JP Morgan has today upgraded both the stocks, L&T, Mindtree and Emphasis to overweight. On L&T, Mindtree, they've raised the target price to 6,900. And on Emphasis, they've raised the target price to 3,400. Now, JP Morgan believes that both these companies are a proxy to the banking and financial services recovery plays. Now, they expect this is a vertical which has done well in the last couple of months. The commentary has been quite strong, especially from the US firms in the last 3 odd months. And again, with the Fed rate cut, the mortgages are also likely to improve in the US, which has been under pressure as well. Now, if that has to happen, both these companies could do well, because this will drive the overall discretionary tech spends over the next 12 to 18 months. and both these companies could be the biggest beneficiaries. Why I'm saying is because for both these companies, the BFSI segment contributes nearly 35% for L&T Mindtree and close to 60% for Mphasis, and hence both these could benefit. Now the upgrade is largely on back of EPS upgrades as well as multiple upgrades as well, and hence both have been upgraded to overweight now by JP Morgan. And on L&T Mindtree, the new target is 6,900, and on Mphasis, the new target is 3,400.
Okay, and as you can see, LTI Mindtree is the top gain on the Nifty, up around 1.7% at this point in time. So doing well for that particular counter. We'll take a short break, but up next we'll connect with Ghulam Zia of Knight Frank India, as Q3 2024 reported its highest quarterly residential sales this year. Let's see whether the trend continues or not.
Who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA. Also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership.
Welcome back. Well, for the markets, it's weak. Mid-cap index is down around 1.7%. We have a lot of the companies which are under pressure from the real estate space. So Prestige Estates, for example, is down around 1.7% as we speak. And a couple of these PSU banks as well. So Bank of Maharashtra, for example, is down around 2%. So there's just a mix of stocks across sectors which are under pressure from the broader markets. And as you can see, that's reflected in the advanced decline ratio. But let's talk about the real estate space. Q3 2024 has recorded what is the highest quarterly sales this year at 87,108 units. Sales have grown across all markets except for the NCR region, where sales have dipped by 7%. To discuss this and more, we have Ghulam Zia, the Senior Executive Director at Knight Frank India, joining in. Ghulam, hi, welcome to the show. Well, you know, all of this is back end. I mean, it's not really forward-looking data anymore because Q3 2024, while it did record the highest quarterly sales ever this year, rather, are you seeing that trend continue? And the reason I'm asking is that, you know, there's been some amount of uncertainty which has seeped into, say, the equity markets. There's some amount of uncertainty which is arising out of this entire geopolitical situation. So are people getting a little cautious in terms of expenditure? And is that already reflecting in the real estate space?
Thank you so much for having us on this show today. You know, first of all, your concerns are valid. In fact, these concerns are airing all over. The pulling back of expenses is really something which we are looking all around. However, the same is not reflecting in the transaction numbers of residential sales yet. So at least last couple of months, people have been talking, albeit in a hushed up tone, that real estate sales, residential sales are going down, but the numbers are not yet showing that. As we said, if you just focus on the numbers of this quarter, as you rightly said, almost 10% growth YOY. And that number itself is going to be the best in last 10 to 12 odd years. In 2012, we saw about 3.5 lakh apartments sold in a year in the top 8 markets. This year, we are poised to either equal or break that record. So while the concerns are there, the end to the residential sales is nowhere in sight. I would love to see a couple of more months, if not a quarter or two, before we convincingly talk about the trend. However, at the moment, the party continues.
At the moment, the party continues, but for how long, you know, because now everyone's thinking of it as, you know, having lasted for a lot longer than one was anticipating. So the question is, what next? I mean, with all these things happening around and maybe, you know, the equity market's also seeing a bit of a sell-off. So the wealth effect will start coming into picture as well. So from here on, what's your prognosis?
Let me just divide it into a certain sections. You know, when we are looking at these numbers, these are essentially driven by the upper end of the market, which is, you know, grown almost about 46% of the overall market, which used to be in single digits maybe about 3-4 years back. So the key point here is that mid to low end of the market is just not performing. And the reason of that was multifold. To start with, post-COVID, there was a huge distress in the lowermost segment. And after that, the home loan interest rate shoot up. These two things had a huge impact on the lowermost segment of the market. And then on the other side, from the supply side, because the developers realized that the margins and velocity of sales are much better in the upper end, everybody was focusing on the upper end of the market. So net, what happened is that all the transactions, most of them almost touching half of what is happening is upwards of 1 crore and higher. And that is a concern. The mid to lower end of the market hasn't really been performing at all. And now with the Pradhan Mantri Awas Yojana 2.0, which focuses on bringing, you know, lower interest rates by at least 150 to 200 bips for the lowermost segment of the market, here we are already looking at some expectations of improved transaction numbers down there. While it is not reflecting on the overall number, but we are expecting in times to come in next couple of months or couple of quarters, when upper end of the market will dry up or at least go slow, the lower end will shoot up. And that is where, if the answer is so simple, I would say that I don't expect much of an impact on the real estate sector per se, because if one segment has been doing exceedingly well, the other segment is just about starting. So net, I'm not expecting this the euphoria that you see in real estate market to die down for at least a year or two. With lower end of the market shooting up in next quarters, we will see much of an impact actually to cover up for the losses that you would see, or the slowdown that you would see in the upper end, taken over by the lower end of the market.
Okay, all right. Fair enough. But when you talk about pricing, then, while sales might not be impacted, do you think that pricing will probably stagnate across categories?
Well, pricing has been one of the problems that we are expecting to bounce, to actually haunt the real estate sector, especially in the mid to upper end. The price rise has been in a few markets like Mumbai, NCR, etc. The price rise has been absolutely not justifiable. The kind of numbers that we are always worried that if developers start jacking up their prices without really giving cognizance to taking cognizance of the market realities, it will bounce back, it will hurt them a lot. And which is already we are reaching that stage. So you're right, the price rise that has happened in last year and a half or two was actually something which we are worried about, and now it will taper off. So if your concern or question is about whether do we see any improvement in price rise, definitely not. We would expect the prices to actually cool down a bit. And going forward, affordability will be under question, and hence developers will be smart enough to realize that velocity of sales is more important than keeping the prices high. So somewhere we do see the prices cooling off in the upper end of the market, but with lower end recovering, I would really expect that the prices would still not be that much of a problem in the lower end of the market.
All right, take that point. Always a pleasure speaking to you and hearing out your views on the real estate space. Wish to continue our conversation another time as well, post-festive season. Perhaps we'll do a demand check once again. Let's step into a short break now. And as we do that, let's give you some good news, which will appear right here in a moment. This one is for you, viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. What you do with this app is get instant access to all the breaking news and in-depth articles and everything that's taking place in the financial world, which you would normally see on your television screens, will now come on your fingertips as well. What do you have to do for that? Nothing. Just download the CNBC TV18 app from either the Apple Store or the Google Play Store and stay updated on the move.
It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore.
Welcome back. Good time to get in Manish Athiramani's views on the index now. Manish, you've been talking about the Nifty moves on the Nifty for a very long time. Right now, with a near 5% correction from the top, almost 1,000 points, a little around 1,200 points. Where do you see this going? What levels are the important ones to watch out for?
Good afternoon, Mangalam and Ekta. Thank you so much for having me on the show. Well, if you recall, Mangalam, when we were at the high point, there were certain resistance points that we had spoken about. Those did resist. We have turned around from there. Given the current situation, I'm working with a very, very specific figure, which is 24,940, which is Friday's low, thereabouts about 20-30 points. I feel that's a very crucial level that we have to watch out for. If we are unable to close at that level, and we end up closing below that level, I feel we can see a further slide of another 500 points.
Okay, all right. And stocks?
Stock perspective, I'm working with 2 sell calls. My first one is on Reliance for a target of 2650, stop loss of 2850. 2850 to 3050 was a sideways zones on the daily charts, and we have broken that with good volumes. This makes Reliance a sell candidate. The second one is on Adani Ports for a target of 1250, stop loss 1430. This stock has actually broken down on large volumes while it was disrespecting the supports of 1430 and 1390.
Right, you're looking to sell Reliance and Adani Ports. Reliance in particular, quite a heavyweight on the index. So it looks like maybe, that your 24,940 level would also be under threat if one is looking to go short on Reliance.
Well, Mangalam, if you look at today's data, you did break 940. We've gone up a couple of times. If you look at the market right now, while we speak, we are at 24,933, which is still trying its level best to really break that 940. But what I'm keen on seeing is that are we able to close below 940 or not? If we do not close below 940, this could well be a bottom and you can see some kind of trickles or bounce backs. But if we do break, then any kind of up move will be looked at as a selling situation.
All right, take that point. Thank you so much for joining in. Good time to also look at, what's happening in the F&O pack as well. If you just look at the intraday charts of both the Nifty as well as the Nifty Bank, you would see a fair amount of volatility. I mean, volatility is the only way to explain this market. We opened fairly well. Thereafter, there was a sharp dip. Then there was a recovery. That recovery was sold into, and currently as well, we are hovering around the lower end of today's trading range for both the Nifty as well as the Nifty Bank. And understandably, the India VIX has, showcased that with a jump of almost 5% after a big jump of nearly 30-35% that we've seen in all of last week. Off the record high, we have the Nifty Bank down about 5-6% each. The mid-cap and the small-cap indices have it much worse. And even today, the pain is largely in the broader market, so portfolios would be feeling the hurt. 2,200 stocks which are declining for just about 260 stocks which are in the green right now. And the BSE circuit summary, if you look at it, 186 stocks are in upper circuit. Compare that to stocks in lower circuit are 545. The interesting data here is that none of these A group or B group investable stocks are in upper circuit, telling you that all the decent quality stocks are way off upper circuit, and 545 of them are actually in lower circuit itself. For the Nifty, the markers are pretty clear. 24,900 put is extremely active today, and on the way up, 25,100 call as well. So 25,100 call has seen some writing. At the lower level, maybe 24,650 to 24,700 is a support that the street is eyeing, at least in the very near term. But there are a lot of triggers to track as well in the very near term. We have the Iran-Israel tensions, which are still underway. We're looking at China reopening tomorrow, and then we have the RBI policy meet this week. So all these factors leading into the second quarter result season is something that we will be keeping an eye out on. Take a short break, come back, tell you more on the markets and a lot of individual stocks on the other side.
Next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000. with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Welcome back. Well, weak for the markets as yet. So we have the mid-cap index, which is still down around 1.8%. The bank Nifty has been quite volatile today, so it's down around 325 odd points as we speak. And we have the Nifty, which is still under pressure, so below 25,000. 24,896 is currently where the Nifty is. But the market, as it continues to be volatile today, where exactly is it headed? Money Control has asked a bunch of market experts and conducted a poll with some key questions. Vinny Motiwala is standing by with the top takeaways from this poll. Vinny.
Good afternoon. Yes, in terms of the latest findings that we're seeing coming in from the Money Control's expert poll on Indian markets, indicating that it's currently seen as expensive. Experts are forecasting a potential 10% correction that one could be still watching out for from the current levels. And this is despite the recent high correction that we've seen for the Nifty as well as the Sensex. Now, let's look at what are the key questions that were asked to these experts. The first one was in terms of the geopolitical tensions. Current scenario over there, plus China that is coming back, the stimulus that is given, is that worrisome? So yes, what is coming in is 52% of these experts actually believe that, yes, the current rising stemming issues in terms of geopolitical tensions and the China coming back and making a recovery, that would be more worrisome than the past events that one is watched out for. The second big question is in terms of the risk that currently the Indian markets are facing today. Which of them is the biggest risk? Now, in that, 54% of people actually highlighted that experts said that high valuation is a big concern for the Indian market, and they have been overvalued is what the word is coming in. So following the next one is in terms of earnings disappointment. That could be a big concern and worry as the risk in terms for the Indian markets going forward. And lastly, geopolitical tensions. Obviously, it's an important concern coming in, but that's taken a bit of a backseat. 20% people believe that only that would be a main worry coming in. So yes, keeping an eye on that. Moving on to the third question, we also have everyone who's closely watching out for where will the Nifty be ending in the calendar year 2024. So 16% of people actually believe that 23,000, below that level, only 16% believe. The highest range that we're seeing coming in is from 25,000 to 27,000, where a majority of experts believe that this is the range in which the Nifty could potentially see an end coming in, while above 27,000, slightly bit more optimistic, but very few over there, just a 4% mark that we're watching out for. Let's move on to the next question that we have is in terms of deployment of cash. Where should one be investing their money? In the past, we've seen that mid and small cap rally, but now seems like experts believe that 76% of them would be looking at large caps. Let's not forget the sentiment is quite weak. Outlook is taking a bit of a beating. So it seems like experts will be looking at large caps versus the small and mid cap. And lastly, in terms of the question that we are watching out for as well is as many as 64% of the experts believe that Indian markets are currently expensive. We've spoken about this time and again as well, and that is what these experts are highlighting. While 36% believe they're reasonable, there was an option given that is it cheap? None of them actually believed in that option. So very expensive, and that is why, maybe we could be seeing a correction coming in the markets.
Okay, all right, Vinny, thanks very much for that. So that's an interesting poll coming in there. And the majority think that, the markets are expensive at this point in time. They would probably look at large caps versus broader markets now. But Mangalam, you're looking at Nestle. There's been a leadership change after over 2 decades.
After 2 decades. In fact, after a decade from Suresh Narayanan's leadership. So if you just look at a couple of things, in FMCG companies, typically wealth creation happens the most amount of delta when there is a leadership change. We've seen that in the likes of Britannia. We've seen that with Nestle as well, where Suresh Narayanan took over, or Pidilite, where Bharat Puri took over, etc. as well. So now it's for the first time, if I remember correctly, that the company has gotten an external candidate to lead the India business. So Nestle has gone ahead and appointed Manish Tiwari as MD effective 1st August 2025. Why is that? Because Suresh Narayanan, his term ends in July 2025. So he retires with effect from July 31st, 2025 after having a stellar 26-year-long career with the company itself. What was Manish Tiwari doing, or what is he doing before leading Nestle? He is the country manager at Amazon India. He had been with Unilever for 20 years before Amazon as well, so does bring in the leadership chops, and at the same time reinforces the theory of Unilever actually being a CEO factory as well, because Suresh Narayanan too is an alumnus of the Unilever factory too. Manish Tiwari obviously is an MBA from IIM Bangalore, so brings in both the credentials, the experience to lead the company. So it will be interesting to see how he grows the digital vertical and category growth of Nestle at a time when the consumer sentiment is weak itself. And Nestle has seen a fair amount of crisis, for which Suresh Narayanan was the man, because he joined the company as the leader in August 2015 in India in the middle of Maggi crisis, led and grew the company through not only the Maggi crisis, but also demonetization, GST implementation, and the biggest of them all, COVID. And under his tenure, from the time he joined in the middle of the crisis to the trailing 12 months, the sales of the company have increased by 150%, EBITDA has increased by 300%, margins have improved by 500 basis points, and the net profit has grown nearly six-fold. As a result of which, the street has rewarded, Nestle. The market cap of Nestle on an already high base has actually grown nearly 5 times under his tenure in the last 10 years. So we wish Suresh Narayanan all the best for the second innings of his career. He has told us that, he would like to teach in the second innings of his career by giving back to society. But more importantly, all eyes will now be on Manish Tiwari, especially because it's the first time an external candidate has been brought about to lead Nestle. Typically, a big inflection point for any FMCG company when the leadership change happens, and also a lot of wealth creation opportunity. Let's see how Manish goes ahead and grapples with these challenges.
Okay, all right. So that's on Nestle. Thanks, Mangalam, for that leadership change taking place there. And an outside candidate, so that'll be interesting to watch. We'll take a short break, but a lot more on the markets and specific stocks. Stay tuned.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that make CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media.
Welcome back. Well, let's focus on Jupiter Lifeline from the hospital space. The stock has surged 27% in 2024. And ICICI Securities has initiated an ad rating on the company. It aims to double bed capacity to 2,500 beds over the next 3 to 4 years. We have Ankit Thakkar joining in to discuss the business operations with us and, a couple of targets as well, if he can share it with us. Ankit, hi, welcome to the show. Well, just wanted to start with the fact that, the company has this particular niche that it operates in, where it focuses on these micro markets, which is particularly in the western part of the country. And you look at, a well-insured population, which is underserved when it comes to healthcare. Give us a sense in terms of whether you're looking to expand this strategy, when it comes to other states across the country, or are you going to be limited to the western part?
So currently, we are focused on the western part of the country. We see two reasons to do that. A, there's a lot of opportunity still in the west. It is grossly underserved in our analysis. And two, we also see significant merits to a concentrated region strategy in terms of operations and expansion both. So for the time being, we are focused on the west. But in terms of scalability and the fundamental thought process and strategy, nothing really changes. This model is not something which will only work in the west, but as far as our focus is concerned, it's west for now.
All right, your focus is west for now. What about business in the very near term? Of course, the third quarter will be seasonally weak because due to festive seasons, there aren't a lot of elective things that happen. But for the entire year, what's the kind of occupancy that you're guiding for and the improvement in average revenues per occupied bed?
So currently we are operating 3 hospitals, and 2 of them, Pune and Indore, still have a significant headroom for occupancy growth. We are in mid 60%, I think, in Pune, and Indore we were just approaching 60%, but now we are adding more beds. So we are adding about 75-80 odd beds, which should be ready in the next quarter, which will help us to again, have more capacity, which we can utilize for occupancy expansion. On the ARPOB side, there will be predominantly inflation-linked ARPOB growth in all the units. Indore will have a little bit more scope with better case mix going forward. That should be the ARPOB story.
Okay, so you're expecting good amount of inflation-linked ARPOB growth at this point in time. You do have a lot of this capex coming up, 2,200 to 2,500 beds. How exactly are you planning to fund it?
So we still have some cash on our books. We are still sitting on about 300 odd crores on our books, and we are doing greenfield projects. We are not doing an M&A activity. So the cash has to be gradually deployed over the next 3 to 4 years. So our internal accruals, which we'll generate over the next few years, along with our cash reserves, we believe should be largely sufficient for our current expansion activity. But also we have become debt-free after our IPO for the last 1 year. So if necessary and if there's a good opportunity, we are also open to taking some debt to fund that.
All right, Amit, Ankit, thank you so much for joining in and giving us your view in the very near term. Short discussion, but of course, we'll keep coming back to you as and when we get updates on the business itself. Take a short break, come back. On the other side, we have Manisha Gupta joining in with MJ Khan, who's the chairperson at ICFA. Stay tuned.
As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 20th.
Welcome back. Well, Manisha Gupta, commodities editor, caught up with MJ Khan, chairman of the Indian Chamber of Food and Agriculture. Let's listen in to what he had to say.
I believe that this will be the first time, or not so often happens, that bumper crop does not result to crash in prices. So this time probably prices will also be maintained. So more yields, more production, more happy farmers and more happy country.
Would you say, Lyle, of course, a lot has been done and we've seen government take away some restrictions, whether it has been ahead of festivals, ahead of the Kharif crop or important state elections as well coming in. One, how would you look at the government restrictions being taken away? And what would you suggest on what really needs to be done as in a point 1, 2 and 3 within agriculture for a medium term to long term?
I believe that government must not apply the restrictions. First of all, taking away is not a happy situation. At the first instant, it should not be applied at all. Why? If government anticipates, and today the IT tools are available through which we can see more precisely the future situation. So predictions are more, even the sowing intention survey can be captured today the way it is done in US. So it is possible to see that what is going to be. And there are many other parameters by which IT tools can precisely predict or extrapolate the situation. So restrictions should not be applied. Even if there is a shortfall expected, government must import that much at higher cost. So instead of subsidizing other things, it can subsidize the imports to maintain the prices here, but not to give jerk to the trade. So restriction is not a good thing. So whatever temporary measures of applying the restrictions and lifting that before the election times or the other festival seasons is not a healthy thing. It's not an indication of a long-term sound policy decisions. So this is my first say. In agriculture, there are many things to be done, looking at reducing the cost of production to improving the quality in order to be more competitive at the global marketplace, because today we are in the trade about 2% of our share in the global trade, but in agriculture by value terms we are close to 9%, 8.5 to 9. So from here we have to go more.
A long way.
Correct. So every 1% increase will actually give extra trade of about rupees 60,000 crores or so. So therefore, from 2%, the current share, if you go to 3%, one can add 60,000 to 70,000 crore more to the overall trade. So a long way to go and a lot of opportunity in the process. So government has to increase that. To tap that, what all is to be done, that we need to discuss. One of that thing is that through precision agriculture, we need to improve the quality and reduce the cost in order to become more competitive at the global market.
You know, a couple of other things that I remember you talking to us. One, of course, has been commodity boards. Where do you think that is stuck? Do commodity industries need a stronger representation when it comes to that? And the second thing is about the GMO. That conversation also has been on for some time now. So when it comes to both of these subjects, what is your views?
I believe given the dynamics involved in the approvals of GMO, so all the broad indicators are going to be in its favor. Whether it is the concerns on account of exports, so Europe is not accounting that much, and rest of the world is going to account more, and the destinations, if we look at it, is increasing. So therefore, from that perspective also, and from domestic consumption and demand pattern perspective also, and then world over, there are many countries, Brazil and US, they are enjoying the benefits of that. Importantly, the technology breakthroughs are not happening in many crops. So scientists are seeing GMO as one of the surest kind of, this thing to achieve that. And industry and scientists both are on board on that. Government is inclined to that, given the opportunity that it throws up. So I believe sooner or later, in fact sooner, this GMO is going to be a reality in this country. Europe is not in a position to actually have its say through in terms of influencing the policies here. US has more, that's where the India is inclined to. So this is one reality that we all see coming a little sooner.
Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to
The Nifty Bank slips below 51,000 and the Nifty slips below 25,000, with the mid-cap index losing over 1,300 points as volatility grips Dalal Street. Utilities, industrials and energy are the big drags, even as IT manages to eke out some gains.
The raft of business updates from prominent lenders, including the likes of IndusInd Bank, Federal Bank and Bandhan Bank, point to a rush for deposit lending, leading to a swelling of bulk deposits even as loan growth is tempered.
Titan and Kalyan Jewellers report strong jewellery sales in the second quarter following the import duty cut on gold. Despite the inauspicious Shraddh period, most jewellers line up store expansions to ride the trend.
State Bank of India has categorized its MTNL exposure as non-performing asset. The move comes amid reports of government working on reviving its telecom arm. The bank warns of legal action in case of default.
Good afternoon, you're watching Business Lunch on CNBC-TV18. I'm Hormuz Fatakia. With me in a green jacket is Winnie Motiwala, but the screen above us is anything but green.
I was hoping it would be a better day today. Really, I was just hoping for it, given that the cues from US market were not bad. But clearly, that's not shaping up well. I think lowest point of the day.
Lowest point of the day indeed. And we're carrying on from where we left off over Friday's trading session. There's a sixth day of losses now for the index, down to the lowest point of the day, 360 points off the highest point. We opened in the green yet again, and similar to Friday's session, every single bounce is getting sold into on the index. And the current levels where we are, it's almost a 1,500 point drop on the Nifty from the record highs that it had made on the 27th of September. Almost every sectoral index is in the red, barring IT. The Nifty Bank has slipped below that mark of 51,000, which means it has given up all the gains that it had made starting the 11th of September, from where it had moved almost 3,500 points towards that record high of 54,467. It has reversed all of those gains. And what's leading the losses? HDFC Bank, as it was the case last week as well, contributing almost 50 points to the index downside. Reliance Industries too now has slipped to the lowest point of the day. 23 points is what is contributing to the index downside. Reliance Industries, mind you, was down 9% last week. It was one of the biggest weekly falls in a year that the stock had seen, but significant pain in the broader markets as well, Winnie.
Significant pain. Look at the mid cap, also down more than 1,000 points today itself. 1,300 is what we're seeing for the Nifty mid cap. 1,700 now that you're seeing the downfall coming in. So down more than 2% in trade as the Nifty mid cap. Small cap too, not anything in terms of a respite that's coming in there. So clear underperformance that's coming also from the broader markets today. A lot of names that are not doing well. So, pull up something like a Jubilant and Gravia. Railway stocks also. So RVNL, that's down and out in trade. We have Realtel Corp, that's also quite subdued in trade. And Bombay Burma is among the top Nifty losers that you're seeing in terms of the Nifty 500. So yes, keeping an eye out on all these names today. Not much of an excitement. Just one stock that I want to specifically highlight that is in the green today, on the back of a news flow that we have is Natco Pharma. That's holding on to green, a positive side, 2-3% gain is what we're seeing coming in. And this is on the back of Mylan and Novo, which is has reached a settlement in terms of a drug. So because of that, some bit of a green there. But other than that, not much green, only red is what we are watching out for today. And, how much more is the fall going to be is what I am looking at right now and where we would be ending. But yes, Nifty 24,798 around that.
Very crucial level, that 24,800, right? Gautam Shah also mentioned earlier this morning that if we slip below this mark of 24,800, we might see levels of 24,000 on the index. But we'll keep an eye out on the markets through the show. But beginning the show with some buzzing names as well. Kalyan, Titan, both of them are seeing some bit of green on the screen on the back of their business updates. Mangalam is joining in with more on that. Mangalam, how were the updates?
Well, the updates were good, but the stock price not as much. The reasons for that I will just tell you in a bit, because Titan is among the top Nifty losers. Even Kalyan is down by about 4%, and this despite a decent update coming in. For Titan, for instance, the jewelry business this time around grew by 26%, and this has been led by around mid-teen sort of like-to-like growth coming in the domestic operations as well. For Tanishq's base, this is quite commendable and a good achievement as well, especially after the muted first quarter that we saw. The company attributes this to the bump up in demand that happened after the government announced the customs duty cut on gold itself, which more than offset the lull that these guys saw in the Shraddh period as well. Why is the stock lower then? Because of a couple of factors. One, the non-solitaire studded segment, while it grew well, the solitaire business has not done well, telling you that the studded business for Titan has just grown in low double digits, which impacts the margins. At the same time, the street believes that maybe there has been some preponement of purchases on account of the customs duty cut. So have this street factored in, borrowings from the third and the fourth quarter revenue growth into the second quarter itself is something that we'll have to monitor. For Kalyan Jewelers as well, on a low base, the company grew by almost 37%. The India operations growing at around 39% as well. Same store sales growth of 23%. Here too, the demand jump through customs duty cut has offset the lull in Shraddh. So is this sustainable or not is the big question at a time that all these companies are going ahead and increasing their networks as well. For Titan in particular, what I'll be watching out for is the X of gold price hike. What has been the volume growth and particularly the margins. You'll have to watch out for margins because Titan had lowered their margin guidance to around 11% earlier itself. Can it sustain around that? And, what kind of trends they've seen in the festive season is something that we'll be tracking for both Titan as well as Kalyan. Good updates coming in, but is the best already in the price is the reason that, the stock is, both the stocks are actually seeing a bit of a decline.
Okay, thanks so much for that there, Mangalam. But Titan, Kalyan down and out. But other stock that is down and out is also Ola Electric, not performing well for some time, Hormaz. And, obviously we've seen those higher discounts coming in. There were brokerage notes that came in on that front as well. Today, although the stock is down 8%. So specific reasons that one should be highlighting. It's getting electrocuted in trade for a while now.
Well, it's not been a single day, right, since it listed that the stock has not been in the use. To almost 2 months now to its listing for Ola Electric, listed at its IPO price of 76, and within a few days, that is on the 20th of August, it made a post-listing high of 157. It was more than double of its IPO price, and since then the stock is now 43% lower from its post-listing peak, and that is the significant downfall that we've seen. A part of that reason also comes because of the fears of the loss in market share that Ola Electric is having. It started off the year with almost a 50% market share, that is almost half now to 25%. And where is it losing market share to? To the legacy players, of course. Bajaj and TVS been ramping up their EV operations. Bajaj Auto has made some significant commentary as well with regards to their EV operations. Both started off the year at around 12%. Now both of them are at 20% each. So losing market share is one reason why Ola Electric is facing some pressure on the street. We spoke to Bhavesh Agarwal as well last month, and he mentioned about this profitability as well. They reported a net loss in the first quarter after their listing. They mentioned that they're very close to break even on the EBITDA level, is what he said. And the market share and the situation will improve as their penetration increases, is what he had mentioned. But the current furor over Ola Electric right now is with regards to its customer service, and a lot of social media has been abuzz with this. And HSBC just last month, just a few days ago, had come out with this note that they had visited multiple Ola Electric showrooms which were overwhelmed with a lot of these services requests, and there is an acute shortage of skilled manpower in a lot of these service centers. And they've said that this service quality is one aspect that Ola Electric will have to improve before it launches its motorcycles in the market. That is one thing that HSBC had mentioned, and they've taken multiple steps to improve those problems, and they are transitory, and as a result of which they still have a buy rating on the stock. But this is because of this that there is, even yesterday there was a lot of talk on social media with regards to Ola Electric, and that's showing up in the stock price as well. 9% lower now, well below that mark of 100 and almost 45% below its post-listing peak.
Oh, that's a sharp fall that we're seeing coming in. But that one point you highlighted also in terms of service and skilled service required, labor, that is something that becomes a worry for EV because it's a newer place as well. But that's Ola Electric. Let's move on and get you an update on the former Tata Group Chairman Ratan Tata, the industrialist, has taken to Breach Candy, was taken to the Breach Candy Hospital in Mumbai earlier today and has actually issued a clarification on his health, stating that rumors regarding his poor health are unfounded and he is undergoing medical checkups due to his age and related conditions. He also reassures well-wishers that there is no cause for concern over his health.
Important clarification coming in there from Ratan Tata. Now, the two-day RBI Monetary Policy Committee meeting is currently underway to decide on key policy rates. The CNBC-TV18 Citizens Monetary Policy Committee expects a status quo on rates, but a majority expect a change in stance to neutral, which will facilitate rate cuts in the near future. Take a look.
What will the Reserve Bank and the MPC do to rates? Let me start with you, Sajid.
Hold rates, they'll pause.
Hold, okay, hold. Shaumyo?
It's
hold. Okay, Sonal?
They should cut 25 basis points.
Here's the first cut. Samiran?
No change.
3:1, sir, in favor of hold. Dr. Chairman?
Hold.
Hold. Okay, so it's 4:1 in favor of holding the policy. Change of stance. Will the MPC change its stance from the current withdrawal of accommodation? Sajid?
Change to neutral.
Oh, okay. Sonal?
Change to neutral.
Obviously, you voted for a cut. Samiran?
Hold on to the stance, but it's going to be a close call.
Okay. Shaumyo?
You'll hold on to the stance.
Okay. 2 holds, 2 change to neutral. Dr. Sen?
Change to neutral.
Change to neutral. I think your members are veering to your point of view. Now, the final question, when do you see the first rate cut? Sajid?
We're looking at December.
Okay. Sonal, I think yours is October, right?
Yes.
October. You already said that. Samiran, your first rate cut?
February or April.
Okay. Shaumyo?
February.
Dr. Sen?
Yeah, I would go with February or April.
Okay. So there you are, the majority expecting the first rate cut only next calendar, but there are at least 2 people dissenting and 1 expecting a cut right away. Makes it a very interesting policy.
Absolutely, an interesting one in terms of the MPC that we're keeping an eye out on. But on that note, let's just slip into a very short break. After the break, we'll come back with more updates and news on the other side.
Before crafting your investment strategy. How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks.
Welcome back. You're watching Business Lunch on CNBC TV18. Let's move on. And State Bank of India has downgraded MTNL's account to NPA category, and this is with effect from 28th of September. Ritu is joining in with us to give us those latest updates. Ritu?
Well, that's right. We've been reporting that as of the second quarter, most of the lenders to MTNL will start downgrading the account on account of MTNL not really honoring its dues. And SBI is the latest one after Bank of India and Union Bank of India to tag the account as an NPA. But the exposure amount isn't very large for State Bank of India. It's about 325 crore rupees, out of which the outstanding dues are to the tune of 280 crore rupees, which in a letter to MTNL, it has asked them to regularize in order for them to reverse the status of the account. Now, in this letter, State Bank of India has also sought various details, for instance, on the status of the land monetization to be able to recover its dues, on the recent MOU that they had signed with NBCC to develop about 13 acres of a land parcel in New Delhi for the liquidation of that to be able to recover dues. And lastly, SBI has also said that if none of these steps are taken, it will be forced to take legal measures, to get the repayment back from MTNL. Now, keep in mind, this is a state-run company. There have been reports with State Bank of India itself as questioned, saying the DOT said there would be no default and, the government would back the company and so on. And it has sought the status on that from MTNL. As far as we understand, the recast proposal earlier in June was rejected by the lenders. So we'll have to see what new plan the company now comes up with to repay its dues. The total outstanding from banks is close to 8,000 crores for MTNL.
Thanks a lot for that. We've been updating on this for a while now, as Ritu just mentioned. And time to get to a CNBC TV18 exclusive. Shireen Khan caught up with Makhtar Diop, the managing director of IFC, who revealed his plans to actively invest in Bollywood film production companies in India. Listen into a slice of that conversation.
That the world is changing, and there are some things which were not part of the world. We are not talking to each other, and I think that it's important that they talk to each other because of job creation, because of social impact and so forth. And I'm a passionate of art, so I can see the value personally of it. If you think about Bollywood, for instance, if you want to change the social norms in a country and have the development rules that you want to have in terms of gender equality and so forth, movies are extremely popular, powerful. So for me, it's not only about financial investment and return. I'll come back to that. But it's also the impact and really change.
Okay, you can catch the full interview today at 7:30 p.m. But let's move on. And Maldives President Mohammad Muizzu arrived in New Delhi last evening for his first bilateral visit to India. Earlier today, President Draupadi Murmu and Prime Minister Narendra Modi welcomed Muizzu at the Rashtrapati Bhavan. Later, the Maldivian President and PM met at the Hyderabad House for their bilateral talks.
Time for a short break here on Business Lunch. Up next, Money Control asked a bunch of market experts and conducted a poll with some key questions regarding the outlook on the Indian markets. Stay tuned the other side of this short break. We'll be right back.
Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma. Various diplomas mentioned.
Welcome back. The Nifty now well below 24,800. But where is the market headed now? Money Control asked a bunch of market experts and conducted a poll with some key questions. Vinny has hopped over to the wall with the key takeaways. Vinny, over to you.
Absolutely. And in this such a time, we really want to know what's going to be happening to the markets. And the latest finding from the Money Controls expert poll on the Indian market is indicating that it is currently seeing it as expensive. And most of the experts believe that there's a potential 10% correction from the current levels. And this is despite the correction we've already seen in the markets from those recent highs. So yes, there's a bit of a worry. Now let's look at the key questions that these experts were asked. The first one was in terms of the geopolitical tension as well as the China risk that's increasing, given that the government had announced China stimulus over there. So what is that going to be? Is that going to be more of a worry versus the past that we've seen in terms of events? 52% believe that that could be a big risk coming in, while 48% believe no, that's not much of a worry coming in. So yes, China factor as well as geopolitical tensions, most of the experts believe that that is a bigger risk that we're watching out for. Other than that, let's move on to the next one. The biggest risk that they're facing in the market today. What is the biggest risk that one is seeing? When it comes to the biggest risk, a significant of 44% of the panels and experts believe and point out to high market valuation. Is it overvalued? The Indian markets are overvalued. Yes, high valuations, 44% believe that. Other than that, following closely there is earnings disappointment. They believe that that could be a big risk for the markets. 36% of that experts believe that that is a risk there. And obviously, there is a threat that comes in from the geopolitical tension. It's an important one as well. But 20% believe, and that seems like that's taking a backseat, that, in terms of domestic factors, could be more of a play than geopolitical tensions in terms of the risk for the Indian markets. Now, what everyone is closely watching out for is where is the Nifty going to be headed? Where is it going to be closing in 2024 calendar year? 16% experts believe that we could see a dip below the 23,000, while 23 to 25% believe 23 to 25,000 mark is what they believe. 32% see that in the range that we could see a close coming in there. 25 to 27,000, we have around 48%. So majority believe that that is the range where it will be closing, while about 27,000, very few that are very optimistic on the markets right now. It's just 4% of the experts believing that. In terms of deployment of cash, where should they be deploying their cash in the near future? What are experts looking at? Most of them highlighted in terms of 76% of them said that they would be looking at large caps, while 24% said mid and small cap is something that they would still be looking at. Let's not forget, we had seen that trend changing because mid and small cap was the trend last year. Seems like that's going to be changing given the market sentiment is falling as well as the outlook is a bit bleak. So concerns on that front. And lastly, in terms of what they're saying in terms of respondents that believe Indian markets are currently overvalued or very expensive, then we do have a good percent of 64% people and experts believing that it is expensive, 36% believing it's reasonable, while just 0%, not just 0% said that it is cheap. So yes, no one thinks Indian markets are cheap, and that's what we're looking at. And maybe that fall something is what we could merit also right now coming in the markets on that front.
Vinny, thanks a lot for that. And on that note, it's time on this edition of Business Lunch from Vinny, myself and the team that put this show together. Thank you so much for watching. We leave you with the markets at the lowest point of the day. Mid-cap radar takes the action forward.
As well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand.
Okay, it's a day in the red. We are at the day's low. Good afternoon and welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. Across the board, any index you pick up, any sector that you talk about, it is in the red right now. Midcaps have taken a bigger beating. IT, for some reason, actually is bucking the trend today. It did slip into the red but has recovered and it's been very volatile. But for now, it is at the day's low.
Absolutely right. Day of pain as far as the entire market is concerned. IT, a couple of brokerage notes, upgrading the forecast as far as some of the ratings are concerned, especially with IT stocks that have exposure to the US BFSI space. India VIX is very, very strong, and that's another reason why you're seeing the kind of volatility that you're seeing. There's a brief attempt at recovery, but that too has seemed to be sold off into. Quite a lot lined up on the show. Let's start off with the top headlines. The Bank Nifty slips below 51,000 and the Nifty slips below 25,000, and the mid-cap index loses near 1,300 points as volatility grips Tree Street. PSU banks, metals along with oil and gas are the big drags, even as IT remains relatively resilient.
LTI Mindtree and Emphasis gain as JP Morgan upgrades both stocks to an overweight rating. The brokerage sets a target price of 6,900 rupees for LTI Mindtree, while that of Emphasis at 3,400 rupees a share.
Natco Pharma gains in trade as Mylan and Novo Nordisk reach a settlement over the Ozempic generic in the United States. Remember, Mylan and Natco have partnered on the development of generic Ozempic products.
Gujarat Pipavav Ports under pressure after reporting its Q2 FY25 operational update. Containers handled down 17.1%, while dry bulk volumes slipped 56%.
Federal Bank and L&T Finance correct after posting weak Q2 FY25 business updates. Federal Bank's CASA ratio declined sequentially, while advances gained 19.3% on a year-on-year basis. L&T Finance sees its rural business finance disbursals slip 5.4% on a year-on-year basis.
Okay, below the 24,800 mark on the Nifty, that's what we are looking at right now. Mid-caps down 2.2%. We are at the day's low and we've been making lower lows since morning after that brief recovery that we saw, and the Nifty was in the green as well. Mid-caps are down 2.2%. If we talk about the sectoral movers, the CPS index is seeing a big cut, 3.6% lower on that one. A lot of these stocks which have surged one way are seeing some profit booking now. Nifty Media, be it PSU banking index, the small cap index is down 3%. The advanced advance decline ratio is at 1:10 in favor of the decline. So that's the kind of fall that we've been seeing across the board, and that seems to be the case because last 2 trading sessions were bad, and today as well, bad for the bulls of course, and this despite the fact that global markets, we've been getting strong handover from there.
Well, you pointed out correctly, the advanced decline ratio is so weak, almost 1:10, and that indicates the kind of pain. Just to give some context, we've actually seen the sell-off intensify in the last 8 trading sessions. So if you just pull out the data, if you look at the mid-cap index, 3,500 points, almost 6% lower in just the last 8 trading sessions. That shows the speed or the velocity of which you've seen the fall. Again, the small cap index, again over here, 6% in the last 8 sessions. The Nifty or the NSE 500 index, a broader gauge, that too is down almost 4.5% in the last 8 trading sessions. But quite a lot of stocks is what Hormaz has on his list. He's standing by the wall. Hormaz, day of red today.
It's a yawning gap, right, between the advance and the declines. As you see that chart being pulled up, and you would see that yawning gap between the stocks that are in the red and the stocks that are in the green. A lot of and a considerable pain being felt within the mid caps and the small cap space as well, not to forget the benchmark indices. But we'll start off with the losers then within the broader markets, and Ola Electric is a stock that you cannot not talk about, now extending its losses. 9% lower now is Ola Electric, onto 90 rupees. Blue Star Bombay Burma is not having a very good day, as is Jubilant Ingravia, now 8% lower for the stock there. Vodafone Idea too among the top losers within the broader markets. PSUs in general are seeing immense selling pressure, and railway stocks are not far behind. All of these stocks have corrected anywhere between 30 to 40% from their peaks in the month of July. So considerable selling pressure coming in within the PSUs as well. Some other stocks, PSU banks that are under pressure as well. All of these, all constituents within the PSU bank index also seeing losses of anywhere between 4 to 5%. Stocks that are doing well and not so well on the back of strong volumes, and Avenue Supermarts was down on Friday, down today as well. Some stocks bucking the trend, Phenolex and JK Lakshmi seeing some gains today on the back of strong volumes as well. And lastly, plenty of business updates that came in over Friday and today. AU Small Finance Bank having a positive reaction to that, and Federal Bank having a not so positive reaction to that at the lowest point of the day, down 5%. Back to you guys.
Okay, a long list of losers today. Thank you so much for joining in as always, Hormaz, and telling us what stocks are moving in the broader markets. Let's do one thing. We'll slip into a short break now. Rajesh Bhatia from Uflex will join in to discuss the new capex that the company has planned in aseptic packaging facility in Egypt, and a lot more.
Foreseeing change, growth and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated for investing.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. Uflex is the stock on our radar. Company's arm Flex Asepto has decided to set up an aseptic packaging facility at Egypt with an investment of approximately $126 million. Do note the company has around 463 million rupees of the capex upcoming in FY25. To discuss this and more, we have Rajesh Bhatia, the Group President CFO at the company, joining in now. Mr. Bhatia, good afternoon. Thank you so much for joining in. Just some more details on this capex that you've announced. By when do you plan to commercialize it? What is the asset turn expected here? How will you be funding this capex?
So we are looking at commissioning this by third quarter of FY26, and we're going to spend about $126 odd million, mix of debt and equity. Largely debt, I can say about 1/3 equity and 2/3 of debt. And, like our aseptic packaging business here in India, which we are expanding to 12 billion packs a year, this facility would be 12 billion packs a year. And gradually, I think we are looking to ramp up the capacity utilization at this plant to about to the full capacity. But, these are new territories for us. Obviously, when we started in India as well, it took time for us to penetrate. So these are the markets which we are looking at currently, the local market in Egypt and the European market. And given that Egypt has an advantage to export to Europe in terms of the duty. So there is no duty when you export from Egypt into Europe. And obviously, the big market here is the Europe, which we are eyeing. And it's a natural, sort of expansion of our existing aseptic packaging business from India to take it to global, as we had done earlier with our packaging films business many years ago.
Mr. Bhatia, you've given us the rationale. You've indicated that, this particular plant at Egypt will look to go ahead and cater to the European market. In terms of broad numbers, what is it that you could share in terms of the opportunity size that you see as far as the European market is concerned? You said that you're expecting it in the second half of FY26. So when can this particular facility start kicking into your own financials? And what would be the kind of opportunity that you're looking at?
I think we will, a 12 billion packs overall, you will look at about $150 million odd top line. And EBITDA margins, difficult to say at this point in time, but we expect about better EBITDA margin than what we have in the packaging films business. And obviously, this is one business which we are now planning to take global, given our success here. From India also, as we speak today, there's 70% what is sold in India from our Indian plant, and about 30% is what is exported, which is today to Southeast Asia, as well as to a little bit to Nigeria, and then to Middle East. But this particular facility will largely look to supply to Europe and Egyptian, slightly African markets as well. So I think we have to keep a longer time frame as to when we reach our 12 billion capacity on this, and we'll be progressively keep on informing about the capacity utilization of this plant. But I think this will take some time. Like if I were to say in India, how did we go from 3.5 billion packs to about 12 billion packs, which we're going to commission by the end of this year? So it's a 6-year kind of a journey. So hopefully we can replicate this in that plant as well.
All right. Mr. Bhatia, if you can also talk to us about your PET chip plan. It was to be commercialized in Q3 FY25. Is that on track? Will that start contributing to revenues in FY25 itself? And in that case, what kind of volume growth, realization growth are you expecting in FY25 with the margin number as well?
So this number for the PET chips, I think we are largely thinking of utilizing it for our internal consumption in Egypt, in Europe, in Poland plant, in Nigeria, and in Dubai plant, and if required in our Mexican facility. So this facility is largely captive, and so initially, when we look to substitute our outsourced raw material for our BOPET films plant with this, I think we're looking to only the margin expansion with this business, which may be anywhere between 1.5 to 2% range for in the packaging.
Mr. Bhatia, give us a sense directionally how Q2 panned out. Number one, demand. How did raw material prices pan out over there, and how are the spreads as far as the BOPT as well as the BOPP when you're comparing it on a sequential basis?
So I think definitely much better than what we had in Q2 of the last year. And clearly the Q1 set the pace for that. We already, the numbers for Q1 are already announced. And Q2, as I had said earlier as well, that, if we look at the Q1, the substantial quantum of the price increase came into being after the first fortnight of June, which means that it have a full impact of the this quarter will have a full impact. Having said that, thereafter the BOPET prices went down a bit, they came up again, so there has been a bit of sort of up and down kind of a momentum, but the PET prices are quite reasonably stable, so the margins are definitely going to be better than what we had in the Q2 of last year as well as in Q1 of the current year.
Okay, yes, and the stock price also shows that these stocks have recovered, the packaging film space and yours as well. Thank you so much, Mr. Bhatia, for joining in and giving us all those details. So looking very positive on the new capex that the company has announced. By the way, the markets have slipped further. It's a 300-point cut that we're looking at on the Nifty, very close to that 24,700 mark. At the day's low, the mid-cap index also is down further. It's a 2.3% cut. When we started the show, we were down around 2.1. So watch out for that one. There's a continuous slide from the top as well. But as we slip into a break, here is some good news for you, our viewers. India's business news leader is now click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store.
Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of Rs 5,000. with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of Rs 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry body, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Welcome back to Mid-Cap Radar. Well, now on to the big CNBC TV18 exclusive. In a rare interview, BK Goenka, the chairman of Welspun World, tells Nigel that he expects Welspun's B2C India revenue to grow 6 times in the next 5 years. He adds that India is set to play a bigger role in global home textiles market. Let's listen in to a few experts from that conversation.
Well, Mr. Goenka, as we get into the end of any calendar year, the big question is, what is the recovery in the United States? And you get some sound bites coming in from Costco as well as from Walmart. They are indicating that things are on the mend and demand is strong. The US market is very important for you. I think out of every 4 towels that are sold, 1 comes in from Welspun, and every 7 bed sheets that are sold, 1 comes in from Welspun. So you'll have a proper sense about demand out there. Are you seeing signs of demand recovery?
Well, US is very important market, as you said, very, very important for us. And is the largest market in the world for the home, for anything that matters. I think, and when we see the current demand, I think you can see around here, I mean, we are fully running 100% at 100% capacity. So the US market is looking good in times to come.
So it's good news then that the US demand is strong. Also, you know, everyone's been talking about the China plus one. And Bangladesh as well has got into a lot of political instability of the recent past. How big an opportunity it is. We'll come back to the B2C business here in India, but as of now on the global stage, India has a big role to play.
So India is already playing a big role, particularly when we talk of home textiles.
Right.
I think we are already a major market share. When we talk about US, it's 50% market share. In US is from India.
Yeah.
You know, out of that, we are 25% market share. So China plus one story is definitely there. But when you talk about home textile, I think we have a much better and a stronger presence as a country, as a company.
For Welspun Living, how big can the B2C domestic part of the business become?
So as you know, I mean, Indian market, particularly when we talk about home market, is growing at a rate of more than 15%.
Yeah.
And post GST, when we see the whole consolidation happening, everybody's aligned, I think we are seeing a huge advantage for a company like us.
Yeah.
And I can say today, we are growing at a rate of more than 20% per annum in the domestic market. And we have a clear-cut target to become, like you said, every 4 towels sold is sold by Welspun. I mean, same way, 25% of the market share in India. In next 3 years, we are trying to capture it.
So what would that mean in terms of a revenue number for the B2C part of the business?
So currently we have around 600 crores of domestic market under the brand of Spaces as well as Welspun.
Yeah.
And I think that is growing at a rate of 20% CAGR. So in a 3 years time, it will become double. And I think in the 5 years time, it will become, 6 times from here.
All right, 6 times from here. So it will be more than a 3,000 crore business in 5 years from now. The other smaller part that is housed under Welspun Living itself is the flooring business. Now that's going at a run rate of around 800 to around 1,000 crores on an annual basis. How do you see that business shaping up? Because there is a big push as well for the flooring segment.
So it's a new product for the market. Initially, we had some struggling. I think it's settling down.
Okay.
And we are seeing a good potential in times to come. We are growing at a rate of 10 to 12% there.
Yeah.
I mean, as you said rightly, we are doing around 1,000 crores. But mostly it is coming out of the export. And domestic market, we are still at a very small overall small percentage of the whole revenue. But I think in time to come, that will grow.
Any numbers you want to give us?
I mean, currently is only 15% domestically, 15 to 20%. That can go to 40% overall in time to come with the overall export and domestic mix.
And do you think at some point of time, since the flooring business has huge potential, will you look at carving out one of these businesses and maybe listing it separately?
I mean, it comes coming within the same textile part of it. At this stage, it's difficult to answer that question. But whatever is good for creating shareholder value, we'll take those calls.
Welspun Living, at a capacity utilization level, what are you functioning at? And when is the next stage of capacity addition that you're going to announce?
So we are running around 85% plus right now. I mean, overall home textile as a group.
Yeah.
And we already announced about the expansion of towels. We are adding the new range of towels for the beach, for the kitchen, the whole range, where we are going to invest around 400 crores in going to be commissioned by early next year. That will be adding another, capacity by 15%.
Okay, all right. And also, another quick question is the promoter entity, they went and sold a small block in the recent past. I think the holding was a little over 70%, it came down a little bit. Any further plans to divest some stake? And what was the reason that you sold that?
I mean, primarily, as you know, we are holding 70% plus. And it is also part of the liquidity to create the right kind of liquidity in the market. And whatever the need for our own expansion plan in our different areas, I think that was a need. And we already said that next year or so, we are not going to further divest in our stake.
Well, do catch the full conversation with BK Goenka at 4:30 p.m. today, only on CNBC-TV18. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a team.
Hello and welcome to Your Stocks in the Mumbai News Studio this Monday afternoon. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session which is extremely weak for the markets from the get-go, and we have the mid-cap index which is reading under pressure. Yes, we haven't seen any more exaggerated losses beyond that 2% cut, but nonetheless, the advance decline ratio has been extremely dismal with no sort of recovery in sight at this point in time. We have the Bank Nifty which is under pressure also. So we have the Bank Nifty which is down around 1.6% at this point. And do watch out for the India VIX which is spiked up quite significantly. It's currently up around 6% and on a year-to-date basis, it's in positive terrain. It's up around 3%. But month-to-date, that's basically what one should probably track in terms of the India VIX. It's gained around 17%, giving you the extent of volatility that the market is anticipating at this point. Hi, Vinny.
Hi, Ekta. Good afternoon. But markets, clearly that pressure continues on the markets. We saw that last week. Today, the first day of the week, nothing exciting because broader markets, that is also underperforming. Look at the Nifty mid-cap down almost 2% in trade. Nifty small-cap also clearly under pressure. And a lot of names, we're seeing that they're seeing falling in trade, especially from the PSU side or even the railway. So RailTel, RVNL, all of them also under pressure. Today, that's a theme that we're watching out for. Other than that, Jubilant and Gravia, VIP Industries, DB Realty, among some of the Nifty 500 names that are seeing a fall of as much as 7% in trade. So clearly, pressure that we're seeing is building on in terms for the market. Let's watch out for where it's headed in the last 1 hour of trade, that 1.5 hour of trade as well. But yes, that's what we're watching out for today.
Yes, absolutely. Well, joining us this afternoon, we have Asta Jain, research analyst at HEM Securities. Ruchit Jain, who is joining in to talk about the technicals of the market. Asta as well as Ruchit, welcome to the show. Well, Ruchit, before we kick off the queries, as usual, just wanted your call in terms of how you would approach today's weakness, because it is exaggerated for the Nifty as well as for the Sensex. The Nifty, in fact, is down around 241 points right now. We have the Sensex, which is close to a 700-point cut as we speak. And the Bank Nifty, too, is extending its losses. So down around 1.7% currently for the Bank Nifty. Your take on today's trade and how you would approach it, and what do you expect probably in the next 1.5 hours?
Yeah, hi, very good afternoon, Ekta. Very good afternoon to all of you. Well, the data clearly remains negative. What we have seen in last 1 week, this entire selling has mainly been led by FIIs, where the start of the October series in index future segment, they had long short ratio of about 81%, but that is now reduced to 58%. So they have unwound long positions and have formed fresh short positions as well. But still around 82,000 contracts are net on the long side, which may be getting unwinding today. So I think the near-term trend still remains negative because of the selling that we are seeing, and until we see this selling coming to a halt, I think we would see a continuation of the downward momentum. The only thing is that the lower time frame charts, the RSI setups are a bit oversold now, because since last 1 week we have continuously seen one-way correction. So I think there could be in between pullback moves from this support of 24,600 to 24,700, but any pullback move towards 25,200, 25,300 is likely to get sold into. So I think just from a trading perspective, 24,600, 24,700 is the range where markets might take some support and show some pullback move from there.
Okay, keeping an eye out on those levels and the support over there for the market. Good afternoon, Richard, as well as Asta. Let's start with the queries then that we have coming in from the viewers. Now, this first query is from Preetam Shah, who's writing from Gujarat. They're holding 25 shares of Trent at a price of around 7,000 rupees per share. So making some bit of a profit here right now. Stock is trading at 7,369 rupees. Wants to know whether he should continue to hold this or look to sell. What's the advice on this one? Asta, starting with you.
Hi, good afternoon to everyone out there. Talking about Trent, I think hold is a better option as of now, because we are still seeing some value going ahead in this counter, and we are giving the price target of around 7,900. So I think a lot of upside to go from here. That's why we are recommending hold. Talking about this counter, we have seen strong performance in Q1 FY25, and we have seen that they have reduced their losses in the Star Bazaar. So that is the major thing. And talking about Zudio, and Westside, so they have strong store addition for Zudio, and in case of Westside also, 228 stores of Westside with the 559 stores of Zudio across the 178 cities is one of the strong data to look upon, which it itself signifies that the company will be having a strong performance going from here as well. So we are positive on this counter because markets are weak. So we are seeing some sort of a weakness in the counter, but there's no need to worry. I think hold is a better strategy rather than booking out profit. And price target can be set at around 7,900 odd levels. But the horizon here should be medium term, because in the short term, we can see some sort of downside mode due to the market's volatility.
Okay, all right. And what about you, Richard? What's your sense on Trent?
So last, I think 14 months, we have not seen any red candle on the monthly chart. So this clearly indicates that the stock is in an uptrend, and any kind of declines that are coming in between, we are witnessing very strong buying interest in the stock. So the momentum setter readings are overbought, but I think these overbought readings should get cool off with time-wise correction rather than price-wise correction, because in such stocks where the buying interest is good, so I think the price-wise downside becomes very limited. So I think one can expect some time-wise correction in the stock in the near term, but does not seem that we would see any kind of significant price-wise correction. So if we can keep a time horizon of about 2 to 3 quarters of 6 months or so, then it's better to hold on to this one.
Okay, all right. Well, better to hold on to this one, Trent, which is up around 87% in the past 6 months. I just want to point out that now you are seeing that sort of weakness seep into the market. So it's becoming a little tentative as we speak. Like I mentioned, the Bank Nifty is really taking it on the chin, so down around 1.4%. As of now, to put it into perspective, there are only 13 stocks which are in the green in the Nifty space out of 50, and a couple of stocks which are just about holding their head above the water include something like a Cipla and ICICI Bank. So let's see whether ICICI Bank gives way, considering the kind of weakness that we've seen in the Bank Nifty. But let's see, there could be some amount of buying at lower levels as well, which could be emerging for the Bank Nifty, which was down around 1.5%, and now it's recovered a tad bit from the lows, but just about a tad bit at this point in time. Still volatile, you'd have to say, currently. Richard, any call with regards to the Bank Nifty and, banking stocks specifically today?
So if I combine the banking and the financial space, then FinNifty is looking quite oversold. So I believe that there should be some pullback move from current levels, even in Bank Nifty as well as FinNifty. But yes, the volatility is likely to remain high. So 50,500, 50,300 is the immediate support range for the stock. We did slip below that for intraday, but I think from a closing basis, that 50,300 would be very crucial mark to watch. But because of this oversold setup, these are not the levels where one should look for creating short positions. And in fact, if any existing shorts are there, then one can look to book profits and exit from short positions over there. So one can expect some pullback move in the FinNifty as well as the Bank Nifty index.
Sure, keeping an eye out on the Nifty as well as the Bank Nifty. And for Bank Nifty, Richard has highlighted 50,300 today as a closing level mark. Let's keep an eye out on that one. Let's move on to the next query then. Ritu Srivastava, who's writing from Noida, she's holding 30 shares of Zomato at a price of rupees 80 per share, currently trading at 264 Zomato, so making considerable profit here. Wants to know whether should she continue to hold or maybe book her profits out. Asta, what's the view on this one?
So I think because the profits are huge and we are seeing the markets showing downside. So here, if the horizon is only long term, then stay invested. But in the short term, I don't mind if some profit can be also booked at the current juncture. So partial profit booking is always recommended in such sort of market. So recommending partial profit booking and keep the partial holding for the price target of 295 to 300 in the longer term. So now talking about this counter Zomato, we have seen their strong performance across the categories, the acquisition of this Paytm entertainment business and ticketing business will really help the company in getting more wallet share from the urban consumers. So we are thinking that in the short term, we might see some sort of hiccups in the financial performance due to this acquisition, but in the longer term, it will always give a strong benefit to the company. In fact, the company's operational performance was also strong in the quarter gone by. So looking after all these factors, we are positive on this counter in the longer term. But here, since the investor is sitting on the huge profit, so I think partial profit booking can be done and keep holding the partial stock for the price target of 298 to 300.
Okay, all right. Thanks very much for that, Astha. So that's the view coming in on Zomato. Any views on that, Ruchit, in terms of, a couple of these new age listings?
Well, the overall trend for Zomato is still very positive. We have seen that high top, high bottom structure, which is getting continued. And if you look at the recent correction also, the stock has corrected along with the market correction, but we are not witnessing any volume-based selling in the stock. So in the absence of any volume-based selling, I think the price-based downside should be very limited. Major support for the stock is around 240, 245, where the 100-day moving average is placed. So I would advise to continue to hold on to the positions, and in case if one is looking for fresh buying in this, then if the stock corrects around 240, that could be good levels for fresh entry.
Sure, keep an eye out on those levels over there. But on that note, we're going to slip into a very short break. Don't go anywhere, because after the break also we'll be continuing with all your stock-related queries.
CNBC-TV18 is Adam Jard, and we're here to visit the facilities of Welspun World. We get an exclusive chat with Mr. BK Goenka to find out his vision for the group for the next few years.
CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government.
Welcome back. You're watching Your Stocks on CNBC TV18. We still have our experts with us, Asta Jain as well as Richard Jain, to solve all your stock-related queries. But let's move on and keep it going with the queries. The next one is from Raman Kumar, who is writing to us from New Delhi. Holding 40 shares of Suzlon Energy at a price of 14 rupees per share. Wants to know what's the future prospect of his investment here. Is it worth holding? Richard, I'll come to you on this one first. What are the technicals looking like for Suzlon Energy? What are you watching out for here?
Well, the stock has rallied significantly over last 1.5 years. The momentum readings have given negative divergence recently. So I think there could be some short-term corrective phase in the stock. But since his buying price is too low, I would recommend him to book at least partial profits, if not full, and hold rest of the position. In the near term, we expect the stock to correct towards 66-65 kind of range, where the 100 EMA support for the stock is placed. One need to reassess the situation again, whether the stock resumes its uptrend from that. But at current levels, I would recommend him to book partial profits and hold rest of the positions.
Okay, and Asta, what about you? Suzlon's given good returns in the past 6 months. Fundamentally, how is it placed?
It is placed strongly as of now, because what we are seeing that company has given these strong guidance also, and what we are seeing that installed capacity is 20.7 gigawatt as of now, but it will be going to increase and it will be around 24 gigawatt by FY26. So what does that mean? That means that there will be a significant increase in the CAGR as well as their return ratios. First of all. Secondly, I think this company is well placed because they are getting robust ordering, and I mean the tenders are coming from the government, and on that basis also we are expecting the strong financial performance to be continued by this counter in the future also. So recommending hold on this counter. Initial price target which we are giving to this counter is around rupees 80.
Okay, around 80 odd rupees is your target for Suzlon on the fundamentals. Now we have Shweta Tiwari, who writes to us from MP. She holds 20 shares of LIC, which she's bought at 700. She wants to know what to do, whether she should sell or to stay invested. Currently, the stock is under pressure. Today, it's down around 4%. But overall, right now, Shweta is sitting on returns. So what would your approach be, Asta, on this? Do you think that it's good for more upside?
I think upside, we really need to see the results first of all, and then we can decide that there will be a steam left in this counter or not. Although at the current juncture, what we have seen is that there is a strong growth in their AUM of around 60 16%, and now the AUM stands at around 53 lakh crore. So a strong growth of 16%. In fact, in their new business premium also the growth was significant, and they have a strong market share by new business premium at around 76.5% in Q1 of FY25. So updates which were given by this counter is looking decent, but we really need to see that how that reflect in the results. So my idea here is to book some profit since the investor is sitting in the huge profit, and remain invested in the partial quantity. Initial target which I would like to give to the stock is around 1020 to 1050 odd levels.
1020 to 150 odd levels is what you are keeping an eye on, Astha. But Richard, on the technicals, how are you looking at LIC? Because in the past also we've seen that 1000 mark, once it reaches around that and then it starts seeing a fall again. What's the word on the technicals?
Yeah, so we have seen some correction along with the broader markets in the last 1.5 months, but no, there are no volumes on the correction. So the stock is going down without any no volumes. So I think that indicates that no, at lower levels, whenever it comes around support, we could again see some buying interest over there. So the support is around 850 to 880 range. So I think there could be some more correction in the stock towards that 880 mark. But no, if the view is for mid to long term, then I would recommend to continue to hold on. And from those levels of 850, 880, I think the stock should again see some.
Okay, I think we've lost that connection with Ruchit, so we'll get back to him on any more queries. But we have Bala, who writes to us from Chennai now. He wants to know what to do, whether he can buy Poonawalla FinCorp at the current price from a 1 to 2 year perspective. Astha?
With the appointment of with the change in the management, what we are seeing, this company is looking after the investment in their technology, in their collection efficiency. So I think that all we really need to see in the results as well, because ultimately the financial performance is what the markets always look upon, and whatever the efforts the management are taking in order to revamp the business, that really need to be, certified by the financial performance. So right now, my idea here is to just wait for more decline and then make entry into the stock. And the better, idea is to just see the results and then make entry rather than going into this counter right now, because markets are also volatile and results season is about to kickstart. So whether, rather it is better to wait for the results rather than making entry as of now. So I would like to suggest here, wait and watch.
Okay, let's wait and watch for Poonawalla FinCorp's results and then maybe decide on what one has to do with that. But Ruchit, I'll come to you also for Poonawalla FinCorp. What is your view on this one on the technicals?
So the stock is in a short-term corrective phase, but has a good support around 330 kind of levels, where even if you look at the monthly chart, whenever there have been correction in last 2.5, 3 years, the stock has not breached its 40-day exponential moving average on monthly chart, which is around 330 now. So I would recommend a buy and dip strategy for the stock, because if the stock corrects towards at 340, 330 and you buy over there, then the risk reward ratio would also become favorable. So buy and dip strategy should be kept, and in case if we get dip around at 340, 350 range, then would be good. That would be good range to buy the stock.
Okay, all right. That's on Poonawalla FinCorp. Rahul Jain now writes to us from Pune. He holds 70 shares of Power Grid, which he's bought at 160. He wants to know what to do, whether he should stay invested in this particular counter or not. Power Grid under pressure as well, but overall Rahul sitting on a profit. Do you think, Ruchit, it would be wise to skim off some profits on stocks such as Power Grid also in this market?
So the longer term trend remains positive, but there could be some corrections in the near term because of the overbought setups, and 300 to 270 is where the major support range for the stock is placed. So yes, partial profit booking could be done, but if he has a long term perspective, then I won't recommend him to exit the whole quantity, but maybe 30 to 40% of the quantity which is holding can be booked over here.
Okay, and Astha, what's your view coming in on Power Grid for the long term? Would it be an attractive hold?
Yes, I think it would be. So we are recommending hold on this counter. Initial price target which we are giving to this counter is at around 350 odd levels. Talking about this counter, they have a strong pipeline of projects, and in fact management has guided a strong capex of around 250 billion or 300 billion. So I think that is a strong capex to look upon, which will in turn reflect the strong earning visibility also. So looking after all that, in the longer term, it is looking a decent counter to stay invested on. So recommending a hold. Price target is given at around 350 at this point of the time.
Okay. All right, Astha, as well as Ruchit. On that note, we're going to wrap up on the show. Thanks very much for joining and taking us through all of those queries. We wrap up on the show with the fact that the markets are even weaker than when we started off. So the mid-cap index is now at the low point of the day, showing a steep cut of around 1,500 odd points. We have the Nifty, which is down around 280 odd points, and the Bank Nifty, which is showing a cut of over 1,000 odd points. So a red screen is what you can see. But to put it into perspective, we just about have 9 stocks which are trading in the green in the Nifty as compared to 13 stocks which were trading in the green in the Nifty just a couple of minutes ago. So that's the update on the markets. Do remember, you can always email us your queries. We'll address them with our experts on your stocks. As of now, Closing Bell will take you through what seems to be a weak hour of trade.
Rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CI and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajaj at these times on CNBC-TV18.
Asian markets, all of them looking good, looking
like there could be some gains.
Support is a zone, 24,800 to about 25,000.
Mindtree to an overweight, and they've raised the target price on L&T Mindtree to 6,900.
0.4% up on the Nifty index, 25,118.
Metals and IT. I think these are the two places to hide.
We came out with a new coin that Har Ghar Se Har Dil Tak Welspun.
The government has approved our project for close to 3,400 crores.
The bear attack on Dalal Street continues.
State plus central government investments, they have been quite strong in the last couple of years.
I've never been outside Senegal, where wearing sari and learning the dance of Bollywood.
The Nifty slips below 25,000 and the mid-cap index loses near 1,300 points.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
You know, it looks like we're saying the same thing over the last couple of days, over and over again, which is the fact that we're deep down in the red once again. This is Closing Bell. And of course, the day that with the snapshot of the day so far, it was so different depending on what part you looked at, because there have been at least 3 different episodes playing out. And I think we're in the 3rd or the 4th one, depending on how you want to count things. This is, of course, the last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. There have been at least 2 attempts, right, when markets have seriously tried to pull back and recover from the lows. The last one was just about 30 minutes back. But alas, it's not lasted, and we're virtually at the day's low once again.
No, absolutely. And I think there's a fair amount of disconnect in global markets as well, because Asia, our neighborhood, was actually doing well. And the Hong Kong Hang Seng that put on more momentum. Japan was up about 2%. But if you're looking at Europe, there's a sense of caution in the market. US futures are also lower. And, it's very eerie. It is October 7th. So there's all kinds of sort of updates here and there. Reuters put out, a story on some potential sort of rockets being fired, but it wasn't apparently clear whether this was towards Israel or not. All this confusion has led to an uptick in oil prices. Let's not take our eye off the ball over there, because Brent now, after having rallied 9% last week, is up another 1%. It's at the doorsteps of $80 a barrel. So we have our own issues, and then these kind of headlines don't make it any better. Look at that, 1.5% now, crossing 79 on Brent, and NYMEX is rallying even more after an already very, very strong move last week. So yeah, local and global, we have enough to deal with.
I mean, no, absolutely. And, I just want to put out that intraday looks like it's just been basically one move, right? I mean, it's just down and down and down. But actually, it's not been. There have been bounces along the way, at least one meaningful bounce along as well. So the day's high, there you go. This is the 3-part move that I'm talking about. The day's high was after opening made at 25,143. Then the market sold off 345 points from that high. Then there was a 173-point bounce from the lows those lows, and then from that 173-point bounce, we're seeing another 211-point sell-off, which is the current one. Actually, it's not 211, it's about 240 now, because prices are changing. So it's like a 3-part movie which is playing out. We're off the lows, but of course, I mean, off the highs much more significantly. FI is selling. The general feedback is that there is a fair bit of FI selling across desks. And we'll get the number once again. Thursday, of course, was that 15,000 crore number. Friday was large enough, but not as large. And I think we'll brace for today. Government stocks, CPSE, PSU banks and energy stocks are some of the top losers across the board. And this is something at the margin, right, which I picked up, that, we're talking about flows and how much more selling. That is the question. Now, there are various ways to look at this, but at the margin, one argument I've heard that over the last actually US after last Friday and Japan over the last 3 trading sessions, they've become much more attractive. So if you want to fund, your exposure to China, and I'm not talking about long-only funds, I'm talking about hedge funds and fast money. If you want to fund your exposure in China, where do you take it out of? US economy seems to be strong, as the jobs data indicates. So they're cutting into a very strong economy. So it's the best of both worlds. And Japan, of course, has done a complete 180-degree about face after the new Prime Minister essentially said that, they'll keep interest rates low, etc., etc. It's a flip-flop, but markets like it. So I think that's the other sort of, it's a nuanced point, and it's not long onlys, and it's more fast money and hedge funds, as I said, but that's something I heard. And of course, the 10-year yield in the US has hit 4% as well. That's, of course, it's tagged to the rates right now, which are coming through. We left off at 3.93 on Friday and has gone past 4%. So just a few things to watch out for. Here in India, the RBI meeting is on Thursday, and I think it becomes a little more important. No change expected. But our own citizens' monetary policy, which Lata conducted, that indicates that panel basically voted for a change in stance. So we'll see if the MPC does something to that effect or not. I think with markets like this, it assumes a little more than usual importance. Reema.
Well, Asia was decisively higher this morning. So Nikkei, Taiwan, Korea, Hang Seng, all of them rallying anywhere between 1.5% to 2%. And there was this interesting data point that I picked up. They're saying that one of these Chinese ETFs has gone up 15% from the 30th of September, which is when the Chinese markets were shut for the Golden Week holiday. Remember, China reopens tomorrow, and the Chinese ETF is up 15%, which suggests that, perhaps tomorrow we're going to see some fireworks when Shanghai opens up for trade. So that's something that the street will be tracking very closely. But I think it's the, the broader markets and the way it's collapsed. So last week, the mid-cap index and this, frontline indices were down a similar amount, 2.5%. But today, you are seeing accelerated selling pressure in the mid and small cap universe.
No, absolutely. And since you mentioned China, Reema, again, just reminding all our viewers that tomorrow is also this apparent press conference where the government could be announcing more clarity and more details on the so-called stimulus package that everyone's awaiting. So the markets will get back after the holiday, and then let's see what are the specific announcements that come in. So it's a really important market day tomorrow in China. But yes, coming here to the broader market sell-off. So let's see what's going on. Two very clear trends. I thought I'll pick them out quickly for you. One is capital market plays. all the stocks that have gone through the roof because the market's been going through the roof. There's a fair amount of unwinding going on over there. So look at IIFL Securities. That stock's down almost 10%. Angel One has lost quite a bit of ground as well. Okay, by the way, before we talk stocks, I think you can see the first glimpses, the visuals of the IBLA jury meeting that's taking place right here in Mumbai, and our colleagues Ritu and Manglam there. Baba Kalyani, he's the chair this year. And of course, you will be soon getting to that glittering award ceremony towards the end of the year. But right now, I think Manglam's managing to pull him on the sidelines and get a conversation going on the overall sentiment, how India Inc. is placed. Manglam, if you can hear us, take it away. No, I think Manglam's going to take another couple of minutes. So it's a star-studded panel to pick out the best of the best when it comes to excellence in corporate leadership. And yeah, I think Manglam is finally getting into that conversation now.
To getting your insights on the India Business Leader Awards. But speaking about business itself, if you could, start by telling us how the business environment currently is, how has demand panned out, and what your prognosis for the next couple of months is.
Business environment is generally good. The CII survey just came out last week, I think, of 200 CEOs in India. And everybody said they're looking forward to a pretty good year, good growth. So I think overall things are good. Indian economy is doing well. Yeah, there are a lot of, red lines all over the place with the Middle East crisis going on, the wars going on. The Russia-Ukraine crisis seems to be a never-ending crisis. But otherwise, yeah, things are good. The US economy is doing well. Europe is a little slow. India is doing well.
Right, India is doing well, but the global economy still has a fair amount of issues, demand concerns, etc. We did get some of the numbers from the North America Class 8 trucks this time around as well. While sequentially there have been signs of improvement, they're still far from the best that they've been, right?
See, there's a misunderstanding in the media about Class 8 trucks.
Yes.
I think Class 8 trucks in America are doing quite well. All right? There is a cycle of vehicles in America based on which year the emission norms come in. So 1 year before the emission norms, you will see a big spike in the vehicle demand, which is probably going to happen next year. But right now the demand is good. It's running at 320, 330. Everybody is running their productions as per plan. There are no surprises.
Right. No surprises. So then what is it that you can talk about in terms of your utilizations, your margin outlook for this year? Raw material environment has been fairly volatile.
I can't talk about that because we are in a quiet period. Our results are going to come out, so I'm sorry. I can't discuss my company.
All right, we take that point. But, apart from your company itself, an ancillary regulatory clarity that the street is awaiting on is what happens with the Nandi infra or the Nandi corridor. The buzz on the street is that something is in the offing. Have you heard something?
It has nothing to do with me.
Nothing to do with you. All right, take that point. Thank you so much. So that was Mr. Baba Kalyani. He is the chair of the jury of India Business Leader Award. So we'll hear more from him shortly.
Mangalam, thank you very much for that. That's an interesting chat with Baba Kalyani. And of course, Mr. Kalyani is also chair of the jury. So that will be sort of interesting to hear from. And of course, as the jury deliberates and picks out the winners, etc. The jury meet, of course, is about to begin shortly, a bit from now. So some of the flashes, of course, at the bottom of the screen. Let's just go back to the market as well. We're down about 260. 24,747 is where we're at. Mitesh is with us. If you can go across to him. Mitesh, good afternoon. Good to have you here. 24,750 or so on the index. What next and what are the trades? What's the way to trade this?
Prashant, good afternoon. One, I think, we had a low of 24,750, which was made on the 9th of September, and then we had this rally to about 26,200. We're back there. The structure is looking like we will eventually break below this and go down. Now, we've fallen a lot. So let's first talk about the upside reversal point for me, which is 25,400, which means that till the market crosses 25,400, I'll be looking to sell on rallies. And two, I think, I'm looking at much lower levels. As I said, 24,750 is likely to be taken out. The first support for me comes in the range of 24,350, 24,200. Maybe we'll look at lower levels eventually. But I think that's the which I'm looking at as a minimum that the Nifty should test. So same negative, suggesting sell and rallies because we've had about this is the second week actually. We have had about 7 or 8 days of decline and we've dropped by about 1,500 odd points. So I think now is not the best time to initiate shorts. You can trade via put options, but on rallies and pullbacks, I would want to sell.
Okay. All right. Mitesh, got it. Thanks very much for the calls. We'll come back to you in a bit and let's just see how this plays out over the next hour or so. Let's quickly actually move on and look at some data that Hormuz has been putting together on the market fall. Hormuz, it's been really painful. I think 5 straight days and counting. What numbers do you have?
Painful indeed. It's the 6th day of the fall, and it's not something that it should come as a surprise, the 5%, 6% correction on a benchmark index from the top, but the ferocity of the fall is something that is concerning, right? It's a 6th session from the highs of September 27 to the lows of today. The Nifty is down almost 1,600 points, and the Nifty Bank, all the gains that it made starting the 11th of September till the high of 54,467 that it had made on the 27th of September, it's down almost 4,300 points. Reversing all those gains and then adding some more to that is the Nifty Bank. Now, the broader markets have been feeling the pain as well in equal proportions. The mid-cap index made a top on the 26th of last month. That's down 4,000 points as well. The small-cap index had topped out even earlier, as early as the 6th of September. And since then, the index is down 1,500 points. Which are the top losers on the Nifty? Of course, in terms of percentage-wise, of course, it is Power Grid, Axis Bank, but the stocks, the index heavyweights are the ones that are leading the charge on the downside, be it Reliance Industries, L&T, HDFC Bank. All of them are down anywhere between 8.5% to 9% since that top of the 27th of September. Now, even from the broader market space, if you would go, there's stocks like Mahindra and Mahindra Finance, Godrej Properties, Suzlon also has a mention here, RVNL, a high-flying railway PSU, down 13% from the 26th of September. Escorts, Kubota and Vodafone Idea as well, finding a mention. Vodafone Idea, fresh 52-week low in today's session itself. And the small caps, they are having a greater pain. 3 stocks down almost more than 20 to 25% from that September 6th top. And Raymond and ITI complete that list of top losers within the small cap space. Now, even 15 15 stocks within the mid-cap index are down over 10% from the peak, and the small-cap index, almost 31 names are down over 10% from the peak. Tells you the kind of pain that we are witnessing in the broader markets today.
Well, after the gain has come the pain. Thank you very much for that. But Mangalam is now in conversation with Sunita Reddy of Apollo Hospitals. Let's cut across.
Seek partial exit from that while holding a fair amount of stake in the company, so that gives you some capital to perhaps fund back into your own growth businesses?
No, we will not exit that business at all. It is not our intention, and I think we should wait for the quarter to come back with a concrete answer on the timelines.
So as of now, it's only IFC which is exiting and not you?
No, we're not exiting. No.
All right. And as far as your own acquisition plans are concerned, what are the assets which, in what part of the country are you looking at in some sort of assets and, increasing your footprint?
Definitely we're looking at Bombay, where we will definitely have two. And Gurgaon is where we're already there. Opening out in Pune in 25-26. Opening Kolkata. Also in Gachibowli and Hyderabad. So 4 hospitals coming on stream within the next 18 to 20 months.
And final question before we let you go, a word on the regulations. I mean, there is that fear of standardized pricing for hospitals. That's point number one. And secondly, the PM Yojana has been increased to all senior citizens upwards of 70. So how does that change things for you?
I think the PM Yojana doing something for senior citizens is a wonderful initiative. Very much needs to be done. How does it change for us? I think that for us, we were always looking after senior citizens, so not much impact on us, but we need to continue to focus on senior care. In the other part, I think we're all good.
All right, we take that point. Thank you so much, ma'am. With that, from hospitals, I'll toss it back to you, Ritu. You have someone who's talking about all things infrastructure.
Well, yes, I do. A very important voice from the infrastructure sector. In fact, Mangalam, Mr. Shankar Raman from L&T. Mr. Raman, let me just start by asking about the first quarter GDP numbers. Manufacturing sector, although solid at 7% growth, was a bit lower than the previous quarter. There was a bit of a decline there. I just wanted to start by understanding how the economic momentum is going for you, because, manufacturing really is representative of the economic growth. How are you seeing how conducive the environment is, for the growth of a company like L&T now?
I think the potential remains. There has been a bit of a disruption on the pace of things, and that's to be expected when you have such a large election. Yeah. Various combinations, political combinations, and all the consequences thereof will rub on all the initiatives that the government will take. But the good news is, I think, the present government is still talking about structural reforms, which I think is core to growth. I mean, we can keep growing the economy, but without a strong foundation, I think the growth will be weak and vulnerable. So I think it's very important that the structural reforms that the government is talking about actually gather space. To my mind, the GDP or the sectorial growth rates is a byproduct. I think if you have the right policies and right enablement, I think India is raring to go.
Speaking of India, 60% of your orders come from here, 40% from outside. But in that 40%, given what's happening outside with the geopolitical tensions rising, especially in the Middle East, an important area for you, how has business been impacted?
I think Middle East has been consistently buoyant. There is a tendency to monetize the oil and gas assets and to use the proceeds of that to finance their transition. So I think Middle East is in a way firing on two engines. One is to make sure when the oil prices are still attractive, they extract as much. And second is to use the proceeds and to build solar capacity, downstream applications, etc. Fortunately for us, I think the areas that Middle East is investing are the areas that we have over many years done well in India. So the skill set is there. It's just a question of ability to ramp up the resources and be able to execute projects on a much larger scale. Typically, as compared to Indian opportunities, the Middle Eastern opportunities is 2, 3, 4 times the size. So ability to manage scale to very tight timelines is something that is required. We have been doing well so far, and we hope this trend will continue. And if India were to pick up pace, which at the moment I would call it as slow and steady, then we would have 2 hairs running.
But no impact of what's happening in the Middle East with regards to Israel and Iran. No impact on your order flows, you believe?
I think Middle East has been taking a very interesting stand in all of these conflicts. I think if you had noticed, they've been advising peace, they've been advising restraint. I think Middle East, the way they are positioned economically, have got a lot to lose if they take very strongly sides. I think there is benefit to be neutral, or at least sound neutral. And that's what I think Middle East is doing. So that's good news for us because they're not directly getting into conflict.
A final word on order flows. You've given us a guidance of 3.33 lakh crores for the year. You've done about 30% already. Could you exceed, what the number you've set, or do you think perhaps that could be undershot because of what's going around globally in the macro environment?
See, it's a very big number. The base number is very big, and we're aspiring to keep growing that by 10%. So it's a fairly tall order that we're pursuing. But at the moment, the run rate seems to suggest that we are headed towards that direction. But in project business, the orders are very lumpy. So a couple of orders slipping between quarters could make a whole lot of difference to the percentages. So the effort is on. Time will tell.
All right, Mr. Raman, and we wish you the best with that. Thank you very much for your time here today. Thank you. Thank you.
All right, well, interesting commentary there. Ritu in conversation with the top boss at L&T, sounding fairly optimistic in terms of a recovery from here on. Says India's doing well, Middle East is doing well, looking for that additional booster shot. By the way, by the time Ritu had that conversation with L&T, just pull up the markets. A massive recovery is what we're seeing from the low point of the day, and the bulls will feel good with this sort of a close. And if we can close around here, the Nifty Bank has recovered 1,000 points. Yes, I'm not making a mistake. The Nifty Bank has recovered 1,000 points from the low point of the day. The Nifty as well is up close to around 220 points from the day's low. And at least as of now, you've had this bit of a pullback, but we've seen that all through the trading session. The point is the bulls will want to end somewhere around here because these bounce backs actually are getting sold into. And one stock that I pointed out earlier today was Infosys. On a day-to-day basis, that stock is not running away, but it's doing that gradual 0.5% to 1% move. Even in today's trading session, it's holding one end up. In fact, tech has been the place to really hide in because that one's up close to around 0.3% while the markets are down. Dipan Mehta, Director Alexa Equities, joins us on the show. Hi, Dipan. Good afternoon and good to see you, Ben. Well, you'll have to say that maybe you're the good luck charm, Dipan. The markets have seen a good recovery in the last 10 minutes or so. But I wanted your comment on tech. Tech is seeing a good, has been a place to hide. And Infosys in particular, it seems the street is sensing something. It's almost at a 52-week high.
Yeah, Nigel, good afternoon and thank you for having me on your show. I may be the good luck charm, but my view is slightly bearish on the market. And we expect more pain. Actually, there's a lot of froth in the market which should get cleared. If you believe in the long-term, if you want a long-term multi-year bull market, this has to correct significantly from these levels. But when that happens, it's difficult to say. Coming specifically to IT, I think that it's a safe bet at this point of time. We are seeing the first signs of slowdown in the Indian economy. The consumption also is flagging. Valuations for a lot of other businesses, domestic focused, are on the higher side. So I think that this particular trade playing out is a flight to safety. And there's a hope that, again, the management commentary may be positive on the IT companies, although the numbers may be pretty much stagnant. So some amount of pre-result buying may also be underway.
No, absolutely. More pain. That's essentially what you began with. But as Nigel pointed out, I mean, there is a big recovery which has been, which is underway, and I think the high that the markets made in this leg, in this recent leg, is 24,923, and very quickly we are ceding ground now. 24,885, 890. So not lasting, although it's a sharp one, and I think the second big bounce of the day. Smaller as compared to the mid-session bounce, but still. And it's coming. I mean, it's coming as we speak. Just 120 down on the day now. So that's a 0.5% cut for the market, which I think is something we can live with. At one point, we were down 300. So it's all relative. Deepan, what would you do in a market like this in terms of, buying or selling?
So I'll share something which we are doing all the time, is that we've created a screener for figuring out stocks which are down beyond 30% from their peak. And there are quite a few stocks. They're in the defense space, they're in the railway space. Some of the capital market focused companies also are there in that particular list. And looking at the valuations, I think at some point of time, we will reach a situation where the stock has a good quality business stock has corrected 25, 30, 40%, and valuations are reasonable, which I mean reasonable, it means price to earnings growth of less than 2 times, maybe like 1.5 times or so. And then keeping that list ready, I think a lot of stories have already been discovered. So just a matter of trying to time the market a little better and trying to get into stocks where there's a decent amount of margin of safety, so that when the next leg of the bull market, whenever it starts up again, these stocks can again start to outperform.
Okay, Deepan, stay with us because the IBLA jury is about to kick off, and on the sidelines of it, I think Mangalam is talking to the management of Asian Paints. So I just want to cut across to that.
Of where it is going, but we've seen some inflation definitely in the Q2 to that extent, and we feel that possibly, given the whole geopolitical scenario which is there at this stage, very difficult to really peg it whether the inflation levels would come down and so on and so forth. We are already seeing how the crude prices are going up and up to that extent. So overall, we feel that I think we'll have to kind of really take a balanced view in terms of where the kind of raw material prices are going. As I see it, we would like to kind of keep it constant in terms of going forward to see that we are able to stem the demand and give demand a little bit of a upswing as we kind of go forward.
So margins between 18 to 20% hold, right?
So we are trying to hold that definitely as we kind of go ahead.
Okay, and typically we speak about the large competition from a conglomerate, but recently, AkzoNobel globally has spoken about reviewing their India portfolio. One is not sure whether they want to sell out their Indian decorative business or they are looking at acquiring some of the Indian companies. Either way, there is consolidation. If they're willing to sell out, would you be a buyer? And if they're looking to acquire some, which do you think would be some decent assets?
So I think it's too early to say in terms of what model are they looking, in terms of looking at whether they're looking at anything which is a joint venture or is a divestment. We are not very, very clear. But definitely I think there are certain parts of the business which are very, very interesting in terms of what is there. And as we see it, I think in a large industry with some of the smaller players, there is bound to be some consolidation which is going to happen, which is the trend what we are seeing.
So you would be interested?
Definitely some parts of it we might be interested, depending on in terms of the overall environment, given the fact that we have a large share. In terms of what we are permitted, we don't know really in terms of it, but I think it depends on the contours of the real divestment in terms of how it takes place.
All right, and this will be the first Diwali where you have Birlas as competitors in the market as well. So far, what is your assessment of that been, and how do you expect this Diwali to be?
I think we are expecting Diwali to be as buoyant as it has been in the past. So we see actually there would not be any difference to that extent as we have seen in the last about 6 months to that extent as we go forward. I think it is, it takes a time to kind of build up a brand and start really batting to that extent. So for that moment, I think we are not really kind of concerned at this moment in terms of how the Diwali goes.
All right, take that point. Always a pleasure speaking with you. Candid Amit Singhal out there. Speaking about the second quarter being a little suppressed, trying to hold on to that 18 to 20% sort of margin guidance that they had given, but the headline is they are interested in AkzoNobel's business if it is up on the blocks itself. Awaiting competition from the Birlas this Diwali, but with that, I'll hand it over to you.
Thank you very much for that. So that's Asian Paints on margins, on M&A, and how they expect the festive season to be despite the increasing competition. Amit Gupta of ICICI Securities PMS is also with us on the show. Amit, Dipan was just telling us, okay, we'll get to Amit in just a bit. We need to slip into a very short break on that note. We'll come back and continue our conversation. The Nifty is above 24,800.
TV18.com. CNBC TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21.
Investing.
Welcome back. You're with us on Closing Bell. Well, let's move to our next conversation. Amit Gupta, Senior Vice President and Fund Manager at ICICI Securities PMS is with us. Amit, good to have you on. So the much talked about correction is here, and obviously, it's a sense of uncertainty, and we haven't dealt with that in quite some time. We've had very shallow corrections every 2-3% and the dip gets bought. Is this one a little different, Amit? What's your sense?
See, our sense is this will also be, the same course what we have been seeing so far. The intermediate corrections are coming. The geopolitical scenario is also, going haywire in between 2022 onwards we are seeing. The commodities that time actually started moving up, and then we saw the inflation started moving up, and then interest rates. Now the cycle is reverse. In fact, we have seen that the steel prices, they declined to 52,000 per ton from almost 65,000 per ton if you compare with the last year levels. Except gold, because gold prices are up because of the geopolitical scenario. We feel when the interest rates are getting cut, it happens sometimes that the markets move into some kind of profit booking because they performed before. But then the usual course, the corporate earnings, we feel gets better actually going forward. So that, encompasses the fact that it becomes a range-bound market. So we feel that 24,000 to 27,000 possibly within this range, broadly the market can consolidate. The only thing is that the Iran should not attack the Strait of Hormuz, because that is very important, because 50% of crude of India is coming through that route. 80% of natural gas of India is coming through that route. So if that is impacted, then I think this situation can go a little more worse. Otherwise, broadly, it can consolidate. It is more mid caps which are seeing selling because they have been more overvalued. The large caps still are undervalued or at par actually with the valuations of the last 5 years if you see. And that is where the juice is there. It is not that we are completely out of. There are still sectors in the last 2-3 years which have not performed. For example, consumer, agri-related, textiles, sugar-related sectors, IT as a space. I think there is room where we can move into those sectors also now.
By the way, crude continues to surge. Now it's 79.6 in the morning. Brent crude prices were closer to 77.5, not even $78 per barrel. But now you are seeing that big spike in crude prices, and the street is watching whether the geopolitical tensions in Middle East continue to escalate or there is a little bit of a regional spread to it. Amit, there are so many individual stocks in railways, defense, which have fallen now nearly 30% from peak levels. Are any of them looking attractive to you? Because in your opinion, the Nifty, at the bottom level doesn't go below 24,000, and we're not too far away from that, 2% away at the index level. So which stocks would look attractive to accumulate after this 6-day sell-off?
See, from the PSU space, we have already booked substantial profits actually so far. We are there, certain weight is still there in the PSU space, but broadly we feel that if you look at the public capex, it is broadly peaking out around 11 lakh crores. And the mantle now is shifted to the private companies to do the capex, because the RBI will start, cutting interest rates after some time, and then it is on the private companies to start doing the capex. So that is where I think some of the PSUs which had run up actually before time and the valuations actually were really high. So we have booked profits in those areas, and we are not looking to buy immediately because I think there may be time correction for some time also in that space. Rather, we need to look at, some of the private players in those areas which are emerging now and which have not participated too much and which has not seen that kind of money flow in the last many months. I think that is where the money will move. Money may still, you will not see that, you will realize after a while that the markets are here only, and then money is not going out completely. It is more sectoral rotation which has happened finally.
Okay, by the way, just wanted to point out, Rima was highlighting crude, and guys, we must remember today is the 7th of October, right? It's the anniversary of the horrendous attacks that started the entire disruption in the Middle East. So I think there's a lot of uncertainty and edginess around what happens. Will Israel choose this to kind of make a statement? Will there be any fresh attacks or not? I mean, whatever is the chatter that's been doing the rounds, that's enough to get the market extremely worried. Look at the move on NYMEX right now. By the way, it's not just this. Look at the US 10-year yield. The yield was anyway soaring after the strong, solid jobs report. But the Friday close, it was around 3.8, 3.9%. Now, the US 10-year has topped 4% as well. And it seems, along with, of course, the jobs report in the US economy, there's a bit of a risk premium putting up. Whenever there's uncertainty, there's a natural tendency to gravitate to US bonds. And maybe there's a bit of that risk premium, the geopolitical risk premium that's getting added up. There you see 4% is back up there on the US 10-year. So enough, moving in global markets. And Nigel, enough moving, because we have Nigel with us in the studios now. But it's turning out to be a tough afternoon, Nigel. I mean, not much has actually changed.
Well, from the time I moved from the newsroom to the studio, the last time I was on air, the Nifty Bank was up 50 points. And it recovered 1,000 points from the day's low. In a matter of around 12 to 13 minutes, it's back down another 1,000 points. So that's the kind of volatility that you're seeing in today's trading session. But my gut is, on the Nifty, that 24,700 mark at least has been protected for now. And the bulls will feel that, they live to fight another day. So you'll want to see that 24,700 mark odd getting protected on a closing basis. But Amit's still with us. Amit, we're looking for some ideas now. I wanted, there's a lot of comments on Hyundai, that the company is already listed in other markets, trading at a P of around 5 times. They come here, they want 25, 30 times odd. Some on the street are not too happy. But from the auto pack, you like Maruti, I believe. Tell us more about that.
See, we like those ideas, where some negativity has been there for some time, right? And then the negativity is nearing the bottom, because generally you see the stocks participating afterwards. For example, you look at Colgate-Palmolive, what happened? When Colgate was around 1800, 1850, the market share stopped actually falling further and the stock got double. Even in an FMCG space, it got doubled. Same, I think Maruti has underperformed. If you look at the auto index in the last 1 year, it has moved up by close to 55%, but Maruti has hardly moved up by 10-15%. And why it was not happening? Because the small cars, last 2 years we were talking about this, that small cars are not being sold. It is more the SUVs. So I understand the trend. SUVs have gained, it has reached to 60% of the total passenger vehicles. But still, when the money now, after the state elections, we are seeing that there is some consumer-oriented schemes which can start. And that is where the rural-related area, the mass consumption area, it can start participating actually, which was not happening before. So our sense is the small cars also can start picking up, right? That can create the bottom for the stock. If you look at the hybrid cars, which Maruti has, so there we saw that the taxes are very high in terms, if you compare with the sole EV vehicle. And we have seen after Uttar Pradesh, Karnataka is another state which is coming out to cut the hybrid taxes actually now, the taxes on the hybrid cars. Now, along with this, if you see now the EVs, they were not coming out with before because they had a view that they will come out with a more holistic approach because they want to give service even in remote areas. And now in the coming 6 years, they are going to come out with 6 EVs also. In CNG, every year they are gaining the market share by almost 1%. So that is where we feel somewhere in such kind of volatile markets only it happens that so the negativity in a particular sector or a particular stock, it gets bottomed out. We don't realize the money, the smart money goes in and the stock starts participating and then we start talking about this storyline. I think we need to look at this stock now and that is where we have taken it in our ACE equity portfolio.
Got it. What about Hyundai? In the next 2 days, we're going to hear the pricing. How interested would you be? Maruti over Hyundai?
So I will prefer Maruti. It's in the listed space, known actually. So our sense is it is getting little bit more aggressive in terms of EV. Then why not to look at Maruti only when it is available actually at a better valuation now?
Okay, fair enough. That's autos. By the way, let's just pull up that Bank Nifty chart again because it's dramatic the moves that have taken place. Like Nigel was pointing out, this drop it's happened in all of 10 to 15 minutes. Yes. Look at that upside down V. And it's a very, very steep one at that. So 1,000 points gone just like that in a blink. And that kind of tells us about the nature of volatility in the market today.
So watch for a big FI net sell number again today. That's where they have the highest exposure and that one is seeing a fair bit of selling as well. And today in any kind of bounce, it's got sold into.
Absolutely.
So, I think we'll brace for another large one today. Nimesh will get us further details, but I think the indications are there.
Absolutely. I mean, there's been absolutely no let up from the kind of heavy blows that we've had from the FII selling that's come through. Come in on this, Amit, because, we've also seen the updates. Let's leave the FII selling aside, not much that can be done about that. But what sense do you get? There's a lot of nervousness as we gear up for Q2. A lot of updates are coming in. I mean, there's a big fight to raise deposits. But in that fight, some banks are sort of losing out on growth. How are you reading the updates and what's your advice at this point on financials?
So financial also is interesting story because we have been saying that the valuations of the banks, are fair because we look at the banking index. But in the banking index itself, if you see the HDFC Bank and Kotak, they have remained flat, which comprises 40% of the bank Nifty Bank actually. So this is where the other side of the picture has performed and this side of the picture has not performed. There has been pressure because of LDR. HDFC Bank still holds around 103% of LDR, which can come down. That's why in the last 1 or 2 quarters, we saw the loan book also was getting sold. Now, yes, I understand the fact that deposit has been a problem, which this bank has been able to garner recently. NIMs were under compression because there was an expectation going forward there will be interest rate cut. So banking has taken in its stride now that interest rate cuts. They have not been performing these banks for the last 1 year. So they have taken in the stride. So value is there for sure. Value is there for sure. And I think we have to see now going forward. I know how it starts performing. Money flow is still absent. And that's why I think if we have to look from the index perspective, then the money flow can move into technology space. I think IT can be something which can surprise the market going forward because it was not performing before. And what we like, if you see from the global perspective, US perspective, we were talking about recession, which was getting heavy on the technology space. But our sense is the yield spread, the 10-year bond yield in US and 2-year bond yield in US. If you see the spread, which became negative in the month of June 2022, it became positive in the month of June 2024 now. That means the scenario of recession may not be there and you are cutting interest rates, which is good eventually for the IT companies which are catering to mortgage, banks, or the BFSI space. So I think that's where the IT can be looked at. And these companies over the period have moved into ER&D space also, along with the products and services. And we have seen that the cars that we are using, the AI that we are using, the softwares were hardly 7-8%. Now it is 26% and it can be 58-59% also. So these companies' demand is likely to remain. And I think that is what we can see going forward as one of the alternative where money can be moved.
So IT could emerge as a bit of a dark horse going into earnings season next week. TCS and Tata Elxsi both report their numbers on Thursday. This week only, Thursday.
Yeah.
Tata Elxsi and TCS will be reporting numbers, and they've gone through 2 years of an earnings downgrade cycle. Now, stocks have run up. Since the beginning of June, the Nifty IT index is up 30%. Now, the question is that this rally was because of some PE, re-rating, investor positioning, which was deeply underweight, has come back to neutral. But from here on, earnings growth, upcycle, upgrades will lead to support. We'll slip into a very short break. Before that, Nimesh is standing by. Nimesh, this has been a tough day to navigate so much volatility, particularly in the last hour. But the firm is, the trend is firmly lower.
Well, absolutely, Rima. And after a brutal last week, to follow up with another 2% cut across indices, massive selling in the broader market stocks as well. That shows that India is relatively now underperforming all the Asian peers. And there are a lot of reasons which are converging at a similar point in time. One, the rising crude prices. Two, there is still a lot of geopolitical risk which is hovering around. Three, even the earnings season is going to be quite muted. Q2 generally seem to be quite muted as well. So even that earnings support is not going to be there, at least in the near term. And hence, maybe that explains that we are underperforming it to some extent. But again, there is from a flow perspective, it looks like there is another day of aggressive selling by the FI. So the buy-sell ratio is supposed to 1:2 on the sell side. That's overall feedback. And there is selling across the board. So last week, what we saw was selling largely in the large cap names and the private bank stocks. That seems to be not the case. It looks like today is across the board selling. So again, the fact that the mid cap index is down over 2%, there are some chatter as well that maybe there is some redemptions as well across some ETFs. So need to see whether that's really been the trend. But that explains the kind of fall we're seeing in the broader market stocks today. I guess two things to watch out for in the very near term. China reopens tomorrow, so that's a big trigger to watch out for, especially from a metal stocks point of view. And tomorrow we're also going to see the state election outcomes, and that's going to have a big impact as well. Sentiment though, but will have an impact as well on the market. So those things to track. But from a flow perspective, it's another down day and aggressive selling by the FIs.
Thank you very much for that, Nimesh. I think 40,000 was the FI selling last week, and today we could have another big sell number. But what about stocks? What have you picked up?
Well, so in terms of individual names, the first stock is Care Ratings. In a weak market, that stock has relatively outperformed. This last 10 odd days, the stock is up 10-11%. I understand the selling pressure from a leading PMS is largely over. Some good funds have bought as well, and hence looks like the supply overhang is out of the way, and hence that stock has outperformed of late. So that's the first name. The second stock is Hindustan Aeronautics, HAL. That's been constantly under pressure, and there is aggressive selling from larger FIs. I understand a very, very large long-only fund is an aggressive seller in HAL of late, and hence that stock is under pressure of late. So that's the second name. The third stock is High-Tech Pipes. Well, the stock has rallied a bit in the last few weeks and months, but now I understand the company is likely to raise funds via QIP very soon. So that's something to track in High-Tech Pipes. And the last is Kotak Bank. While the bank Nifty is under pressure for the last many days, there was a feedback in the morning, at least the sense was that there is buying into select bank names, and Kotak Bank stands out. So aggressive buying is what I understand, at least at a leading FI desk as far as Kotak Bank is concerned.
Okay. Thanks very much, Ramesh, for that. Yeah, any bit of buying anywhere that's possible. I think the bulls will take it with both hands. We should actually pull up some stocks before we take the break. Look at Bajaj Housing and the price damage that's going on mid caps today. 9.5%. That's the sort of slam dunk on this recent listing. Of course, it was a listing with great fanfare, but the cool off has been pretty severe as well. Look at Ola Electric. It's down about 8.5% today. There are a lot of the railway names, RVNL, Aircon, Railtel, stocks crashing anywhere between 8, 9, 10, 11%. So it's a long list of losers, really, out there that we are looking at. By the way, some of the capital market plays, I was just getting to that before we moved into, the jury meeting of the India Business Leader Awards. Look at IIFL Securities, 10%. Look at BSE, 7.5% lower. Angel One, 6% lower. So, yeah, the gains are really coming off.
Bajaj Housing, people wanted it at 70 rupees. Those that didn't get allocated were very upset because the stock went to around 190 rupees.
Yeah.
It's now at a 52-week low. It's at that first tick that we saw. I think it was 136 rupees. So it's at that rate. So in case you thought that you missed it when it listed at around 136 and went the same day to 160 and the following day to 190, now you're getting it at the listing price. May not be very cheap, but that's the data point in terms of a price action. Well, we'll slip into a short break. You come back, we'll get you some buy and sell trades for a switch in the next few days. Our technical experts are with us.
Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti.
Well, the market's holding above the 24,800 mark, 7 minutes till the end of today's trading session. Just one stock I'd like to pull up, Heidelberg Cement. The stock was up, I think, close to around 12% in the morning. Now they put out a release that they're unaware of any such development with regard to a takeover from the Adani Group, and they do not comment on market speculations. The way the street reads it is that Heidelberg Cement at some point of time could get sold because of the global call that they've taken with regard to getting out of industries like cement, similar to what Holcim did. But for now, they say they haven't heard anything, and we heard this as well, this news-based reports, even a year or so ago. So we'll have to see how that goes. Well, Mitesh Thakkar is back with us. Mitesh, what are the calls you have for us?
Oh, Nigel, BTSC or TCS, purely because tech is showing some strength, and if there's a bounce back, I think that could be a sector which could rebound slightly stronger. TCS, I would recommend a stop below 42.50 and a target of around 4,300 on the upside is what I would look for. And on the selling side, I would go with a sell on a metal name. JSW Steel is something now which has just started to show first signs of profit booking. So take a STVT with a stop at 1,032 for targets of 1,000.
Mitesh, if you had a short position on the Nifty, you'll carry it or you'll close it?
I will carry it.
Got it.
Okay, so buy TCS, sell JSW Steel and carry forward if you have a sell on the benchmark index. Get into a break. We'll come back with more on the markets, counting down to the close too.
and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit.
Welcome back. Okay, very quickly before we start ending the day and recapping the blows, here out a view from Gautam Shah for Goldilocks. Gautam is actually extremely cautious on the market and he thinks that this time around the correction could last a while.
If you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. You know, most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Overall basis, the market has got internally weak, and therefore the next few weeks will be challenging. I do believe that the metals index has the potential to deliver 25% upside from current levels over the next 1 year. So if you look at all the top stocks, you know, led by Hindalco, JSPL, JSW Steel, SAIL, Nalco, Tata Steel, the entire set looks very good and I think is likely to stand out. So if you're booking profits in some other pockets of the market, I think metals and IT is the place to be in. And in the IT, I want to stick to top quality. I don't want to go to grade 2, but I think Infosys, TCS, HCL Tech, Tech Mahindra, I think are good pockets to be in.
Gautam Shah sounding a little bit cautious, but a little bit positive on metals as well as on tech. Well, it's just a minute to go before we wind down, so let's get straight to that. The Nifty is down close to under 180 points. The Nifty Bank goes home with a sharp cut of around 800 points, but one would say not too bad. We were down 1,200 points at one point of time. The big losers today, Adani Ports got a sharp knock. Biggest loser on the Nifty, down 4.5%. BEL, the new entry into the Nifty, welcomed with a smack. That's down close to around 3.5% from the time it's actually entered into the Nifty. It's seen quite a lot of selling in line with what the markets have done. Adani Enterprises as well pulled back. Coal India has now corrected more than 10% from the peak, as is the case with NTPC, Power Grid. Those PSU got a hard knock. HDFC Bank was one of the key dragging points in today's trading session. What did well? Tech and ITC. Infosys, TCS, ITC, they tried to fight for the bull along with new entrant Trent.
Absolutely, and that kind of was trying to work for the bulls, but not quite. Very quickly on the mid-cap screen, look at the advance decline ratio. 265 stocks advancing, that is it. And over 2,200 stocks on the declining side of the screen. Talk quickly about some of the key movers and shakers on the losing side. Bajaj Housing down 10%, RVNL down 9%, Ola Electric down 8.5%, RailTel, IIFL Securities, Zaggle Prepaid collapsing 8%, Dalmia Bharat 9%, Quick Heal 8%. I could just go on and on, but it was that kind of a day of extreme pain in the mid-cap and the small-cap market. The bell has gone. Let's try and end on a bit of an optimistic note. LTI Mindtree was responding well to some foreign brokerage notes that came in today. And CG Power is now trying to get into semiconductor design, not just OSAT facilities, with a small acquisition. That stock managed to stay up, and it stayed afloat on a day like this with a gain of 5.5%. Tough day for the bulls, a near 200-point drop on the Nifty. But the good news is the Nifty, with final adjustments, will probably end the day above 24,800. So the bulls trying to fight back. With that, it's a wrap on this edition of Closing Bell. Thanks for watching us. But don't go anywhere, because all the market action continues. Up next is Markets Forward.
With Bajaj at these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the...
Market ends lower for the sixth straight day. The Nifty closes 200 points lower in a volatile session. The Nifty Bank slips below the 51,000 mark and the mid-cap index loses over 1,100 points. Utilities, industrials and energy are the big drags, even as IT and FMCG remain relatively resilient.
A raft of business updates from prominent lenders, including the likes of IndusInd Bank, Federal Bank and Bandhan Bank, point to a rush for deposits, leading to a swelling of bulk deposits even as loan growth is tempered.
LTI Mindtree and Emphasis gain as JP Morgan upgrades both stocks to an overweight rating. Meanwhile, Ola Electric tumbles over 9% due to a drop in its market share and weak customer sentiment. Hello and welcome to Markets Forward, your go-to show where we aim to get you up to date with today's trading action and set you up for tomorrow. I'm Nigel, with me is Surbhi. Hey Surbhi, another session, we were down.
Down and out, and how? I mean, there's just been no relenting by the bears at all. They've got the bulls right in the midst of things. And again, today, a lot of volatility, and the net result is another down day.
Well, we were in this buy on dips mode. I think now it's turned into sell the rise. Even today's trading session, we were up 80-90 points to kickstart trade. But if you bought the dips as well, it quickly got sold into. So you had to be very, very nimble-footed. That was the way that today's market action did pan out, because the bounces got sold into. The Nifty Bank, that was the underperformer. In the last 60 minutes, I'll tell you what, if you pull up the chart, it'll tell you the picture, that we were down 1,000 points. In a matter of minutes, we recovered to, the green, and then we fell another 1,000 points. We went home with a cut of around 1,000 points or odd. But the Nifty Bank, highest amount of exposure to FIs. When FI is selling, normally that index takes a knock. It's corrected very quickly from 54,000 all the way to around 50,500. ITC as well as the tech-related names, well, they held one end up because you had Infosys, TCS, ITC, all of them managed to put on some weight in a market that was actually getting clobbered. So that was good news. That was the pocket actually to hide. But mid-caps and small caps, well, both of them took a hard knock yet again. Both those two indices going home with sharp cuts. So it'll be just one thing that I'd like to say is that we have seen numerous sessions that we see a downtick. And I was pulling out some data as well. Normally, when the markets correct 5% in a single week, the following, the next 30 days actually are good for the markets.
Yeah.
That was what was there in the past. Now we're in very, very different times because, you have geopolitical issues that come back onto the table. The global index is in a, global equity markets in a bit of a funk. So we'll have to see how that goes. But 24,700 held out today. That's a glimmer of hope for me from a bullish perspective.
No, absolutely. And actually, when we came in, we had very decent cues because you had a great jobs report from Wall Street, positive close over there, markets positive in Asia as well. But none of that helped our case. And by the way, on the mid-cap selling, mid-cap, small-cap selling, look at the extent of the advance decline ratio. For every one stock that was advancing, there were over 8 stocks, that were declining. That was the pace of the fall on the mid-cap and the small-cap arena. Look at the gap between those lines and not even an attempt at a recovery. On the global point, one more thing to keep in mind is that these West Asia headlines are keeping the market very nervous because as we were closing out in the last 1 hour, massive move on crude oil prices. Crude has rallied 9% last week. We started this week with a very flat move on oil, a bit of a cool down in fact, but all of that changed intraday. And as we were closing out, crude was rallying between 2 to 2.5%. So we need to watch, of course, this equation very, very carefully as well. It's a packed show and a packed lineup. So let's tell you what we're covering today, all the movers and shakers and the stock-specific action coming up with Hormaz in just a bit. The key sector of the day was banking with all of the Q2 updates coming through. So we'll tell you more about that. Some stocks in focus included LTI Mindtree, Emphasis and Ola Electric. And we'll get to all of that action in just a bit. And then, of course, Nimesh joins in, talks about the chatter in dealing rooms, considering this fall has been continuing absolutely relentlessly. And then, of course, we'll talk about some of the critical events to watch tomorrow. Let's get started straight away. Hormaz, the movers and shakers on another red day. Vivek actually is joining, and he has the movers and shakers on what was once again a pretty difficult day for the bulls.
Well, that's right. Day to forget as far as the bulls were concerned. quite a bit of a beating, quite a bit of a pounding is what you saw. It was very tough to find stocks that were actually doing quite well in the session, but quite, some did stand out. Amongst the list of gainers, like you mentioned at the start, the IT pack did stand out today. The IT pack saw a bit of defensive buying, a couple of upgrades coming in, within IT names that have some BFSI exposure. LTI entry up 2% on the back of this JP Morgan upgrade. Finolex Cables, this particular stock stood out in the session today. Amongst the broad end of the market, saw quite a bit of selling pressure, but actually there was some amount of strength at the start of the session. ITC, or the other stock that actually stood out today, again, some support coming in this particular name. The demerger of the hotel business, something that gave some support over here. And M&M, especially in the last hour, did see some amount of buying come in. So M&M also managed to close in the green today. But amongst the broader end of the market, especially amongst the laggards today, look at the entire PSU pack. The PSU pack, look at names like NTPC, SBI, Powergrid, ONGC. All of these stocks took quite a bit of a pounding today. Private banks, also saw quite a bit of selling pressure. It was very volatile, but most of the private sector banks, even the ones that gave decent business updates, all of them ended with significant cuts. Federal Bank, actually opened in the green, ended low by almost 5%. NBFCs, it was the other sector of the market that saw quite a bit of a sell-off, especially names like REC, PFC, almost 5% low on these names. The housing finance companies, gold finance companies, all of them took quite a bit of a knock in the session today. The fourth stock, as far as the losing pack was concerned, was actually Voltas. Voltas has seen quite a bit of selling pressure, especially in the last 3 to 4 trading sessions, almost 10% lower from the recent highs. Amongst the top laggards as far as the FNO space was concerned. And Gujarat State Petronet, after a while, this particular name, there was a Motilal Oswal downgrade on this particular name. The stock lower quite significantly, almost 4% in the session today.
Thanks, Vivek, for that neat wrap on all those stocks that were moving around. Well, let's welcome our guest. We have Sudeep Bandyopadhyay, Group Chairman at Indie Trade Capital, and Ruchi Jain, Lead Researcher at 5paisa.com. Hi, Sudeep. Hi, Ruchit. Thanks a lot for joining in on the show. Ruchit, you tell us, where does support come in at? We have broken the 20 DMA quite decisively. The 50 DMA is gone as well. But the glimmer of hope is the 24,700 mark held out at least today. What are the levels you're looking at, both on the Nifty as well as the Nifty Bank, on support levels?
Yeah, hi, very good afternoon, Nigel. Very good afternoon to everyone. Well, Nigel, if we see last 1 week, this market correction has mainly been due to FIS selling. We started the October series with a long-short ratio of 81% by FIS and about 3,70,000 or 3,60,000 contracts on the net on the long side. Now, last 1 week, they have continuously been selling the index futures and also unwinding the long positions. And their long-short ratio as on Friday was at 58% with about 83 contracts on the net long side. So I think this needs to reduce a bit, and once their long-short ratio comes around 50%, where they would not have any significant net longs, then I think markets would start again rebounding. Technically, 24,500 to 24,700 is a good support range, and also the RSI readings on the lower time frame are in oversold zone now. So I think from here on, at least a bounce back move, a pullback move from this 24,700 to 24,500 zone should be seen tomorrow in case if the markets opens negative and we get again Nifty in that range. I think that would be a good range to take some contra trades over there. If not for a resumption of the uptrend, then at least for a pullback move towards 25,200 to 25,300.
Got it. Okay, all right, Richard. Thanks for that. Well, let's move to the sector of the day. It was the banking space. AU Small Finance Bank stood out with a gain of around 1.5% to 2% in a falling market. AU Small Finance has reported strong deposit growth in its update. However, Federal Bank and IndusInd Bank, both of them were lower. Abhishek joins us to analyze those numbers for us. Abhishek, take it away.
Well, to begin with, AU Small Finance Bank, it seems that the deposit growth that they have had has been liked by the street. So strong deposit momentum over there. We cannot compare the YOY numbers due to the merger of Fincare Small Finance Bank. So on a sequential basis, the deposit growth is more than 12% quarter on quarter. CASA in absolute value has grown by 10% quarter on quarter, but as a ratio, it's declined by 60 basis points. Advances growth is healthy at more than 5% on a sequential basis. Federal Bank, the weakest deposit growth that you are seeing for Federal Bank in last almost 2 years. So on a YOY basis, the deposit growth is 15.6%, which is the lowest in last 7 quarters. And on a sequential basis, it's at just 1.1%, which is perhaps the lowest in last 9 quarters. CASA ratio has improved on a sequential basis. This is for the first time that in 9 quarters, they have seen improvement in the CASA ratio. In terms of certificate of deposits, that's up 20% YOY and more than 11% quarter on quarter. This could put the pressure on net interest interest margin given the fact that, cost of funds may rise. Advances growth was at 19.3% YOY and 4.3% quarter-on-quarter. This is the weakest growth that you are seeing in last 3 quarters for Federal Bank. Credit deposit ratio is at 27-quarter high of almost 87% versus 84% in the previous quarter. In terms of IndusInd Bank, the CASA ratio is perhaps at an 8-year low, that is 33-quarter low, and 10-quarter low loan growth on a YOY basis that they have reported. So deposits are up 14.7% YOY and about 3.5% sequentially. CASA ratio continues to decline, one of the lowest in last 33 quarters, coming in below 36% mark at 35.9%. Retail deposits have grown by 4.3% quarter-on-quarter. Their overall loan growth is at just 13.2% YOY and 2.5% quarter-on-quarter. So credit deposit ratio is at 6-quarter low of 86.5%. Back to you.
Okay, all right, got that. Thanks very much, Abhishek, for the updates over there. Let's welcome in Sudeep Bandyopadhyay into the conversation as well. Sudeep, what a day for the market, right? And then you had all these banking updates come in, BFSI updates. Most stocks reacted negatively. AU was a bit of an exception. What do you make of the overall setup? And right now in the bank updates, what thoughts? I mean, anything that will make you either clearly buy or sell looking at the business momentum?
Well, I think definitely, there is a bit of a challenge as far as deposit growth is concerned, because some of these banks have gone ahead and taken, bulk deposits, which are obviously a little high cost. The credit growth also is kind of not kept pace. So, while the banks were trying to correct the problem in the credit deposit ratio, now the issue is moving towards the other end of the spectrum, and again that's a problem. So balancing this is very, very critical, and some of the banks probably will be able to do that, and somebody who is able to do that will be the winner in the new scenario. We'll have to keep waiting and watching. I strongly believe that the leading private sector banks are best positioned to kind of handle this well, considering the deep network they have and the relationships they have. So I will be very keenly watching out for ICICI Bank and HDFC Bank. There are, of course, challenges in the overall market, but BFSI will continue to still remain positive. Also on the back of the fact that valuation-wise, they never went up like most other sectors.
Got it. Okay, all right, Sudeep, thanks for that. Well, another bright spot in the broader markets was CG Power because of a corporate development over the weekend. Vamakshi joins us to explain that to us. Vamakshi, they're foraying into the right spaces.
Well, absolutely, Nigel, and that is one of the reasons why the stock in an otherwise weak market was up 5% or so. CG Power announced that they will be acquiring the radio frequency components business of Renesas Electric Corporation, and this is for a consideration of $36 million or somewhere around 303 odd crores. Now, keep in mind that RF components biz revenue for 2023 stood at $56 million or 471 crores, which puts the deal at a valuation that is a price to sales ratio of almost 0.65 times. CG Power will be acquiring the intellectual property, tangible assets and select transferring employees. This in turn will enable the company to enter the semiconductor design business. Now keep in mind that CG Power had received a nod from the cabinet for setting up an OSAT facility back in Feb 2024 with Renesas Electronics as well as Star Micro Electronics. So therefore, this is a step in the right direction, and resultantly the stock was up in the trading session today.
All right, thanks a lot for that, Vamakshi. Well, a couple of tech-related names, they were enthused by the report that came out in today's trading session from JP Morgan. Nimesh joins us to run us through that special report. Nimesh?
Well, Nigel, a couple of stocks within the IT were in the limelight on the back of the JP Morgan note. So today they've upgraded 2 stocks, L&T Mindtree to an overweight with a target price increase to 1,600. And they've also upgraded Emphasis to overweight with the target price of 3,400. Now, JP Morgan believes both these companies are going to be beneficiaries of the banking and financial services recovery, largely in the US market. And the commentary seems to be quite encouraging in the last couple of months. And there are signs now that, that there's going to be a pickup as well as far as the US BFSI is concerned. In fact, the Fed rate cut could drive recovering the mortgages for US banking and financial companies, which have been under pressure of late. And if that has to happen, there will be a sustained discretionary spends over the next 12 to 18 months. And that could be biggest beneficiaries for the likes of L&T Mindtree as well as Emphasis, because both these companies have an BFSI exposure of close to 35 to 50% and hence a big upgrade. They've raised the EPS estimates as well as the target multiples, and they've raised the target price as well on both L&T Mindtree as well as an Emphasis today.
Okay, all right. So, yeah, these were some stocks that managed a little bit of green in an otherwise sea of red, Nimesh. Speaking of which, I mean, what did you pick up? The sense on the fact that this is a sixth straight day of a fall and relentless mid-caps, small caps, nothing spared today.
Last week, the first day of the new week, and there was aggressive selling. What changed today was there was massive selling in the broader market stocks. The mid-cap index saw a big cut and a lot of individual names were down 8-10%. So it looks like there was sell-off across the board from larger institutions today. In fact, even today, the feedback was that the buy-sell ratio is close to 1:2 on the sell side. Even the financials saw a lot of volatility in today's market. But while the index was finally ended nearly 2% lower, I understand there was some bit of buying interest in private bank stocks from larger institutions today. The market looks a little oversold, and so is the bank Nifty. But needs to see, the two big triggers to watch for tomorrow would be one, the China reopening and the state election outcomes. That can have a big impact, at least in the short term, for Indian markets as well.
Okay, all right. Thanks for that, Nimesh. Well, let's get in our guests. Sudeep, what do you make of CG Power? I recall the stock being 15, 20, 25 rupees odd. Many people were happy with the four-bagger, got out at 100 or at 200. Stock is 700 rupees today. And the positive news flow continues. Your take?
Absolutely, Nigel. I think this development is pretty interesting. And the valuation at which they are acquiring is also pretty reasonable. Less than one-time sale is a good deal. And overall, I think the entire business has been doing well. It's been a remarkable story of turnaround in Indian corporate, kind of a scenario. So I think while the valuation definitely at current level does look a little rich, but I think considering the growth potential, and if you are looking at a long-term investment, absolutely no problem even at current valuation.
Okay, all right. Ruchit, what about you? What do you like from tech? That's been the bright spot, right? You have the markets that are down and tech moving in its own direction. And after a while, the street is expecting positive results and positive commentary for the second half of this fiscal and then for FY26. On the charts, what's looking good?
So if you do some comparative analysis in the recent consolidation phase, then Coforge is one stock which has not corrected at all. So this clearly shows then when the other stocks within the sector is showing some bit of a corrective phase, this stock is standing out. So that relative outperformance during the corrective phase of the sector makes this one of the attractive names. So I think Coforge would stand out in case if the IT moves up, then we can expect good outperformance from this one.
All right, Sudeep as well as Ruchit, appreciate you joining in on the show and helping us out with a call on the index as well as on the individual stocks that we discussed. Well, on that note, though, we'll take a snappy break. As we do that, let's get you some market opinion coming in from Gautam Shah. We'll be back with all the top market events you need to track.
If you look at the trading action of the last 7 days, what's really happened is that it's been an India-specific correction. Most other markets in the world, whether you look at US, Europe, or rest of Asia, actually have been quite well. So it's been a completely out-of-the-box kind of a decline for India. Overall basis, the market has got internally weak, and therefore the next few weeks will be challenging. I'm quite concerned about the mid caps and the small caps, to be honest. We put out our big picture report yesterday, wherein we put out so many pointers as to why we feel that mid caps and small caps could potentially be topping out for the near term. And I think they need a multi-month correction or a consolidation at least before things can get back on track. We've all discussed it in the last 1 month that based on narratives, stocks were doing well. Based on Excel sheets of the next 10 years, stocks were doing well. I think there is a reality check which is now coming up. And I think anything that is substandard in the mid caps and small caps will come under serious selling pressure. But the top quality, the top 50 names in mid caps and small caps, I think will stand out. But the chances of a 7 to 10% correction in the mid cap and small cap space looks quite likely given all that has happened in the last few months.
Decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years. In the first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships.
Welcome back. You're tuned into Markets Forward. Let's get straight to the big corporate voice now. Mr. BK Goenka, the chairman of Welspun World, expects the group's revenues to triple in the next 3 to around 5 years. In an exclusive conversation, he also spoke about the group's key focus areas and their capex plans. Let's hear him out.
We are very clear that we came out with a clear vision of 3G. The growth with governance,
right,
and with the green. When I say green, is sustainability. So we are very clear that how we can become 3x from here, and that growth is only possible when you have right governance and right kind of a sustainable effort across around you, whatever you're doing.
I mean, I'll press you a little bit on the governance as well as on the green aspect, later on. But tell us about growth. When you talk about going 3x, what should the group revenues look like? Currently, you are around 35,000-40,000 crores odd in terms of revenues, while the group market capitalization is roughly around 45,000 crores. So where does that number go in the next 2 years from here?
So market capitalization is the outcome of whatever we are doing. Let me talk about the growth plans. We have very clear roadmap for next 3 to 5 years that how we can become from here to 3x.
Okay.
How we can become a 1 lakh crore group at the top level revenues.
Yes.
And we have a plan for our Welspun Corp, where we have a DI pipe, we have a large diameter pipe, we have a expansion in Saudi, we have expansion in USA, and we are doing expansion in India.
Right.
And plus, we have recently acquired last year was Syntex, which is a huge growth plan. And we all know that how the overall building material is. And Syntex is a well-known name in the country. I mean, when you talk of a storage tank or water tank, you say Syntex leke aayi.
Indeed.
So Syntex is a very well, it's a synonymous with water tank.
All right, that was Nigel at the Welspun facility in Gujarat. Before we wrap out, quick look ahead to some of the marquee events to keep an eye out on. Tomorrow, Vinny's here with the details. Vinny.
So yes, a lot of events that we're keeping an eye out on, but let's start with the China market because that is finally going to be opening after 1 week of holiday. They had the Golden Week break. So yes, Chinese market is key to watch out for in terms of a move. US trade data is also what we'll be keeping an eye out on the global front. Global earnings, let's keep an eye out on PepsiCo because that will be reporting its September quarter numbers. Other than that, on the domestic front, we're watching out for corporate actions. Vedanta, the board will be meeting to consider and approve the 4th interim dividend. So keep an eye out on that. As well as PowerMech Projects is going to be meeting to discuss in terms of bonus record date. That's actually tomorrow, so keep an eye out on that. Domestic earnings, Transformer and Rectifiers India is reporting its numbers. So yes, a key watch on that in terms of a stock move. Other events are what we're keeping an eye out on. Haryana as well as Jammu Kashmir, the election results will be coming out tomorrow. So that is important. BYD eMax 7 India launch. Key in the auto space to keep an eye out on. And FOMC members are going to be meeting, and Bostic is also going to be speaking at some of the events. So keep an eye out on any important commentary that comes in from them.
All right, Vinny, in green, and that was some of the only green that we saw all through the day. But on that note, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
From the 12th of October to the 25th of October this year, Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of Rs 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of Rs 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals, textiles, telecom, FMCG, travel and hospitality, automotive, aviation, defense and other sectors. The government hopes to give real-life work exposure to youth and bridge the skill gap. India's leading industry bodies, CII and FICCI, are also partnering with the government to help implement this internship scheme.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty declined for the 6th straight session, the longest losing streak in a year. Nifty ends at a 2-month low, falling below 25,000. Mid-cap sees sharper cuts. Israeli missiles pound Lebanese capital Beirut and the Gaza Strip as the nation marks first anniversary of the gruesome Hamas attack. Hamas also launches a rocket barrage at Israel. Crude oil prices continue to climb with Brent nearing the $80 mark. Suresh Narayanan will retire as Nestle India Chairman and Managing Director effective July 31st next year. Manish Tiwari, who earlier served as Amazon's India head, will succeed Narayanan. An IIM Bengaluru alumni, Tiwari also worked at Unilever for 2 decades. Welspun Group's revenue will triple to 1 lakh crore rupees in 3 to 5 years, says Chairman BK Goenka in a rare interview, promises steps to unlock shareholder value. That's an exclusive. International Finance Corporation partners with Axis Bank to provide climate loans worth $500 million in India. Managing Director of IFC Mukhtar Diop says overall investments will hit $62 billion this fiscal. IFC is also actively looking to invest in film companies in India. That's another exclusive. Ola Electric shares tanked 10% in trade, adds to the downturn trend that has seen the stock lose 17% in the last month amidst the company's after-sales service challenges. Bhavish Agrawal gets embroiled in a heated exchange with stand-up comedian Kunal Kamra on social media over the weekend. Prime Minister Modi meets Maldivian President Muizzu in New Delhi, agreed to elevate ties to a comprehensive economic and strategic partnership. Modi says India has always been the first responder for Maldives in times of crisis. Muizzu invites Prime Minister to visit the Maldives next year to celebrate the 60th anniversary of diplomatic ties. Tamil Nadu government blames excessive heat for the death of 5 spectators during the air show in Chennai on Sunday, announces compensation of 5 lakh each for the families of the deceased. Over 100 people currently being treated for health-related illness. Mumbai's first underground metro stretch from RA to Bandra Kurla complex opens for the public. The head of Mumbai Metro Rail Corporation, Ashwini Bhide, says the next stretch from BKC to Kolaba will be ready by March next year. All right, let's start with the market action, where the sell-off is gathering pace. Sensex and Nifty declined for the 6th straight session, marking the longest losing streak in a year. More than 9 lakh crore rupees in the market capitalization was wiped out today. Nifty fell below the 25,000 mark, ending at the lowest level in nearly 2 months. Mid-caps saw sharper cuts, with the index losing 2%. And Surbhi Upadhyay is here with a market trap.
Well, the bulls had absolutely no respite. The week started off with a massive bear attack once again, and it was a day marked with severe volatility, with the Nifty seeing at least 4 waves of a bounce back from the lows, but every single one of those bounces was met with renewed selling pressure. So the final cut was, just around that 1% mark on the Nifty. But the real story was playing out on the Bank Nifty. In the last hour of trade, there was one point in time that the Bank Nifty touched the green territory, and within a matter of 15 minutes, it collapsed 1,000 points. That's the extent of the selling pressure that we've seen today. By the way, the day's low for the Nifty was 24,694. So the whole battle now is protecting the 24,700 mark. The story didn't just end with the large cap selling. It was all about the mid cap onslaught that was playing out today, because the broader market was really pummeled. The mid cap index was down about 2%. The small cap index losing about 2.7%. Let's complete the picture on banks. The major losers of the day included the names like SBI, Axis Bank, HDFC, IndusInd Banks. But beyond banks, you can't single out any one sector, because look at PSUs. A lot of stocks on the defense side, on the railway side, were down and out. So the CPSE index or the PSU index, these were down quite a bit. Not just that, the oil and gas space was under pressure as well. And the overall financials landscape beyond large banks, a lot of stocks like Federal, etc., were losing ground as the Q2 updates came through. In fact, that brings me to the mid-cap crushing that we've seen today. If you talk about major stocks that lost ground, RailTel, RVNL, SGVN, look at Sri Renuka losing about 4-5%, IRB Infra, Tata Power, and these stocks are falling on big volumes, cutting across lines. PSUs, private sector didn't matter. Ola Electric, Bajaj Housing Finance, IFL Securities losing 10%, capital market plays like BSE down 7%. Tough day. 3 important triggers to watch as we come back to trade tomorrow. Number 1, China is resuming the action after a week-long holiday, and we're expecting announcements on the fiscal stimulus side, so we'll watch out for that. Oil prices and the surge of 2% on Brent and Middle East developments will be in very sharp focus. And last but not the least, FPI selling. When will it end? That is the billion-dollar question for the Indian market right now.
Right, thank you. So before that, crude oil prices continue to climb after posting the steepest weekly rise in more than a year. Brent crude is hovering around the $80 mark. Geopolitical conflicts are keeping investors on edge, but fears of weakening demand has kept the prices in check to some extent. There are also concerns surrounding oversupply, with countries like Ghana and Libya accelerating their oil production. A siren blared outside Israeli Prime Minister Benjamin Netanyahu's Tel Aviv residence at 6:29 a.m. local time to to mark the moment when hundreds of Hamas militants entered Israeli soil last year and carried out a deadly massacre that left over 1,200 people dead. The October 7 attack, which took Israel by surprise, also triggered a new chapter in the Israel-Hamas conflict. A year from now, Israel's offensive against Hamas and the war in Gaza has widened to a larger West Asia conflict. Israeli missiles pounded Lebanese capital Beirut overnight. Israel claims to have hit Hezbollah's weapon storage. Israeli military also says it has hit many targets in Gaza, including a hospital that was allegedly used by Hamas fighters. Reports say that Hezbollah rockets struck Israel's third largest city, Haifa, injuring 5 people and causing significant damage to infrastructure. Israeli military says it is inspecting how the missiles were able to break through the air defense system.
A year ago, we suffered a terrible blow. For the past 12 months, we've been changing reality from end to end. The whole world is astounded at the blows you inflict on our enemies, and I salute you and tell you, you are the generation of victory. Together, we will fight, and together, we will win with God's help.
Meanwhile, many ceremonies are being hosted across Israel in the memory of the people who lost their lives in the Hamas attack last year. Families of hostages are gathering on streets with pictures of their loved ones. As things stand today, of the 251 people taken hostage by Hamas, 117 have been freed, while 64 continue to remain in captivity. Around 70 have been confirmed dead. The date also marks the beginning of Israel's offensive in Gaza, which has left 42,000 people dead, 96,000 injured, and over 1.9 million people displaced, as per Hamas's health ministry. The region's key infrastructure has been severely damaged, and the healthcare system is on the verge of collapse. Thousands across the world have also come out in protest to end the war in Gaza, which has now transformed into a West Asia conflict. And in a major leadership rejig, Suresh Narayanan will retire as Nestle India Chairman and Managing Director effective July 31st next year. Manish Tiwari, who earlier served as Amazon's India head, will succeed Narayanan. And IIM Bengaluru alumni, Tiwari also worked at Unilever for 2 decades. Mangalam now joins us with the details. Mangalam, what are you picking up?
Manish Tiwari, who's currently the country manager for Amazon India, is slated to succeed Suresh Narayanan as the MD of the company in August 2025, as Suresh Narayanan retires after his 26-year-long stint at Nestle itself. Manish, like I said, has been earlier the country manager of Amazon India, but before that also was with Unilever for over 20 years, has an MBA from IIM Bangalore, so does have the academic as well as the work-related experience to lead the company. But it's important because big shoes to fill out here. Suresh Narayanan joined Nestle India as the leader in August 2015 in the middle of the Maggi crisis. From then on, has led and grown the company through not only the Maggi crisis, but thereafter there was demonetization, GST transition, and the biggest of them all, COVID as well. And in his tenure, Suresh Narayanan has grown the Nestle company's revenue, annual revenue, by 150%. EBITDA has grown by over 300%. Margins have improved by 500 basis points, and the street has rewarded that as well. Nestle's market cap under Suresh Narayanan's leadership has grown by nearly 5 times. So big shoes for Manish to fill, but also a stellar career which Suresh Narayanan will be looking back at.
Right, thank you, Mangalam, for that. Ola founder Bhavish Aggarwal was involved in a heated war of words with stand-up comedian Kunal Kamra on X over the weekend. This after Aggarwal slammed a post by Kamra which questioned the company's after-sales service. Meanwhile, shares of Ola Electric Mobility clocked losses for the 3rd trading session in a row. The stock has now declined in 5 out of the last 6 trading sessions and has fallen over 40% from its post-listing peak. Hormaz is here with more. Hormaz, what's troubling the stock?
Tough day at the office for Ola Electric. In fact, the last few days have been tough as well. It's almost been 2 months since the company listed on the bourses at its IPO price of 76 rupees. Within a few days, the stock doubled from its IPO price, made a post-listing high of 157. But since then, the stock is down over 40% from those levels. Now, a bigger issue that is worrying the street is Ola's loss of market share from well over 50% in April. It's now down to 25% according to the Vahan data. And who is it losing market share to? To the incumbent incumbent players who are ramping up their presence in the EV segment, both Bajaj Auto and TVS Motors, who started off the month of April with a 12% market share and now commanding 20% market share each, and they are eating into Ola's presence in the EV space. Now, Ola has launched a lot of festive offers as well. It recently launched a Boss sale with discounts of up to 40,000 rupees, and the S1X scooter range is also starting from 49,999. Now, we spoke to Bhavish Agarwal last month about the business, and he mentioned that they are very close to breaking even on an EBITDA level, and the market share will go up as the penetration and distribution increases as well for Ola Electric. But a key issue that has been plaguing the company is the service issue, and HSBC in a note last month had highlighted that they had visited multiple Ola showrooms who were overwhelmed with service requests, and there is an acute shortage of skilled manpower and testing equipment in most of those sessions and most of those centers. And they said that this service issue is a key aspect that Ola will have to address before it launches its motorcycles. And this is an issue that has been part of many social media conversations as well. Yesterday there was a back and forth between stand-up comedian Kunal Kamra and the Ola Electric founder Bhavish Agarwal as well. So a lot of issues with regards to the service quality and showing up on the stock price as well, almost down 9% in today's trading session.
Right, thank you, Hormaz, for that. At least 5 people died and nearly 100 people have been hospitalized from extreme heat and suffocation at an Indian Air Force show in Chennai. The event was organized to commemorate the Indian Air Force's 92nd anniversary. The Tamil Nadu government has announced a compensation of 5 lakh rupees each to the families of the deceased. Jude Sanath reports from Marina Beach in Chennai.
Uneasy calm at Chennai's iconic Marina Beach this day after nearly 5 people died due to excess dehydration or heat stroke, and 100 others were taken ill after nearly 15 lakh people gathered at the beach behind me to watch the Indian Air Force's first air show in the city since 2005. The culprit really are these barricades in my background, which restricted movement of people who had gathered to watch the air show and thus limited their movement or access to facilities like shade or drinking water, even as a number of people who gathered here suffered from the excess heat of the city. In fact, if my camera could pan a little to my left, you'd see how the Marina Beach is, for want of a better term, an open auditorium of sorts, which meant that a large number of people could be gathered here in the attempt to break a world record of sorts. Number of people gathered in one place to watch an air show, even as those tents that you see in the far distance there was set up really for dignitaries and special guests of honor. This meant that by and large the crowd was exposed to the elements, which in this case was searing heat. Temperatures ranged between 33 to 36 degrees Celsius, even as humidity levels were well over 70%, which meant that this beach was really a hot pot of sorts as far as people who gathered here were concerned. The fact there were no facilities like drinking water or shade for onlookers meant that a number of them were taken ill, even as 5 of them have tragically succumbed to the heat itself.
Prime Minister Narendra Modi has met Maldivian President Muizu in New Delhi. The two leaders have agreed to elevate ties to a comprehensive economic and strategic partnership. Prime Minister Modi has said that India has always been the first responder for the Maldives in times of crisis. Muizu has invited the Prime Minister to visit his country next year to celebrate the 60th anniversary of diplomatic ties.
कुछ दिन पहले मालदीव में रुपे कार्ड लॉन्च किया गया है। आने वाले समय में भारत और मालदीव को यूपीआई से भी जोड़ने के लिए काम किया जाएगा।
I am thankful for the Indian government's decision to provide support in the form of 30 billion Indian rupees in addition to $400 million bilateral currency swap agreement, which will be instrumental in addressing the foreign exchange issues we are facing right now.
All right, it's time for a short break, but coming up next, Mumbai's first underground metro stretch from RA to Bandra Kurla complex opens for public. A special conversation with the head of Mumbai Metro Rail Corporation coming up on the other side. Stay tuned.
At these times on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18, an unending pursuit for excellence. A pioneer, a leader, a visionary, building a lasting legacy of credibility, consistency, and trust. Giving unparalleled access to global thought leaders and powering conversations that are shaping the new world order. Setting the highest standards through exemplary leadership. It is this unrivaled reputation for the most comprehensive coverage, actionable intelligence, and in-depth reporting that makes CNBC-TV18 India's #1 business news brand. Foreseeing change, growth, and transformation for over a quarter of a century. Trendsetters crafting innovative content formats. And award-winning business journalism. On air, online, on social media. As we embark upon 25 years of excellence, we invite you to be a part of our future. CNBC-TV18, your trusted partner and investment ally.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
A 12-month-long internship, training on the shop floor, and a monthly stipend of a minimum rupees 5,000. This is what you can now get through the Prime Minister's internship scheme, which aims to provide internships to 1 crore youth over the next 5 years.
Welcome back. Mumbai's first underground metro stretch from RA to Bandra Kurla complex has opened for the public. The head of Mumbai Metro Rail Corporation, Ashwini Bhide, has told CNBC-TV18 that the next stretch from BKC to Colaba will be ready by March next year. She spoke to Lata Venkatesh, who started off by asking her about the delay in completing the project.
No, I don't think it was deliberate, though we had planned the commissioning last December itself, but it took time. Because even if the broad infrastructure is ready, the testing and commissioning takes a lot of time, and it took more time in underground metro because there are multiple layers of system which need to be tested, and we need to reach a certain stage of automation, and that is why it took us longer time. And one good thing happened that we completed the major monsoon phase also, so it coincided. But there was in fact earlier. Had we commissioned it, it would have been better for us.
Oh, better for you. No, but what were the teething problems in the last 8 weeks? I mean, we were given to understand September and then October 1st, and now it is October 7th. Okay, not a big delay, but looks like There were teething problems?
No teething problems. There is a process involved because before any section is commissioned, it needs to undergo the safety checking. So it is done by Commissioner of Metro Rail Safety, and it is divided into two phases. One is the testing for the rolling stock, that is the train, and then the main section. So first we submitted our application for trains. It took us some time, and we ourselves delayed the application for main line because we were to complete certain things. So as I said, the last integrated testing, it took us some time, and even some of the tests, we had not been able to complete it. So there we have kept the manual kind of arrangement, and that is the reason. So project involves too much of complicated technical work, so it took us that time.
Is the next part, BKC to Colaba, can you give us a timeline, and is it less likely to be delayed?
No, we are thinking of doing it by March 2025 because that work is also more than 90% complete. There are only a few pockets in between which started little late, which were more complicated, like the Girgaon station or Acharya Atre Chowk station in Worli, where because of the lot of local issues, the work there started late than the other stations. So there we are still working on completing those stations. So those are the only pain points as of today. But we are trying to wind them up, and March 25 is our target date. But as I said, when I set the target, it may go a couple of months more, because even if we complete the entire work, the testing takes some time. So I'm giving a time frame of say March to May 2025. Within that, it should be completed.
World Bank arm International Finance Corporation has joined hands with Axis Bank to launch its Blue Loan in the India market. IFC will provide $500 million to the lender to develop blue finance market in the country. Managing Director Makhtar Diop, in a conversation with Shireen Bhan, said that sky is the limit when it comes to blue financing. That's not all. IFC also has a Bollywood twist to its India plan.
Last year, we launched a guide on blue bonds. We did it in collaboration with the UNEP, which is an environmental program.
Yes.
And we launched it at the COP. And it was an important element, because it allows now company who wants to issue blue bond to have a guideline, to know how to do it, what is blue, what is not blue. And that's what we use, that knowledge, in India, to launch the first blue bond, which should be merged a little bit with green bond for Axis, and we are very proud of it, because if the market reacts positively to it, and it seems to be the case, we will have a lot of a new asset class that can be developed, a new thematic bonds that would be. The flow will be 5 billion a year. Okay, that's what 5-6 billion. And my team is looking at me with big eyes, saying, well, what is he saying? So the flow will be that. But I think that if we think about mobilization, we can have multiple of that number. The world is changing, and there are some things which were not part of the world. We are not talking to each other, and I think that it's important that they talk to each other because of job creation, because of social impact, and so forth. And I'm a passionate of art, so I can see the value personally of it.
And before we wrap, US Republican presidential candidate Donald Trump invited billionaire Elon Musk to join him on stage in a campaign rally in Pennsylvania. The former president returned to the venue where he was nearly assassinated in July. Elon Musk, who has been donating millions to the Trump campaign, urged the crowd to vote for Trump to save democracy.
President Trump must win to preserve the Constitution. He must win to preserve democracy in America. This is a must-win situation. Must win. So I have one ask for everyone in the audience, everyone who watches this video, everyone in the live stream. This one request. It's very important. Register to vote.
And with that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.
first phase, the government aims to give internships to 1,25,000 youth in financial year 2025. The government is likely to spend rupees 800 crores on this pilot project, which has been launched. More than 100 companies have already been onboarded on the government portal to offer internships. Government officials say that more than 1,000 internship offers have already been generated from companies like Mahindra Group, Max Life and Alembic Pharma. The Mahindra Group, which was the first company to load internship profiles on the PM internship portal, said that the group will offer 2,100 internships across businesses in the first phase. The website of the Prime Minister's internship scheme mentions names of top 500 companies in terms of CSR spends as partner companies. But many of the companies are still in the process of chalking out plans to hire interns through the government portal. Registration for internships will be open on the website from the 12th of October to the 25th of October this year. Selected candidates will be notified between the 27th of October and the 7th of November. Internship offers will be sent out by companies between 8th of November and the 15th of November, with the first batch of interns set to commence their jobs on the 2nd of December 2024. Interns will receive a monthly stipend of rupees 5,000, with 4,500 provided by the government and 500 rupees contributed by the company from CSR funds. A one-time grant of rupees 6,000 for incidental expenses will also be provided by the Ministry of Corporate Affairs when interns join their workplace. Every company can decide to pay more than the minimum amount as well. Interns will be insured under government schemes like PM Jeevan Jyoti Bima Yojana and PM Suraksha Bima Yojana, with the government covering the premium costs. Partner companies may offer additional accidental insurance cover if they so want. So, who is eligible? Youth between the age group of 21 and 24 are eligible to apply, provided they are Indian nationals and not employed in a full-time job or engaged in full-time education. The scheme is open to candidates who have completed their high school or hold degrees such as BA, BSc, BCom, BCA and BBA, also B Pharma, various diplomas mentioned on the PM portal as well. However, graduates from top institutions like IITs, IIMs and those holding higher qualifications like MBA, CA, CMA and MBBS are ineligible. No one in the candidate's family should have an annual income of more than 8 lakh rupees per annum, and no one in the family should have a government job either. The government aims to offer internships across manufacturing, metals and mining, pharmaceuticals.
CNBC-TV18 is Adani Ports, and we're here to visit the facilities of Welspun World. We'll get an exclusive chat with Mr. BK Goenka to find out his vision for the group for the next few years. Well, Mr. Goenka, you know, in the 1980s, you put in an investment of around 20 lakh. And today, you're heading the group's market capitalization is at around 45,000 crore rupees. Well, could you tell us, take us through the journey, and what's the vision you have for the company from here on?
So Nigel, last almost 4 decades has been very, very exciting. And our country has given us many opportunities. As you see, Welspun name, we started as a textile company.
Yes.
And we want to spin well and do well. And when we started, it was a dream to become one of the largest companies in home textile. And I'm today happy to tell you that in less than 4 decades, we are globally, largest company in towels and one of the largest in home textile.
Right.
And all this was possible primarily, it's a vision was one thing, but I think today we have 40,000 people behind us, Welspunite, who's working day in, day out across the globe. And that is the reason where we are today. And when we see our journey, when we started, I just want to give you one small example. Welspun is one part. At the end, we are representing our country called India. And when we started exporting, India was not known for the quality, delivery, commitment on the price. And I can, remember those days that how critical and how difficult was those days when you're exporting the towels or the bedsheet from India.
Indeed.
And it was like you are the brand ambassador for the country. And I think that is where our journey started, and where we are today is because of all our commitment today.
Well, Mr. Goenka, you seem quite satisfied with how the last 4 decades have gone. But what the market wants to understand is, what is your vision ahead? Because you seem to be hitting the right spots. But what kind of delivery are you looking at in terms of revenue for the group, in terms of market capitalization? Where do you see the group headed, give and take all the investments that you've made across textiles to piping to infrastructure as well?
So 3 years back, Nigel, we had a visioning exercise at a group level, which we do every 5 years, what we have to do next 5 years. And we saw that we have been so much concentrating on export market, global market, and when the whole world is looking at towards India, and we came out with a new coin that Har Ghar Se Har Dil Tak Well Spun. And when we're in so many products, so many different activities, and India is a right market.
Yes.
And we said that we want to be in every heart in India with every Indian, and can we touch 101.4 billion people heart somewhere or the other when we are making well-spun products across our different range, different companies, what we are doing. So we are very clear that we came out with a clear vision of 3G, the growth with governance,
right,
and with the green. When I say green, is sustainability. So we are very clear that how we can become 3x from here, and that growth is only possible when you have right governance and right kind of sustainable effort across around you, whatever you're doing.
I mean, I'll press you a little bit on the governance as well as on the green aspect, later on. But tell us about growth. When you talk about going 3x, what should the group revenues look like? Currently, you're around 35,000-40,000 crores odd in terms of revenues, while the group market capitalization is roughly around 45,000 crores. So where does that number go in the next 2 years from here?
So market capitalization is the outcome of whatever we are doing. Let me talk about the the growth plans. We have a very clear roadmap for next 3 to 5 years that how we can become from here to 3x.
Okay.
How we can become a 1 lakh crore group at the top level revenues.
Yes.
And we have a plan for our Wellspun Corp, where we have a DI pipe, we have a large diameter pipe, we have a expansion in Saudi, we have expansion in USA, we are doing expansion in India.
Right.
And plus, we have recently acquired last year was Sensex, which is a huge growth plan. And we all know that how the overall building material is. And Sensex is a well-known name in the country. I mean, when you talk of a storage tank or water tank, you say Sensex leke aaye.
Indeed.
So Sensex is a very well, it's a synonymous with water tank.
Lovely. So we've got that in terms of a revenue. But I'll have to push you about the market capitalization. I'll tell you why. Because a promoter is normally the best analyst of his own companies. So given that currently you're at around 45,000 crores, if you can get to that goal of tripling your revenues from year on in the next few years, where do you see the group market capitalization headed? Say in 3 years from now, can you see it also hit the 1 lakh crore in terms of market capitalization?
See, as far as market cap is, as I said, it's all outcome of what we are doing. We are going to do whatever is the right thing for the shareholder, unlocking the shareholder value.
Right.
Be it through the governance, be it through the right kind of expansion, be it merging or demerging or selling or buying, whatever is to be done, which can create the values for the stakeholders and shareholders across the group. And when we are talking of 3x of top line, I think automatically it has to reflect somewhere in the market cap.
Got that. Governance. That's another point that you made. And that's something that your shareholders and investors, they're looking forward to. Because there is this perception, about various companies. And in a bull run, everyone does well. However, when the markets get a little bit tepid, various groups are left behind. So could you tell us what have you done with regard to governance or to put that perception out that you all mean business, you're going to be rewarding your shareholders, and you're here to do India proud?
So governance is a journey. It's not a one-day story, and it's we have some kind of a 3 decades history behind us. And what we want to do going forward is that each company is independent. Each company is run by independent directors, which are responsible for the growth as well as the right kind of in creating the trust. And moreover, I think it's important that each company is headed by a professional people, so that it's a clear-cut path that how the growth will coming in the future with the right kind of people around you, because ultimately it is people who matters.
Got it. And to get to this revenue growth targets that you're talking about, you'll have to put down money, right? And
people get a little bit skeptical when a promoter comes in there, puts in big capex. So what's the big capex plan you've lined up for the next few years?
So as you know, I mean, overall, if you see the capex plan, what we have already announced in various companies at a group level, we are doing around 10 to 12,000 crores in our home textile, in our pipe businesses, in our Welspun Corp. And as far as Welspun Enterprises, infra companies, is a different thing, which is like a projects. So expansion plan is primarily in these two companies, which is going to taking the shape in next 2 to 3 years. And from here, how can we, Welspun Corp can have a 3x revenue? How can we, the EBITDA can be become double from here? So that's what our plan is for next 2 to 3 years.
And when you have 10 to 12,000 crores of capex that's lined up, what is the current net debt number or the net debt to EBITDA number, and where do you see that number headed? You must be having a threshold, right?
Yeah, we have a very clear policy within the group about the debt equity, about the ratios, about EBITDA to debt. And when you see today at a group level, we have a EBITDA of around 4,000 crore plus, and our debt is less than 2,000 crore. So it's a 0.5 to the EBITDA. And I think maximum in the next 1 or 2 years, it can go to 1:1, which is, I think we are very comfortable in times to come.
Well, Mr. Goenka, you briefly mentioned about Welspun Corp, and that's something that the street is quite bullish on. Now, you just won an order in the United States, and that was a whopping 2,400 crores. But what the market believes is this is just the start, and there is more to come. There could be $1 billion of order inflow in this calendar year itself. Do you concur?
See, I want to tell you one thing, that we are one of the very formidable force in when the US market comes, when the Welspun comes. We are one of the major players in the oil and gas, transportation of oil and gas pipes when it comes. So looking to today,